watching India Market Close here at NDTV Profit. I am Mahima Vachajani. With me is Neeraj Shah and Heer Ardaria. Let's take a quick look as to how the markets are doing. Well, in terms of where the benchmark stands, the Nifty 50 under pressure, continues to be under pressure, down by about 0.3 odd percent, below the 25,300 levels, of course, trading at around 25,260 levels. The Bank Nifty also in the red now, almost flat as we speak, and below the 55,500 levels as well. Let's try to pull up the Nifty 50 heat map, because that will tell us a picture as to what's putting pressure on the Nifty, and it's majorly the IT companies that are putting pressure on the overall Nifty contribution. Tech Mahindra, TCS, Infosys, Wipro, all counters in the red and seeing cuts of over 3 odd percent each in terms of the recent update that has come in with regards to where H1B visa stands. But something that's keeping the Nifty in check is the Adani Group of companies. Adani Entertainment up 4.6%, Adani Port up 2%. Something like an Eternal is also doing well in trade today, up 1.7%, followed by something like a Bajaj Auto, Hero MotoCorp. So auto names also fairly doing well in trade today. Let's try to pull up the sectoral heat map and see as to how sectors are faring. In terms of the top sectoral gainer today, that's the Nifty Energy up 1%, followed by something like the Nifty Media, Nifty Metal, Nifty Realty also doing fairly well in trade today. Nifty Consumption seeing gains of about 0.5 odd percent, and Nifty Oil and Gas also up by about 0.3 odd percent, but something that's under pressure. Nifty IT down by about 3 odd percent now, probably at its day's low point. Then Nifty Pharma down 1%, Nifty Healthcare also down by about 1 odd percent, Nifty Defense also down by about 0.5 odd percent. Let's try to pull up the advanced decline ratio and see as to how the broader end of spectrum is looking like. And there you go. It's like a tug of war situation here, because now we have almost 1,400 declines versus that of 950 odd advances. So of course the market is skewed more towards the sellers today. But Neeraj, with regards to where the broader markets stand, even the broader markets continue to be under pressure.
Yeah, and you know, not surprising that the IT names are leading the pack out there, Mahima. So I mean, if you look at just broadly the stocks that are coming off at the broader end of the spectrum too, Zensar, Mphasis, LTI, Mindtree, Coforge, Persistent. These are the ones which have cracked the most. Inventor's Knowledge Solutions down about 4%. So everything pertaining to that bucket has looked weak today. There is weakness in some of the life sciences companies as well. SciLife, Concord Bio, and some CDMO names have a bit of pressure in the session today. So that is an issue. What has had a stupendous move and rally and continues aside of the Adani Group stocks are 3 names. One of them is Anant Raj, another 6% higher at 678. This whole data center related benefits that have come in really helping Anant Raj today and over the last few days. So bear that in mind. There is strength in Hindustan Copper, 5.5% yet again. After the update that they've given, the stock has not looked back. So quite stunning really. And some of the shipping counters, SCI and a few other shipbuilding counters as well, are doing rather well for themselves. And Hiral, difficult to, except for IT, difficult to really spot big sore losers, just that the tech index has stayed 3% lower.
Absolutely, very difficult to really spot those kind of losers. But you know, few of the other stocks which are interesting is the entire Adani Group of companies, as Mahima was mentioning, all of them firing on, you know, the same engine power, I would say. And apart from that, few of the other names which are buzzing in trade, Borosil Renewables, stock is up 10 to 11%. We did speak to the management as well on the back of GST benefits. So that's an interesting one to watch out for. But apart from that, Allovius is another one which is seeing some bit of pressure. But as Neeraj is mentioning, no major downtick except the IT index is what you're seeing. And a good boost coming in terms of where GST 2.0 goes. But let's also get in. Gaurav Bissa, Senior Vice President at Incred Equities. Gaurav, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. Seeing the way the markets are pretty range bound, if you have to look at Nifty 50 as well, 100 to 120 points range is what you've seen since morning to now. What should that strategy look like? Because major pressure coming in from IT, some bit of support that you've seen over the last couple of trading sessions from Bank Nifty as well. So Nifty and Bank Nifty, the strategy at this hour.
Hi, good afternoon to you and your viewers, and thank you for inviting me to the show. As far as indices are concerned, there were two interesting readings at the higher levels. One, if you connect the high of 26,300, which we made months back, and the more recent one that we made around 25,600 before going back towards 24,400. If you connect those two high points, and there's a falling trend line, the resistance of which comes around 25,500. Interestingly, if you look at the option chain, this is the zone where we are seeing active call writing happening, which is increasing the confidence of people that Nifty might not be getting it easy at 25,500. On the other hand, there's a bearish harmonic Gartley pattern which got triggered at 24,420, 450 spot. And the combination of these two, three factors is what I think resulted in some amount of profit booking, of course, aided by the fall in Nifty IT index. So the strategy is simple for now. I would not be too keen to jump the bandwagon and go ahead and buy the indices right away. I would recommend creating fresh shorts at any rise towards 25,400, keeping stop loss of 110 points and playing for 25,100 zone. So it's a good buy on dips candidate, but the risk reward is more skewed towards selling instead of buying at this juncture. And same goes for Bank Nifty. So if you see Bank Nifty, though it has not seen tremendous correction as such, it has been an underperformer. And when the markets are dull, you don't want to be having a dull index or a dull stock in a portfolio. So in my opinion, between Nifty and Bank Nifty, opportunities rise more for Nifty as compared to Bank Nifty.
What about your picks for the day?
Yeah, so the first recommendation would be buy on Amber. This is a stock which has been a clear outperformer in the last year and a half. It's been consolidating now. It has seen a bullish triangle, ascending triangle breakout. Volume participation has been good. It's been holding the breakout levels quite well. One can keep stop loss of 7850, buy for 9,000. Second is a buy on JSW Infra, another stock which has seen a very strong and stupendous upside. And since then, it has been more or less time correcting. It's given a breakout from a falling trend line pattern. Also, it has given a small box breakout with volumes, making it quite interesting for 370. So one can buy JSW Infra having stop losses placed at 320.
Okay, all right. Now moving on to our stock of the day segment, and we have Hindustan Copper today. The stock is up over 5% as we speak in trade, and Vansh joins us with all the details as to why the stock is buzzing. Vansh, what are you picking up?
Well, yes, so the stock is already up 25% in the past 1 month. Now let's understand the reasons behind it. Now the company the Rakha mine has the Rakha mine lease deed has been executed by the company. Now the lease deed has been extended for a period of about 20 odd years, and the extension of the mining lease was received back in 8 October 2024. However, the final execution for the same was awaited, which has been completed right now. Also, if we talk about the importance of this deed, now the Rakha mine will be starting by Q4 FY26, and it will have a capacity of 3 million tons. And also, if we talk about the importance for the company, now this will be a crucial step for the restarting for restarting the Rakha mine as well. Now, also if we talk about the capacity expansion, now the company's this deed aligns with the company's capacity expansion to 12 million tons from the to 12 million tons by FY30 from the current 3.5 million tons in FY25 as well. Also, if we talk about the capex, now the company is planning a capex of about 2,000 odd crores in the next 5 to 6 years from the current 350 odd crores in FY25 as well. Now, if I talk about the portfolio expansion, now the company is also seeking MOUs with Indian PSUs for expanding their mining portfolio. In fact, they have signed an MOU with Oil India. Now, this is again for the collaboration and exploration of critical and strategic minerals as well. Also, if we talk about the company is also looking to acquire new copper deposits in India and abroad as well. So this is how the overall picture is panning out for the Hindustan Copper as well.
For that one, and it is interesting because Hindustan Copper, since they made that announcement, as one rightly said, or the presentation, has not looked back. And Gaurav, before we thank you, good afternoon, of course, and Hindustan Copper is one. But metals at large, are they showing a structural shift? Because it seems that hard assets across the world are doing well.
That's an interesting question, and I think one will have to change the lens if one is playing the metal. So let us first look at how the metal overall or the commodities index overall are doing. So if you look at aluminum, USD aluminum. So if you look at the charts, it's coming out of a 2.5 year consolidation. If you look at copper, it's found a very strong base at 3.8, 3.9 in terms of dollar. It went till 5.1, and then we had some tweets coming from US President, which resulted in the commodity plummeting towards 4.2, 4.3 again. So in my opinion, the commodities themselves are doing quite well. And coming back, yes, if you see Nifty Metal Index now, and if you try to correlate on weekly charts itself, we are seeing a consolidation breakout sort of happening, and some resistances ahead. I would say a close about 10,200, 10,300 Nifty Metal Index on weekly chart that will pave the way for fresh leg of upside. So in my opinion, Nifty Commodities Index, Metal Index has been doing well. BSE Commodity Index has been doing well. Individual commodities on foreign exchanges, foreign bourses have been doing quite well. And coming to your question about Hindustan Copper, so it was a pure play Hindustan Copper for us. We were quite bullish on copper as a commodity, and the only logical name that came to mind was Hindustan Copper. So as a disclaimer, we had recommended Hindustan Copper around 200, 210 to our clients somewhere in Feb, March. And just today itself, we have recommended booking partial profits with a gain of 40, 45%. So in my opinion, one can still hold positional, but if somebody wants to play a trade, I think it's run up a lot, as one of your colleague mentioned. It's moved up 25% in a week or so. So when a high beta stock moves up so in such a rapid fashion, the risk reward gets distorted. So on that premise, I would say it's a buy on dips candidate. The structure is very strong, higher tops, higher bottom on weekly charts, breakout retest on weekly charts, EW counts are extremely strong. So in my opinion, this stock can do levels of 400, which is our final target. And any dip in the stock can be used for a positional trade, not for a day trading or 1 or 2 day trading.
For 100, that's very interesting, and that's optimism around metals for sure. Okay, Gaurav, we'll take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. That's the derivative and the technical view. Let's welcome in a fundamental view, Deepak Shenoy, CEO of Capital Mind Mutual Fund, with us on the show. Deepak, always good talking to you. No different today. Thanks for taking the time out. Neeraj here. Good afternoon. Deepak, I want to take off where I left off with Gaurav Bisa, and which is whether this is whether you look at markets in, for example, as Manish Chokhani told us, right, the 10-year cycles, 1990 was something, 2000 was something, 2010 onwards, we've seen US markets do well, and half of this current decade has been dominated by the tech giants, right? Does this change now in that hard assets like gold, silver, emerging markets, etc., come to the fore? How do you think about it?
So I doubt, Neeraj, that basically commodity layers will come and take over the equity market universe in that sense. I think it's going to be more technology, just different ones possibly, but we are going to get more technology getting more valued. So it would be AI, it could be robotics, it could be layers that involve all of these new technologies. If it's 3D printing, that's one layer, or if it's self-driven cars and electric vehicles, that's another layer. But I think these are going to be the determinators of the future. It's not going to go back into I make better steel than you and therefore I should be valued. I doubt the metal cycle comes back and takes over that equity universe. But of course, they'll have cycles of their own. So there'll be time to buy metals, there'll be time to sell them, there'll be time to buy gold and sell them. But I don't think technology will get upended by this. So if I look at the next 10 years, whether it's in India or abroad, I think it's technology and technology-led companies that will make the biggest returns because they have the biggest scope of growth. Metals, FMCG and all of the other things will probably have only incremental, maybe 5 or 10% per year of growth. But I really think technology has 30, 40, 50% possibilities of growth in particular domains. And that's why I think the future will still belong to technology.
Interesting, Deepak. The timing is absolutely right when you talk about technology companies as well, because the kind of correction that you're seeing in today's session on the back of the H-1B visa fee hike that has come in, a pretty mixed view that's come in from brokerages as well. If you're saying that the upside is absolutely here to stay, would you be a buyer of IT companies at current levels? And would it be mid-cap IT or large-cap IT?
So I honestly think the IT companies are not the best benefits of the technology revolution.
Okay.
They are at best players who kind of support this ecosystem from the outside, but they don't necessarily own the benefits of this ecosystem. So whether it is, if you look at the new age startups that have come in that are using technology to benefit their businesses, they are actually likely to be better beneficiaries because they can use AI in their space. What the IT businesses, what we call IT businesses today, are typically players for hire, right? So you're hiring them to do something that will benefit you. So you will give them some money, and that money does not scale meaningfully with as technology gets better and better. It's not like I can get more and more margins. Take, for instance, the space in fintech. There are amazing layers of operating margins that can be earned in the longer term using finance to leverage your business. But it's not true for a person that's just an IT player that's providing services in this area. At best, you'll scale, in terms of either adding a layer of manpower on top or a small layer of technology on top. So I don't think the IT companies are the beneficiaries of this technology revolution. It will be the likes of Google, perhaps the likes of players like that in India if they were to list. Some of them are unlisted right now, but players using technology, whether it is in the payment space, whether it is in electric vehicle space, again, small players here in India right now, but they could grow. Technology services.
What would the likes look like in terms of the Indian markets from the listed space? Maybe you've not invested in them, but the kind of names one should actually start looking at.
Yeah, no, so I would say I won't take any single names right now because we're not allowed to, talk about it because they're part of our investment universe as a mutual fund. But in generally, I think there's travel technology, that's one layer. People who can benefit a lot from that. Maybe it's a vertical niche there. There's healthcare technology in healthcare itself that could dramatically increase. Again, there are players that are doing something in the electric vehicle space that are already established in the ICE space also. They're moving into electric technology. There are players in the battery technology that are making their way into lithium ion. There are players in perhaps some of the other layers here in the AI space. Again, many of them are public listed companies that are making small investments, whether it's AI or data centers. But I think data centers, again, it's an ancillary space. It's not primarily AI. So there will be some players who will benefit primarily from this. There will be some ancillary players downstream that will benefit. But I think that is the layer that you'll see technology evolve into, how they use technology to manage their spaces, perhaps own some of the technology as well that they can license out to other players. Those are the ones that will benefit. The IT players themselves seem uninterested for the most part in building product plays. So that's fine. You can always say that, there has to be somebody who provides services on top. So you'll rate them like a service player. You're not going to give them the 100 times earnings and expect that earnings growth to be that maximum. But yeah, the H1B issue is going to affect for sure a lot of the IT companies. But I think in the long term, it will benefit India as an economy. So it may not benefit those particular players, but it will benefit India as an economy because more people will choose to perhaps stay back here. And hopefully, as our education system improves and evolves, that there will be more of of the research that's being done here itself, and then we'll see more benefits downstream. But the IT players themselves, I don't think they'll benefit too much.
Mr. Chinoy, hi, Mahima also joining in. Just want to understand, there's a lot of initiatives that have been taken in order to boost consumption. We have GST 2.0 kicking in today, festivities also kicking in today, plus there have been tax cuts, rate cuts, etc. And Prime Minister Narendra Modi yesterday also talked about the Swadeshi consumption of things. If you were to play the consumption theme, how would you play it? Would it be via staples, hotels, retail, QSRs? What would it be like, or even autos for that matter?
So I think hotels still have a lot more to go in terms of scale and footprint expansion, especially if interest rates were to come down. Hopefully, they will be able to do significant amount of capex to grow the revenue footprint across. There's some in the travel space, whether it is in the direct in the transportation industry itself or in technology players that are providing technology to the transportation network, or in general, the consumption. I think the biggest beneficiary now is auto, because auto will directly see nearly 10% cut in effective end user prices. The lowest interest is in staples, because a 10 rupee packet of biscuits is not going to cost you 9 rupees 50 paisa, not even a microscopic chance. Because at that layer, people don't reduce prices by 5% simply because the change that is required to be given, where people don't use UPI, for instance, or use cash to pay, is just too painful to have that conversation. So the retail prices remain 10 rupees. You get a little more biscuit, a little more shampoo, or a little more soap, grammage of soap, but the prices don't change. So there's not that much meaningful benefit for end users in that, small-ish soaps and, things space, because I don't think the prices will come down meaningfully there. At the higher end, they will. At cars, they will. At wholesale quantities of a lot of these goods, I think they will be. So there will be downstream impacts to industry. And from consumption perspective, I think I'd play auto first. I'd play premium consumption first, because there I think you'll see a lot more offerings. You'll see travel, tourism, healthcare. I think all of these consumption elements will go up reasonably well. But the GST will add a fillip to perhaps travel and transportation, perhaps to the auto industry first, and then it will kind of meaningfully move downstream. Remember, there's an income tax cut also at the premium level. There's about 1 lakh rupees more. Everyone who's earning more than 12 lakh rupees a year is actually getting in terms of lower taxation from this year onwards. That's ongoing. So hopefully that will also kind of eat into consumption. But again, premium consumption is where it's the maximum. Staples is not so much.
Okay. Deepak, the final question today is I mean, and you would have spoken about the answers to the previous questions, but the one key question is whether the time and the price correction due to relatively lower activity in the capex linked themes, has that taken care of the valuation quote unquote bubble that had gotten formed maybe in 2024, and does this give an opportunity to analyze and invest into some of those capex related themes? Because yes, the flavor of FY26 is consumption, but at some point of time, for job growth and other factors, capex will have to come into play, right?
I think capex is happening, Neeraj. It's just not happening where you think it is supposed to happen. Right. So you're not expanding capacities of coal mines, or, that was where the capex used to happen earlier. I'll build more steel plants, so I'll do another steel plant capex and all that. But you see the capex that's happening in the semiconductor industry, that is massive compared to what it was. Defense. Again, defense companies doing their own capex to expand, both inorganic and organic. I think that has made, that is happening right now at a magnificent scale. So you're seeing the people who are actually doing the capex, their valuations are growing tremendously. In the semiconductor industry, defense industry, ports, a lot of that is kind of leading into downstream. Even hospitals, wherever companies are doing hospital expansions, or have done in the last 3 or 4 years, we are seeing their valuations increase quite a bit. So the bubble in some of the spaces, for instance, in consumer staples, there has been a bubble for nearly 10 years now. And valuations have gotten even more expensive. I think that deserves to break, because there's absolutely no chance of meaningful growth in that space. I would say consumer durables, even though they have gone up, there's a tremendous scope increase. So there's not a valuation bubble there. Valuations are high, but I think growth can come and make a difference over there. In defense and in semiconductors, valuations are skyrocketingly high, but there's also a tremendous scope in terms of growth, because they could grow 100, 200% from here, almost year on year for the next 3 or 4 years. So I think their valuations should be looked at a sectoral level. At an industry level, we are still very, very at a Nifty level or a Nifty small cap level, we're still tremendously overvalued. And I would say a large part of it is because of the staples and some of the, the metal companies and all getting valued at 30, 40 times earnings. That's ridiculous. We absolutely shouldn't be paying those valuations. at the top of the cycle. At the top of the cycle, P should be single digits for the most part. So we're overpaying for a lot of boring sectors and possibly paying high for growing sectors that are, I mean, for sectors that are actually doing really well. But I think the growth will make sense in those sectors.
Absolutely, and that makes complete sense. I mean, just last week we saw at what valuations Urban Company got listed, and that's exactly what Mr. Sinha was talking about. Mr. Sinha, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit.
Thank you, cheers, and thanks for having me.
Thank you so much. Well, Mr. Sinha was also mentioning that how auto sector is getting a boost from the new GST reforms, and NDTV Profit has been on ground and they've been bringing you all the updates. Now, my colleague Danish Anand is at a car showroom in New Delhi checking up on what is the mood at the ground level. Have a look.
Like PM Modi mentioned on Sunday, the GST Bachat Utsav has begun, and right now I'm present at Bagga Link Hyundai here in the national capital. First of all, I'd like to show you that how this dealership is ready to welcome all the prospective car buyers, and as soon as you step inside this dealership, there will be a feeling of festivities all around. And you can see today is the first day of the Navratra. The Mata's statue has been positioned here. Besides this, you can see all the walls and the roof of this dealership is completely decked up in festivities. But if you were waiting to buy a car from a very long time, then this is the best opportunity for you to buy a car, as Hyundai has announced massive discounts on its entire portfolio of cars, and this discount is in the range from 70,000 to almost 2 lakh rupees. But to talk more about it, that how the dealerships are preparing for the sudden surge, we have been joined by Mr. Zubair Khan, who's the senior sales manager at this dealership. So many thanks for speaking to NDTV Profit.
Yeah.
First of all, please tell us that how are you preparing to deliver so many cars to the buyers?
First of all, happy Navratras to all viewers, and a special thank you for Mr. Narendra Modi ji, who has been taken the step to reduce GST. That will definitely help to increase our business. You know, people are waiting since last almost say around 21 days in Shraddh period also, for waiting for this auspicious day. So it will definitely increase our business, and you see the decoration and everything is being done, and people are coming here for taking delivery. We have updated the booking status since last morning. Customers are coming here to waiting on this auspicious day. People are taking delivery. So everything is being done, and you see the whole showroom is full of the customers.
So how many cars are you expected to deliver today?
Today we are expecting around 15 to 20 deliveries. All it's been lined up, and just we will free the customer in next 15 minutes.
We'll also try speaking to a few customers, but before that, I would like to tell you that there is a good over and above discount that the company is offering. It is not just a GST cut that Hyundai is passing on to its customers, but the company has gone above and beyond that GST rate cut, and they're also giving a festive season discount.
That's an interesting take coming in. Thank you, Danish, for that festive season discount plus the GST cut benefits. Lots more pouring in for all the new buyers that will start trickling in from the 22nd of September, which is today. We also had a conversation with Rakesh Sharma, ED of Bajaj Auto, on how they are looking at the GST cuts and whether the downtick that they've seen in the domestic market will reverse in FY26, which is the remainder. Let's listen in.
Since the last 1 week, when we've seen the news of GST percolate down to the customers in urban areas and rural areas, there has been a very positive response. There have been a lot of uptick in inquiries and people calling up showrooms, visiting showrooms for their eventual purchase during the auspicious period, which commences from today, the Navratris, and then of course goes on depending on the state into Diwali and slightly beyond Diwali. So it has had a very positive impact. And we are expecting this to be, a point of inflection. Because if I may remind you, the industry actually unexpectedly was not doing so well, the motorcycle industry, because its growth on year-to-date basis is actually tad negative, -1% or so if you look at the Vahan registration data. Last year it closed at about 6% growth, which is FY25 motorcycle industry grew at 6%. But there was a little bit of a tumble, particularly in June, July, and also in August, bringing the industry growth from April to August to -1. So a couple of growth inhibitors which we felt were there, and these were, the inflation, which was reducing the disposable surplus to our kind of customers, and also a little bit of restraint on the side of retail finance companies in response to a disposable surplus getting weakened. Now, both these growth inhibitors, so to say, will get mitigated to a large extent by the GST cut.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Back with India Market Close right here on NDTV Profit. Now, it's 2:35. Let's get in our guests on the show to try and understand what to do in terms of trade. We already had Gaurav Bissa speak constructively about specific pockets. I wonder if Akshay Bhagwat, who is Senior VP JM Financial, mirrors that sentiment. Akshay, good afternoon and thanks for joining in. It almost seemed until Friday that it's a buy the dip market, probably still is. But both Friday and today, we've gotten a bit of a dip, right? Is this a dip that you want to buy, or do you believe that the dip should be a bit more before you go out and initiate longs?
Good afternoon. Well, yes, it continues to be a buy on dip market, and it was a bit overstretched the point where it was trading last Friday. And the cool-off definitely gives us good opportunities to look for longs. If you look at the levels of 25,150 to 25,200 zone, that's an immediate support which should work for the very short-term trades. I think there should be a short-term pullback picking up once again. Tomorrow is the weekly expiry for the Nifty index, and in all due regard, there can be some volatility on the expiry day. So I'm looking at supports of 25,100 to 150 zone where I'm expecting a pullback once again, and in all due course 25,500 and 25,650 would be the two upside targets one can work with.
Okay. The other thing, Akshay, is if IT is not gonna be the participant today, Reliance Industries is starting to correct a bit as well. What takes the index higher? Is it Bank Nifty? Is it something else? And what are your specific recommendations for this afternoon?
Yes, so sector specific, if I were to take a trade and I'm talking about index rebounding once again, then Bank Nifty has to come to the rescue. In the prior rally which we saw in the bank index, it was primarily supported by the PSU banks, and somewhere the private banks have to get to the rescue act if Bank Nifty were to move up from here, because most of the PSU stocks, banks have already been overstretched on the short-term technical parameters. So I think if you look at the technical setup of ICICI Bank or an HDFC Bank or even an IndusInd Bank which has been beaten down. So these stocks have good weightages in the bank index, and I believe that they should come to or put up a rescue act for Bank Nifty to recover once again. Stock specific recommendations which I have on today's show, both on the buy side. The first trade is in Ambuja Cement, and with the Adani Group shooting up today, I think Ambuja Cement too is a beneficiary of this move. The momentum is catching up well. Cement stocks are also gaining good traction as we see on an intraday front, and I'm looking forward for upside targets till around 625 in Ambuja Cement with a stop loss of 582. The second recommendation is from the aviation sector. It is in Indigo, where the stock has been confined in a range since the last 7-8 days. But the way the short-term setup indicates that the stock is on the verge of a short-term breakout, which post which the stock should see possible targets of around 6,032 on the upside. The stop loss would be 5,627 on this buy trade.
So two counters, Interglobe Aviation and Ambuja Cement, that come in as top picks. But another sector that is on our radar is IT. After the kind of correction it's seen, top loser, majority of the stock seeing pressure on the back of the H-1B visa fees that have increased as well. Jasmeet joins us with the details. Jasmeet, over to you.
Well, right, yes, thank you for that. Let's quickly understand the key takeaways from the overall shenanigan. The first one is the cost of doing business is supposed to go up after this particular announcement. When we look at the other aspect, we see that the companies plan on more of offshoring, hiring local talent, than investing more money in H-1B visa. Well, thirdly, if you look at the other aspects, the Indian IT competitiveness is still maintained. Given this H-1B visa impact will be on overall all the countries, so it's not like Indian IT competitiveness might be lost. While lastly, we also have the dependency on H-1B visa have reduced over the last 8 years given the initial Trump initiation of 2016, and currently we have roughly 21,000 applications for it versus 39,000 back in those days. While we also said the earnings could fall, but there will be higher onsite wages which will hit margins by 3 to 4% going forward. If we look at the other aspects, the larger IT firms are well placed in this particular initiation compared to the mid-cap firms. Now let's quickly understand what does the brokerages say with the overall picture. We have DAM Capital telling that only 1 to 3% of the workforce of the entire firm is on H-1B visa, so the impact could be negative. Then we also have ICICI Securities, which says that they believe IT service companies could benefit from this move given the offshoring will reduce the cost and also help in margin improvement, while they also see this would trigger higher offshoring with reduction of cost. While next year Morgan Stanley, they say that the medium-term impact could be higher cost structuring, while they also see that order could be changing in the operational model and the business model as well. Now, they also see that it will allow the room for building into potential pricing for the new contracts where the client cost might increase going forward. While lastly, we also have Citi in the picture. They say that the cost of doing business in the US is going to go up, while they also say that Indian IT firm are in the cautious mode, so that's something to watch out for. Then we have BofA. They see a 7 to 18% annual profit impact by this particular move, while they also see that the Infosys, they have maintained the buy rating and they have cut the target price to 1780 from the initial of 1840, while they have also cut the target prices for Wipro with a maintenance of underperformance. Lastly, we have Jefferies. They see a 7 to 12% impact by this, and this will be adjusted over the next 3 years, and they also say that the higher onset wages to hit the profit by a range of 14 to 13%. So this is what all the brokers are penciling given the impact of H-1B visa.
Thank you so much for that. You know, it's a very mixed view coming in from brokerages as well at this point in time. But let's get in Siddharth Khemka, Head of Research, Motilal Oswal Financial Services, joining in. Siddharth, welcome to the show, and always a pleasure to speak to you as well. How would you advise investors to look at IT as a sector right now with the kind of correction that is coming in? Not all brokerages are penciling in a major negative reaction, though there is that uncertainty, that cloud which still hovers. What would you do?
Yeah, hi, good afternoon, Hiral. Good to be on the show as usual. I think there is a fair mix of, definitely there is a fair mix of uncertainty regarding to the IT companies. But one thing clearly stands out, and that is what most of the corporates have also come out and given clarification that at least in the near term, the impact could be very minimal, about 200 to 300 basis points at max on the overall revenue front. That is also because most of the FY26 requirements in terms of visa applications have already been locked in. So any new incremental cost in terms of the new tech, the visa fees would only start coming in from FY27 onwards. And by that time, there will be enough clarity as to how this business model could turn and switch. We heard a lot of companies talking about the onshore-offshore mix changing over the next few months. They can also look at some of the other regions like Mexico and Canada, which are at the same time zone, from where they could run some of these services which are required to be delivered, especially once the project delivery starts. That is where we see a lot of hands-on approach that is required. Overall, what we see is that Q2 earnings may not be that great, and things would gradually improve as we go forward, because with the US Fed rate cut, we definitely see the overall discretionary spending on the tech side improving over the next few quarters. Nonetheless, as I said, near term, there could be volatility, but someone who is looking from a 2-year plus perspective, it's a good time to start accumulating with the expectation that the near-term volatility can bring down the stock prices even lower. We have seen that stock prices have fallen in the last few quarters. Valuations are at a comfortable level. So we see even companies like Infosys announcing the buybacks, giving a kind of a cushion to the downward support to the stock prices. So the downside looks limited, but for the upside, we'll have to wait for at least few more quarters.
Okay, so that's with regards to IT. Downside looks limited. In fact, a couple of we were speaking to Mr. Shenoy, Deepak Shenoy as well, but he was of the opinion that the upside in terms of technology-related firms is major, but obviously does not take IT as a sector into consideration on that side. But Akshay, coming to you as well, with the correction that has come in right now, what would you advise investors to do with IT? And if you're a buyer, would it be any of the large cap or the small cap, the mid cap IT companies?
Well, it's day one and the news is just sinking in. So, there is some bit of an intraday volatility and we need some concrete evidence based on charts as to exactly where to call it a bottom in the IT space. So right now, what I understand is it's a broader range which the sector per se has been setting up since the last 1.5 month. And if you view technically Nifty IT index, I think at the levels of 35,380 odd, where it trades, there is still some more downside, possibly 34,200 can be in the making. So if a choice of stocks has to be made here from a price reading perspective, TCS would be one of the names which you can consider. It's down by over 3% odd, but I think I will be looking to buy this again on the base areas around 3,000. So not today. When it dips further around 3,000, that's a good level to start rethinking about buying TCS on dips. Infosys is the other name which you can consider. Although down by around 3% odd, the dip of around 1440, which is the lower end of the band, would be the band where you can reconsider buying this stock. So yes, still more room for some downside, maybe 2-3% more. And there's where again IT becomes lucrative for a trading bounce back.
The Motilal Oswal view, of course, Siddharth gave, and I think their note suggested that they believe that there will not be too much of a margin dilution as well. Maybe a bit of a top line softening. Well, I think the jury is out. We've seen the correction today. To a lot of people, this correction bakes in most of the negatives. Let's see if that is indeed the case. Mild de-rating also entirely possible. Breaking news, by the way. Okay, breaking news. Sorry, I just saw the red and I thought, okay, it's one more breaking news, but this is big. Okay, IndusInd Bank has mentioned or named Viral Damania as the CFO. So there's a CFO appointment that has happened in IndusInd Bank. Now, yes, this may not be a stock moving event, but from a perspective of what the bank has gone through in the recent past, this is an important one. I had a different question to ask Siddharth Khemka, but I'll bring him in on the IndusInd Bank conversation. Maybe Vishwanath will join us in due course as well. But Siddharth, crucial for IndusInd Bank, right, to have key managerial personnel appointed because they really want to ensure that the stemming down of confidence in the company's management functions is corrected, and this would be probably one such step.
Yeah, I think, hi Neeraj, good afternoon. So I think if you look at IndusInd, a lot of things on the plate for the new management, a lot of write-offs, a lot of accounting policies that needs to be made straight before the street starts having a belief in the overall franchisee. Near term, I think the financials that continues to remain weak, and in the challenging environment, I think the overall growth is also likely to be subdued. So the only trigger that the market could see is a good credible name coming in the CEO's place, and that could bring in some excitement. And apart from that, as I said, even if a new credible name comes into the place on the picture, there's a lot of cleaning that needs to be done, a lot of confidence building that needs to be done over the next few quarters before the market would start giving it a higher valuation multiple.
Okay, so though the stock after the news as well is at the day's lowest levels as we speak, with cuts of 1.4%. In fact, Santosh Kumar will continue to remain as the deputy CFO is what we are picking up so far. Very quickly, Akshay, your view with regards to IndusInd Bank from here on, and secondly, anything that actually comes to your radar that could be a buying opportunity?
See, IndusInd Bank technically is trading negative. It's just that it's clinging on to a short-term support. The support zone is exactly where we trade right now. That's the levels of 730 to 735. So you should not jump the gun and buy at support. Let it show some intent of recovery from the support, because if the support were to breach, we are looking once again for downside targets till 650. So keeping fingers crossed and hoping that once again you get slight bit of a recovery above 750, but in a no trade zone, trading at support, the trade setup will be either if you are intent on buying the stock, 750, let some strength get back in the stock before you commit your buy trades. Otherwise, we are looking at levels of 650 on the downside.
Downside you're looking at on IndusInd Bank. In fact, I was just going through this seasoned finance leader with over 27 years of professional experience, and he's been the CFO for Bank of America India. In fact, let me get in Vishy to get us more in terms of what this would actually mean. You know, a CFO coming in right now, still Vishy, you're seeing the stock which is actually inching lower at the day's lowest levels.
Yeah, so I mean, it's interesting that the CFO announcement is coming in now, about a month after Rajiv Anand took over as the CEO of the bank. But it's an important role. Remember, they didn't have a full-time CFO for a while now. Even Gobind Jain, who actually quit the bank back in January, he was also not a full-time CFO at that point in time. And since then, of course, the bank has had an interim CFO managing things, Santosh Kumar, the name of the gentleman there, who was part of the internal audit department. So he's, of course, now going to continue as deputy CFO, and Viral Damania will take over. Viral Damania has largely been a foreign banker, Bank of America, as Hiral was talking about, and then before that with Citibank, and he's worked in India and Bangladesh, and he's also worked at PwC. So some amount of international experience coming in, but what people will watch out for is if the new CFO comes in and finds more skeletons in the closet, because that's going to be the problem area. Already Gobind Jain claims that he was the one who blew the whistle on IndusInd Bank's accounting issues. That remains to be proven. Of course, he's also part of the investigation that is ongoing currently. Actually, this week, the police is going to, the EW specifically, is going to question former MD and CEO of the bank, Sumant Katpalia, as well as Deputy Arun Khurana and Gobind Jain. All of these three people will be questioned between Monday and Wednesday, and then we'll find out whether they have anything more to say. On top of that, the new CFO coming in, is this going to be a kitchen sink quarter? That's going to be the question, whether the September quarter is going to be the problem area.
To add to this, Santosh Kumar continues as deputy CFO as well. So are you seeing any dynamics change there?
Not really. I mean, so you need somebody who has handled that position for a while to take, sort of that transition period into account. So to that effect, you of course need the person to continue. But Viral Damania, so again, the point being that the Q2 quarter, whether there's going to be anything more that comes out, that's going to be a fear that a lot of investors are going to have about IndusInd.
Absolutely. Thank you for that, Vishy, for getting us some perspective as well. So I think that fear is there, and that's the reason why you're not seeing any positive reaction on the stock. The stock continues to inch low. We're nearly at the day's lowest levels. 1.3% is the kind of cut that we are seeing on IndusInd Bank with new CFO who has joined, that is Viral Damania as well. But let's move on to another aspect, which is GST and the kind of benefits that are pouring in overall, because we're talking about a consumption boost ahead of the festive season. One company which is looking at expansion right now, just ahead of the festive season, is PN Gadgil. In fact, Mr. Saurabh Gadgil, Chairman and Managing Director at PN Gadgil Jewellers, joins in. Saurabh, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is overall, the expansion that you're looking at right now in the next couple of weeks, multiple showrooms that you're opening, is this an anticipation of a super festive season?
Yeah, good afternoon. It's a pleasure, and I'm wishing everyone a happy Navratri. After IPO last year also, we had done a similar story, 9 days, 9 story Navratri, and which had paid off very well. So this year also we're doing a similar strategy, 6 stores of PNG and 4 stores of Lifestyle in this 9 days of Navratri. We have seen that this is a time when the industry sees a lot of footfall, a lot of boost in consumption. And our history has always been that this entire month gives good sales. So as a strategy, we always try to have a lot of store launches during the festive period. And hence, again, this year, we are doing 10 stores, 6 of PNG, 4 of Lifestyle. And we have called the entire activity as a celebration of 10 stores, the Shotsav.
The thing about even jewelry companies would be that with the festive season coming in and the mood change in the mood change around just the GST-led benefits that come in, possibly leading to better mood, better sentiment, would all mean that maybe consumption of jewelry, which has actually been very strong, might continue to do well. And that would be the other question, Saurabh. I'm just trying to understand, Neeraj here, good afternoon. Do you expect that this festive month in particular, the next, let's say 40 days, right? Do they bring in substantial volume proposition on forget the number of stores expanded, but even on the stores which are operational right now, do they bring in the possibility of substantial volume expansion?
Niraj, so definitely this entire month, like 40 days, would see great footfall. We see almost 100% conversion during festive time, and I think a significant portion of our revenue comes from these 40-45 days. So definitely these 45 days are focused for us, and it's also a time when we sell a lot of festive jewelry coupled with wedding jewelry in the following 2 months of Diwali. So definitely, so this period is a period of very high importance for us, and it would add definitely to the the entire year's numbers, because we have 2 main seasons: the Gudi Padwa Akshaya Tritiya month, the March, April, May season, and then the Diwali month of September to November.
Saurabh, sorry to cut in here, but just trying to understand. If I'm a consumer, and if buying gold, unless of course it's for weddings, it's separate, but if buying gold is not a time constrained event, if you will, and because I have optimism around goods where the GST rates have come off and therefore the prices have come off substantially, could it happen that the consumer may postpone the buying of jewelry or gold in favor of durables, etc., because there is only limited budget, right? And therefore there might be a delayed purchase of gold and jewelry?
I don't think this happening primarily due to 2 reasons. One, that today's sentiments around gold are bullish and everyone wants to be invested in gold with a short and long-term view. So there's a lot of demand for gold from the investment perspective. And for the consumption side, we feel gold is a sticky consumption because it's linked to festivities, it's linked to emotions, and buying during these festive days is believed to get prosperity, is believed to get you more happiness. So this will not change in spite of the GST rate dip which has been announced by the government. I think it will have a positive impact on jewelry because people will have some more liquidity left, which can convert back into jewelry. So we are looking at the positive steps to lead to more consumption in jewelry.
Saurabh, a positive impact from a consumption perspective, absolutely, where disposable income to invest is higher. Would that actually flow into gold or would that flow into silver? What is the trend that you're looking at? Because currently the pace at what silver is moving is way faster as compared to gold.
Definitely, both gold and silver are on a bullish path, and we've seen rise in both. Like you rightly pointed out, silver has seen a little higher rise than gold. But I think festivities like Diwali, festivities with Navratri, bring a lot of gold consumption because people want to, have this golden necklace set, golden bangles, for their own consumption, gifting. So I think gold will rule the roost. But silver, again, for investment, silver coins during your Dhanteras are also popular. So both, I think will be popular. But if you look at ratio-wise, I think 90% will be gold and 10% will be silver consumption this festive season.
And gold, 10% silver. That's an interesting one. Thank you, Saurabh, so much for joining us on the show. In fact, we will be looking forward to reconnecting with you once we are mid-festive season to understand what the channel checks are indicating as well. But thank you so much for joining us.
Thank you.
Absolutely. In fact, let's quickly slip into a short break. On the other side, we'll get you the top buy today and sell tomorrow picks as well.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. You're watching India Market Close on NDTV Profit. Now, Adani Group companies have been surging in trade after the SEBI's clean chit on the Hindenburg allegations. Let's head across to Anushi to tell us more as to what's happened and what's the kind of increase that we've seen since February 2023 and what are the key triggers from here on. Anushi, over to you.
Well, Hira, the rally continues for these Adani Group companies that we are looking at, and it's a big jump in terms of market cap addition that we are looking at since the Hindenburg saga that had happened in January of 2023. In fact, what we are seeing as overall addition of over 8.7 lakh crore over the course of this 1.5 to 2 years period that we are looking at, with Adani Power, Adani Ports and Adani Enterprises contributing the most to this market cap addition that we are seeing. We have other group companies in focus as well, but it's interesting to see the kind of moves that have taken place over the course of these 2 years period, in fact, that we are talking about. If we just see Adani Power, in fact, it has logged in about more than 5 times of a gain since that period that we are looking from February of 2023, wherein the companies, most of these companies had hit lows since the period that we are seeing. In fact, if we look at Adani Ports, Adani Enterprises also, it's a big shift that we are seeing in terms of how the percentage changes. But about what has happened and the key developments in terms of, what the companies are doing, most of the companies have maintained the guidance. In fact, some of them have even upped their guidance in terms of what has taken place. Adani Group, first of all, talking about Adani Enterprises, now group companies continue to see a rise after SEBI's clean chit on allegations by Hindenburg Research. In fact, SEBI finds no evidence of wrongdoing by Adani Ports, Adani Power, as well as Adani Enterprises. Adani Ports, if you look at the key developments that are taking place now, they expect a revenue increase of over 16 to 22%. This is to the levels of 36,000 crore to 38,000 crore, and this is with an increase in your focus towards trucking revenue that we are seeing.
Got it.
That's the
Anushi,
overall picture. Yeah.
thank you so much. And on cue, Anushi, let's cut across to Gautam Adani talking.
But what we create must leave its mark on a history. समय की रेत पर हम छोड़े निशान, सुर्खियों से बढ़कर हो हमारी पहचान. And finally, embrace transformations. The future will march forward, with or without us. Either we shape the future into what we dream, or be shaped by the future into what we fear. रूप बदलना ही जीवन का सार, जो झुके नहीं वही बने अवतार. Therefore, my dear friends, let history remember the past 3 years as the spark that built a greater Adani. An Adani that stood taller in dignity. With every challenge, it quietly overcame. And let our resolve echo through every barrier we dared to break. Echo through every tomorrow we dared to build. Echo through every dream we dared to chase. And may the name Adani forever stand for courage, conviction, and a promise we all kept to our motherland, Bharat. My dear colleagues, Satyamev.
Okay, so that's Gautam Adani addressing all employees as well and clearly saying that integrity and transparency must remain the foundation of the group as well. Siddharth, a quick view in terms of Adani Group companies with the kind of up move that we've already seen, the kind of investing, the kind of plans that they have from here on, would you be a buyer?
So if you look at within the Adani groups, we have coverage only on Adani ports in that sense. But I think what has come out clearly, the market is positive and the sentiments have turned in favor of the group after SEBI's clean sheet to the promoter and to the management.
Got it.
Yeah, so within the group, I think Adani Ports is one business which we are very positive on in this global volatility. They have consistently grown capacity, and I think over the next few years, capacity-driven growth as well as valuation comfort makes us positive on Adani Ports.
Okay, so Adani Ports is the topic and followed by Adani Green as well. In fact, let me also get in Aditya Agarwala from Invest for Edu. Aditya, good afternoon and welcome to the show and a pleasure to speak to you as always. A quick view with regards to where, let's talk stock specific itself. IT, which has seen a correction, anything that could come on your buying radar from there? And secondly, when you look at IndusInd Bank as well, on the back of the new CFO that has been announced, the stock is under pressure. What would you advise investors to do on both of these?
Good afternoon, Hiral. Thanks for the show. Let's first talk about IT as a space. In the morning, we did see a sharp gap down opening, and from there, we are witnessing some kind of a buying emerging from lower levels. My sense is you're going to see a bit more volatility maybe for a day or two, but once the dust settles down, my sense is you will see IT coming back in the reckoning, and you will see a big short covering rally or maybe some long build up as well. I would like to stick to large cap IT names. A couple of them that stand out for me. Infosys, I think, offers an excellent risk to reward at current levels, and if you see from lower levels, we did see some kind of a buying in Infosys. So that is one stock that I would like to keep on my radar, and would like to keep adding in my portfolio today. And if it comes down tomorrow, we see a bit of a profit taking in Infosys as well, then that is also something that I would like to add in the portfolio for a target of 1650, 1750. Second is TCS. That is also looking quite impressive and interesting to me. Offers an excellent risk to reward as well, with a support on the downside at 3000. I think TCS also makes the cut, and then you can easily see levels of 3300, 3400 on TCS as well. And finally, HCL Tech is something that also looks quite interesting to me. So sticking to all large cap names, Hiral, and on HCL Tech, I think 1650, 1700 is something that you can spot. So this is as far as IT is concerned, and my sense is you should not ignore IT. And once this, after this news, the dust settles down, you will see a run up in IT stocks. Now talking about IndusInd Bank, we're not seeing anything happening in the stock after that sharp correction that we witnessed in the stock. After that, it has been a one-way downward spiral and a slow grind, I would say. You see everyday stock slides about 1% or 2% lower. Even at current levels, I would still be skeptical holding on to IndusInd Bank, or rather look at fresh long addition in IndusInd Bank. There are better names in this space. I would look at them. I would give a complete avoid on IndusInd Bank. Till the time I see a move beyond 800 odd levels in IndusInd Bank, I'm not really interested in IndusInd Bank at current levels.
Yeah, well, I think a lot of people won't be for now, but tell you what, I mean, the current CFO not as well known, but the CEO very well known, and guessing he'll work his way through. What are the ideas though? And Aditya, I buy your point that let the trend show, and then it's better to buy from a trade perspective, right? So, and I kind of heard Siddharth say the same thing as well, almost to that effect. But Aditya, first, what are your stock recommendations for the afternoon?
Good afternoon, Neeraj. So a couple of stocks. The first one is Blue Star. It looks quite impressive to me on the chart setup, and we're witnessing a good run up in most of these stocks. So it's more of a consumption led right now market that we are witnessing. So stick to those names. So Blue Star is a buy for a target of 2150 with a stop loss at 1920 on the downside. Second stock is Naukri. We're witnessing a good up move in Naukri after a very long period of time, and it's a good move on the back of decent volumes as well. So I will stick to Naukri for a target of 1530 on the upside with a stop loss at 1350 on the downside.
Okay, on to our bull versus bear segment, and let's get in Varsha to talk about Borosil Renewables. Varsha, it's really zoomed today, so I'm guessing there is a bull argument. Trying to understand what is the bear arguments here.
Well, thank you for that, Neeraj. Let's start with the bull argument first, with the GST implication, of course, which is the talk of the town. With the GST implication from, the GST reduced rates from 12% to 5% is a positive boost for the company. But, company is expecting 2 to 4% of volume growth only in FY27 because of the, capacity, rather because of the new capacity being not fully operational. So that's one of the bear risks that the company has. While the new expansion of 600 tons per day brownfield expansion is on track, will start in FY27, but this long time gestation period for the new plant carries an execution risk. The strategic decision of a company's German subsidiary insolvency is one of the key trigger point, will also help in the capital allocation, and company will diversify their plans when it comes to India operation. But the subsidy failure at the international level is one of the risks, and the failed expansion proves that there has been a weak demand when it comes to international expansion as well. On the bull case, government policies like anti-dumping duty and ALMM provides a robust market for, of course, the solar modules, but for Borosil Renewables as well. But rising domestic competition, because a lot of companies are actually expanding hugely when it comes to solar glass or solar cells or modules. So there is a lot of expansion going on. So this competition is one of the risks that the company faces. So yes, GST impact is the positive trigger for the company, but rising competition and all the new capacity which will be coming in FY27 poses some risk when it comes to volume growth overall. But onto that, we did speak with the chairman of Borosil Renewables, where he talked about how GST will positively impact the company, and of course on the outlook for next 2 to 3 years. Do listen in.
The drop in GST rates on sales of solar modules from 12% to 5% is a very, very welcome step, and this is definitely going to boost demand in the domestic sector. We, of course, are suppliers of glass to module makers, and therefore we are looking at an increased demand coming in. As matters stand today, Borosil Renewables is fully sold out. We have sold all our production. There is demand for it. And we are currently in the phase of expanding our capacity significantly. We have announced 600 tons per day. When I have been out looking and negotiating for equipment, I find that the 600-ton figure is likely to be exceeded.
Okay, so that's with regards to Borosil Renewables looking at capacity expansion from 600 tons per day. Probably it could go to 1,000 tons per day that they had planned earlier as well. But now it's not the time for herd in the street. We are slightly delayed today on that front. But let's head across to Somit Sarkar.
You were waiting for the music to pause?
Absolutely. Yes.
So yeah, multiple stocks that remain in focus. Firstly, it's Hindustan Copper. Now, there are buy flows on institutional desk. Second quarter numbers are expected to be quite strong for this counter. So keep an eye out for Hindustan Copper. Indigo is another stock. There are buy flows on large HNI desks. Dealers are indicating that air traffic might be a bit slower in the second quarter, but deals which measure average fare per passenger per kilometer, that could surprise on the positive side, and hence we are seeing this kind of an uptick when it comes to Indigo. For AB Capital, there are buy flows on PMS desk is what dealers are indicating. Camlin Fine Smart investors have started to accumulate. Delivery volumes could be on the higher side for this counter. The dealers are indicating that there is strong demand pickup that they're seeing for one of its key product, vanillin. When it comes to Paytm, the selling pressure is largely over is what dealers are indicating for time being at least, and hence we are seeing this kind of a 2% uptick that we are seeing in trade today. On Friday, the stock had declined sharply, but dealers are indicating for time being that the selling pressure is largely over for Paytm. For Aurobindo Pharma, dealers indicate that there are some buy flows on FI desk at lower levels in trade today. And for RateGain, there's a buzz of a potential acquisition announcement that could come in. This could be a bigger acquisition for the company. For ITC, there's a buzz of a potential block deal here. And for IMFA, there are buy flows on large HNI desk. There's some positive development that could happen anytime very soon for IMFA. So keep an eye out for IMFA as well.
ITC potential block deal. Right. Okay, and that could happen in the next few days.
Yeah, timeline I don't have, but the talks have started for that block deal. Is what
a large one?
Yeah, a large one.
Okay, then you and I both know who could the seller be. So that is part one. Samit, the other thing is we don't usually hear too much about stocks, about Indigo in particular these days, simply because this overhang of the block, etc. The final few shares are left. Why this optimism? Because I know you track aviation very closely. Why this optimism likely?
You say Q2 air traffic is weak. That is largely factored in right now. But what dealers are indicating is that fares could surprise on the positive side. In first quarter, we had seen a decline in the yields. So that could turn around in the second quarter. And this setup will be very strong given the fact that Q3 and Q4 will be a strong air traffic. So strong airfares and strong air traffic. The setup looks quite good for Indigo then.
Wow. Interesting ones. In fact, out of this list, let's just take a quick question with Aditya as well. Thank you, Somit, for that. One is Hindustan Copper. Strong fundamental, plus there's a herd on street that even Somit has got to us. But are you seeing further upside, Aditya, on a Hindustan Copper? And secondly, Paytm also is another one along with a RateGain. Three names that come to my radar from this one. What are charts indicating?
Let's talk about Hindustan Copper, Hiral. It's been a very strong move, and it's not just today. If you take a look at last week, also we witnessed similar kind of an up move on the back of very strong volume. So my sense is this buying on such strong volumes will propel the stock much higher in the coming trading sessions. Probably can test levels of 350 as well. So that is the kind of target that I'm playing with on Hindustan Copper as of now. And on the downside, 270, 75 seems to be a very decent support. So the risk to reward is also favoring that you can still take a long bet in Hindustan Copper for a target of 350, 360 at least, with a stop loss at 275, 280 on the downside. Second, talking of Paytm, honestly, the risk to reward now is little skewed, not in favor of going long. It's more of a consolidation that I see in Paytm, a sideways price, rather than price correction, maybe a time correction is what we can see. 1150, 1100 could be on the downside. On the upside, 1260, 1300 will be difficult to take out immediately. So give it some time. It's still in a very strong up move without a doubt over a longer period of time frame. But immediately, I think there could be some time correction that you're witnessing in the stock.
Okay. And Siddharth, if I'm not wrong, you guys have been constructive Interglobe Aviation. And correct me if I'm wrong, right? My question is this the time to buy into Interglobe Aviation, or are there other stocks available which can give a better bang for the buck?
So Neeraj, I think definitely we have been positive, and I think the positive momentum, at least in terms of the numbers, should continue, given that the large order delivery in terms of the newer aircrafts that will be joining in. So by the management comments, they are likely to add one new aircraft every week for the next 2 years. So that's a huge upleg in terms of growth capacity in an environment where we are developing a lot of newer tier 2, tier 3 airports. There are a lot of international routes that are being opened up for Indian Airlines. And the biggest factor is that crude has largely remained constant. So it's in a way play on the Indian consumption story where more and more Indians are now traveling. So I think whenever that last leg of block is there, that could be the bottom. And from there, we could see a sustained growth recovery in the stock price. For this year, our earnings estimate is a 44% earnings growth. So I think in any correction, it would be a good buy in the current market.
Okay, so that's Interglobe Aviation. A good buy in the current market scenario is what Siddharth is looking at. But let me go across to Aditya for his trading strategies. Aditya, what are the BTST, STBT trade calls for today?
So I've got an LIC which looks quite interesting to me, Hiral, for a BTST buy today, sell tomorrow. I would be looking to buy the stock at current levels, look for a target of 960 with a stop loss at 880 on the downside.
Okay, so LIC is the BTST call. 904, 1.2% upside, though the stock has cooled off slightly from the day's highs. But moving on and staying with what's happening between India and US. India is set to intensify its trade negotiations with the United States as Commerce and Industry Minister Piyush Goyal leads a delegation to Washington today. Rishabh joins us with more details. Rishabh, good afternoon. What are you picking up?
Absolutely, a crucial set of negotiations is starting today in Washington, led by, of course, India's Commerce Minister Piyush Goyal. Apart from that, you will be joined by India's chief negotiator Rajesh Agarwal. Both of them will be leading a delegation for trade talks with the US. Now, this comes right after you had the likes of Assistant US Trade Representative Brendan Lynch visit India last week. He was in town for about a day-long talks that he had with the Indian side. This came after a certain thaw came in the relations between India and the US. There was some sort of barriers that had come up, some sort of issues that had propped up. But with the top leadership, with President Trump and Prime Minister Modi also reconciling, that has gone away, and trade talks are back on the fast track. Both sides have very clearly said that they are expeditiously moving towards an early conclusion for the first tranche of the bilateral trade agreement. That means that there is a real possibility that the fall deadline is respected in this case, and the fall deadline is roughly around mid-November or the end of October. That is when we can expect the contours of a first tranche of the bilateral trade agreement to emerge. India is expected to stick to its red lines. You have the top leadership, all of them have said that agri and dairy, those two remain off limits. India will continue to protect the interests of its farmers, of its livestock holders, of its fishermen and its MSMEs. That has been the word throughout, and that is expected to stay in the current round of negotiations as well.
Thank you, Rishabh, for that. In fact, interesting information that is coming in and details arising out of it will be crucial to track as well. But Aditya, few of the other names that are buzzing in trade today, MK Global locked in upper circuit. John Cockerell, that's another one which is seeing some smart moves over the last couple of trading sessions. That is also locked in upper circuit. Tina Rubber, Shalby, Viviana Power, SEPC, all smaller names, but very strong moves coming in all these counters. I know the ones which are locked in upper circuit, you might not see any opportunity to right now invest in. But anywhere where you're seeing strength in the charts over the last couple of days, where if any opportunity arises, you could look at a buying call.
Out of all the names that you took, Hiral, maybe a shall be something that I can look at because it's not just today that we are witnessing good volumes. There are good volumes that we've been witnessing constantly in the stock on all up moves in the past few trading sessions. That tells me that there is enough strength in the stock to take it to levels of maybe a 290, 300 all the way up. But just a caveat here, these stocks usually carry a lot of risk. If you take a look at their beta, usually you will find it very high. Very sharp moves happen in these stocks. So one has to be little nimble-footed. If the trend reverses, you should exit the stock immediately. So maybe you can put a stop loss somewhere around 250 for a Shalby and look for a target of 300. And if the trend reverses in these stocks, you should exit the stock quickly rather than holding on to them, because the trend also reverses very fast on the downside.
Okay, so that's with regards to where Shalby goes. There you're seeing some good volumes that are coming in. Siddharth, very quickly with regards to auto as well, some strong moves coming in terms of today's session. Would you be a buyer with the kind of upside that has restarted?
So yeah, Hiral, if you look at the GST 2.0 reforms got implemented from today, and one of the biggest sector that benefits remains auto. So the entry-level auto stocks, for example, Maruti, Hyundai, then you have Hero Moto on the two-wheeler side. And I think the biggest beneficiary this year we are seeing is M&M. There is a strong push from the rural side with the healthy monsoon, the RBI cutting rates right across, the enough liquidity into the system, and finally the GST beneficiary. So I think all in all, we continue to remain positive on the entire auto space. Our preferred picks, Maruti, M&M, and in the two-wheeler space, Hero MotoCorp.
Okay, so Maruti and Hero MotoCorp 2, M&M and a Hero MotoCorp, 3 companies that Siddharth is looking at as well. But you're just 2.2 minutes away from closing. But very quickly before we go, Aditya, any one call that comes to your radar towards closing that you would recommend, apart from your BTST calls or anything that you've recommended so far?
Not really, Hiral. I would stick to one blue star that I had spoken of at the start. That is looking very strong. So I will stick by that for a target of 2150, stop loss 1920 on the downside. Second, one stock which is seeing a very sharp move towards the closing end of session is Muthoot Finance, looking very strong on the chart setup, a sharp 4% up move on the back of good volume. So this is also one stock which can be looked at for a BTST candidate for a target of 3200 on the upside with a stop loss just somewhere around 2950 on the downside.
Okay, so Muthoot Finance, another one. Siddharth, anything that you would want to recommend?
So I think one more stock that comes to my mind to play this entire consumer space and the beneficiary of GST 2.0 is Polycab. I think with the now monsoon behind, the capex driven sector, especially with government projects picking up pace, plus the construction activity on the residential side, that should boost demand. There is clearly the long term, if you look at the investments in power, railways, roads, infrastructure, real estate, that is likely to sustain the demand. And Polycab has a lot of focus in both the cables and wire segment as well as in the FMEG, which is your electronic goods. So both of which we believe could sustain a strong earnings growth of around 20% plus over the next few years.
Right. So that closing. So thank you so much, Aditya and Siddharth, for joining us on the show. But Polycab to be absolutely noted by viewers and investors, as well as a fundamental pick coming in there. In terms of closing rates, let's quickly pull up Nifty 50 on the screens. Not a bad day, but the breadth in terms of markets has been absolutely narrow. We're closing absolutely near the 25,200 mark, 0.5% downtick coming in there, probably near the day's lowest levels as well. Bank Nifty as well, 0.3% lower, so some bit of visibility coming in on that front. Let's quickly pull up VIX as well as the PSU Bank Index, and then we'll see the sectoral heat map in terms of what the closing is looking like. VIX is what has actually climbed today, 5 to 6% upside, 10.55, but that is still a comfortable level to look at. If you see in terms of the breadth as well, if you have the advanced decline ratio, that will tell you the absolute story. You see the gyrations that have come in during the day. Your declines have been way higher as compared to your advances as well, nearly double to your advances, and that is what has actually put pressure overall. Overall, if you see in terms of your individual sectors, and then let's pull up the Nifty 50 heat map post that. Energy, media, metals, they continue to be the gainers, but majority of your sectors have actually got into the negative. IT, some respite coming in there, but the top losing sector today, 2.9% is the kind of cuts coming on that one. Pharma and India Defence, which actually ended lower. Apart from that, in terms of the consumption pack, let's see what's happened there. Marginal gains of 0.2% in terms of Nifty consumption as well. Oil and gas, which has also come in on the borderline. So clearly your losers are way higher than your gainers. Auto also started to see some correction. Let's look at the heat map in terms of Nifty 50, and then we'll look at the contributors. Adani Group of companies, strong moves there. Adani Enterprises, Adani Ports. In fact, the entire group has and was buzzing in trade today. Eternal, Bajaj Finance, Ultratech Cement, SBI, few of the top gainers there. But clearly, the breadth in terms of the losers is way higher as compared to your gainers. Tech Mahindra, TCS, Infosys, Wipro, HCL Tech, all of them in the red. Cipla is in the top 4 to 5 companies which were the top losers on Nifty 50 as well. And in terms of broader markets, let's look at what that looked like, because there was some bit of respite in terms of the mid cap and the small cap index. But there you go. After that dip, we did see some bit of a buying interest coming in back, but pretty much in line with what the benchmarks were doing. It's the small cap 250 which saw a major downtick, 0.9% lower on that front as well. In terms of individual companies, we already saw a few of them. MK Global locked in upper circuit, John Cockerill locked in upper circuit, Tina Rubber, Shalby, Viviana Power. These were few of the names which saw some good moves in trade today. Adani Power, Adani Green, Borosil Renewables, NetWeb. These were few of the other gainers as well. IFL Caps, in fact, has actually got added to that downtick, 7.5% downtick there. Car Trade, another one. Zenzar Technologies, Kesoram Industries, as well as Kfin Tech were few of the other top losers in trade today. But clearly, in terms of where markets go, if you see, the range has been narrow. There has been pressure which did come in again in that last hour of trade, and that's clearly visible with marginal buying interest from the day's lowest levels. But let's also move into the cues for trade tomorrow. Let's pull up that one on the screens and see what all are we watching out for. If we can have that one. Gujarat Apollo Industries, Hariom Pipes, India Glycols. Few of the names where we will see corporate action on the back of dividends that will be announced. Apart from the dividends that are being announced, the other aspect that we should be considering is the merger with regards to Piramal Enterprises and Piramal Finance, where the shareholders will be getting 1:1 equity on the back of the merger as well. And we have a Pidilite Industries bonus issue that will be announced tomorrow, and that ratio of 1:1. So that is something that you should be watching out for. And Sudarshan Chemicals will have a board meeting. So will there be anything that could come in from there? In terms of IPOs, Anand Rathi will be opening tomorrow. Apart from that, I think it's Solar Industries. Shesai Tech is another one that you should be watching out for, and Jaro Institute of Tech. So 4 IPOs that will be opening in tomorrow's session as well. So lots to watch out for, but completely out of time. Thanks for tuning in to India Market Close. Join us again for more market insights and updates. Until next time, have a great evening.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
देश के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है। हम वो सामान खरीदें जो मेड इन इंडिया। हर दुकान को स्वदेशी से सजाना है। जब ये होगा तो भारत तेजी से विकसित होगा।
Hi, thanks so much for joining in. You're watching NDTV Profit. At the onset, let me wish all of you a very happy festive season, a happy Navratra to everybody tuning in. And as you can see behind me, I'm at an electronics store. Today is D-Day. It is the day that GST 2.0 rolls out. And I've been thinking for a while, I need a new phone, I need a couple of new gadgets, and I usually am the tech guy. I go and spend on tech that I don't really need. But incidentally, my co-anchor Mahima has been browsing a couple of sections here because I think she wants to figure out what to buy. I've never seen her so excited about tech before, and the reason is that it's all gotten cheaper. Quite a few of these things have gotten cheaper. Let me go across to her and find out what she's looking at. Mahima, what have you been looking at?
Right, so a couple of things, Alex, that I'm looking at right now. Of course, the first three things where we've seen GST cuts coming in from that 28% mark to 12% mark. The first one being TV, more than that 32-inch.
Something like this?
Something like this, yes. And then you have your ACs and dishwashers. So people who are worried about washing dishes at home and who have no maids will be happy with the GST cut that we've seen. So these three things, of course. And of course, we've not seen any GST cut on phones, but yes, I think iPhone 17 is something that people are looking at right now for sure.
So that's one. So on the one hand, you have the GST cuts. On the other hand, you have festive offers that kick in.
Exactly.
So it's a great time to be going out and figuring out what you want, get your lists in order. But it's not just consumer electronics. And we'll be speaking with the director of Vijay Sales very shortly. Mr. Nilesh Gupta is going to be joining us. But we've also got conversations lined up for you to talk about the automotive space and also the snack space, because all of that is getting cheaper. Let's run through the list very quickly. What gets cheaper today?
So a lot of things, like from a toothbrush in your bathroom to a butter in your fridge, everything gets cheaper because that includes a lot of milk, dairy items. That includes your paneer, chocolates, ice creams, butter, cheese, etc. So that's from the staple pack. You're also seeing snacks getting cheaper in terms of where they were at 12% earlier will now be charged at 5% mark. Apart from that, you have your clothing, apparel below that 2,500 mark will go down in terms of where GST rate stands to that 5% mark again. In terms of where your hotel industry stands in terms of the consumption space, well, where your ticket size is below that 7,500 mark, that gets cheaper too. So a lot of items for sure, Alex, getting cheaper from today, and this marks the onset of festive season as well. Navratri kicking in, making things cheaper. And that'll, in general, boost demand. Yeah. That's what we've been hearing from analysts and management as well.
And also people on the ground. We've got from the automotive space, Mr. Sandeep Kumar Bafna, who's the chairman and managing director of Fort Point Automotive Cars. Sir, thanks so much for taking the time. Mr. Bafna, can you give me a sense of the offers that are currently underway? And of course, today is the day when all of those prices tick down. What is the kind of initial response that you are seeing? Do you see feet on the ground? And what is your anticipation for sales this festive season?
So let me start with two-wheelers. We are dealers for Hero. Suddenly there has been a spike in inquiries, and in fact today we are expecting a lot of payments to pour in for the Hero bikes. In fact, we've launched also 2-3 new products, and which were in waiting for such a long time, and that now would change the whole concept of things which are going to happen. On the car front, we are dealers for Maruti. In Maruti Suzuki, as you are aware, that there is a reduction in GST, plus the company has also reduced prices, which came to us as a big surprise. We thought that just the GST benefit would go to the customer, but the company has also reduced their prices on the product. Along with that, even though it is up to December only, but I feel that along with that, they will give a lot of other discounts and benefits which are also coming in. Financing is becoming cheap. Today, Mahindra Finance has announced that there won't be any processing charges from today onwards up till the end of the season. So I feel that this whole thing is
a combination of the prices going down on account of GST, as well as the discounts that are kicking in from the festive side, a lowering of the processing fees. All of that is exciting, to say the very least. I'll come back to you in just a bit. We're joined in store right now by Mr. Nilesh Gupta, as I've pointed out. Nilesh, thanks so much for taking the time. It's an exciting time because I think normally on a Monday at 12 o'clock, it's not as busy as it is today. It's deserted, and today is a different story. Yes. Can you take us through where you think the biggest excitement is going to be after the GST cuts, and coupled with the festive fervor that you would expect?
So I think this time is going to be a double whammy. One is the GST cut, and second the festival also. Plus, last 15 days have been very poor because people were waiting for today onwards to buy. So I think the basic action is going to be in large screen televisions, because they, in rupee term, is the nice.
What is it like?
In large screen televisions, it is nearly 50 to 18,000 rupees, which has come down 65, 75 inches and above. In rupee term, it's really very. Air conditioners, it could be there, but air conditioners, we'll have to wait for the weather to be on the favorable side. Be on the favorable side. Yes. But even dishwasher, that's a category which we saw in the rise after COVID. I think that's something which will become a staple food, like how everybody has washing machine in the house, a dishwasher will also come in.
Those are where your flat screen TVs are, the big ones, right? So let's walk across to that segment as well while we're talking about it. And Mr. Gupta, really the question that I have is that alongside all of this, there is a call by the Prime Minister to make local and to buy Indian. Yes. There are more technological products, more consumer electronics that are being made in India, but there are still a lot of manufacturers that make outside and sell here. So in the catalog that you have, do you have more products than you had 2 years back that are made in India?
So now if you see in the last 3-4 years, the government ensured that all these products, 90% of them are made in India. Okay. Because they made it impossible to import because the duties were high. So everybody has set up the pack. You see in our industry, a lot of factories have been set up. So all the televisions which you see here, except for the last screens, pretty very last screens, 100 inches and above, which has minuscule say, it's all make in India. And even the 100 inches in few factories, a few brands are assembling here. So everybody is having make in India. Even if you see Apple phones, yeah, most of the phones are now make in India. In fact, we are exporting it also. So accordingly, I think everything what you see here is if not 90%, at least 75-80% is make it.
Absolutely. We'll come back to you, Mr. Gupta. We're also joined by Rishabh Jain, who's the CFO of Bikaji Foods, joining us now. Mr. Jain, hi. Good afternoon to you, and thank you so much for joining. Just want to understand the demand that we're seeing in the snacking space. We talked about how auto space is picking up, how consumer durable space is picking up, but snacking is one industry that, when I was speaking to one of the FMCG analysts, he said that snacking is going to be that one industry that's going to see a lot of demand boost because of GST 2.0. Your view with regards to the demand that's coming in already?
So we are also expecting the same. So it's a peak Diwali season, and we see a lot of gifting and all going this season. And there is good cut from 12 and 18% to 5%. It's more of simplification and ease of doing business. So we see that it will be good Diwali this year for all the snacks players.
Let me ask you this though, when you're talking about the price points where there is going to be an impact for GST in the snacking space, the expectation is that these are all small ticket items. So as manufacturers, would you say that it's easier to control it with the grammage, and on the packet you're not likely to see too big of a change, and so therefore the question is, how does that bolster demand?
So basically, we have two type of overall packs. So family pack and impulse pack. So family pack is all about 20 rupees, which is 200 gram, 400 gram, which are MRP driven brand. So we have reduced MRP from today, and for impulse pack we increase grammage. That's what we're doing, and we are committed to pass on completely to the consumers. That's what we are targeting.
Okay, Mr. Gupta, coming back to you, last time when we spoke, we were talking about how, you are confident that this time you'll do a 20% growth apart from what you did last year. Considering now that, pre-bookings would have probably come in, do you think that 20% can be higher?
No, 20% will not. See, 20% was also a very large goal.
Yes.
So I think even if you achieve that, it's a great thing. But now the expectation is we will be able to do it 20%, because what has happened is last 15 days has been very dull. So there's a backlog over there. So that will also come in. So in this period, I'm sure this time 15 to 20% seems plausible.
And what, according to you, will drive that mix? Do you see it changing? Because as you pointed out, these televisions get cheaper. Will that
Last televisions will drive. Mobiles will drive, laptops will drive, and appliances traditionally is a Diwali product. So all refrigerators, washing machines is also going to drive. And if weather supports, normally in this part of the country, west part, November is a mini summer. Second summer. So if that happens, then with a 10% reduction in the GST, I think AC will also kick off.
Do you think the premiumization part will also pick up from here on? Because now we're seeing, some products getting cheaper. Do you think a consumer would want to move towards a more premium TV or, a better energy efficient AC?
So that was always happening in the last post-COVID, but now it's going to take more further ahead. For the simple reason is a person who was planning to buy 55 now will think of buying a 65, and a 65 guy would move up to 75.
Exactly.
Okay, I do want to ask about that same question to Mr. Bafna, because Mr. Bafna, you were pointing out that there are more inquiries, but in the two segments that you mentioned, in the two-wheeler space and in the four-wheeler space, for Maruti Suzuki, they are anticipating that the small cars will really see a bump in demand. I'm just wondering what you're seeing on the ground.
So actually what has happened is we've seen in the last couple of days a lot of two-wheeler customers walking into our showroom, and after the price reduction announcement 3 days ago by Maruti Suzuki, the product like Espresso being below 3 lakh rupees, customers are moving from two-wheelers to four-wheelers. I mean, they're at least inquiring, and at least 10% to 15% conversions should take place. So I feel that a lot of upward movement and upward movement in the four-wheeler industry, and from the two-wheeler to four-wheeler would also happen. Along with that, you see that the 100cc motorcycles, now people are moving to 125cc with this price reduction. So we find that the inquiries in the 125cc also has increased. With Hero coming out with the new Glamour, customers are instead of going for the Splendor 110, they're moving for the 125cc. So you see that whole upward movement has started, and I feel that this would really break a lot of barriers, which earlier customers were not thinking of buying a four-wheeler are now moving towards that. And in the rural segment also, we are seeing a lot of inquiry growth.
Excellent. And it's great to hear that from a dealership that is representing both the largest car maker as well as the largest two-wheeler manufacturer, among the largest two-wheeler manufacturers. But speaking about auto and speaking about premiumization, we've got a ground report for you from Tamil Nadu, the implications of GST 2.0 rolling out. Sam Daniels has this report. Check it out.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down and it has put the cars in an accessible range for the first-time buyers.
Do you think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, or 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous 2 terms. Right. So I think all these moves are more people-centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be a revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here. Yes. How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind of price cut for your models, be it Sonnet, be it for Seltos?
Sir, in a category wise, government has decided 2 categories of GST. It is 18% and 40% for cars especially. But 18%, it is a highest margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST, plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now. And for electric vehicles?
Exactly, sir. But electric, they maintaining the same for 5%. So there is no ups and downs. But electric is a future.
Thank you very much for your time. And dealers expect a bumper booking this festive season. And customers can't really wait to avail this GST tax cut, which have just made cars affordable.
Okay, so that's the ground report coming in straight from Tamil Nadu, and dealers are expecting a bumper booking season is what the word is coming in.
Bachat Bonanza.
Bachat Bonanza, exactly. And speaking of Bachat Bonanza, Mr. Gupta, we were talking about how people will be able to save on large TVs, but considering that this savings will happen, I believe what Alex was indicating was that small items will also pick up sales, because the moment they save in some item, they would want to spend that in some other item. What is your expectation? What are the other items that you're seeing demand spur up in?
So this time what we are seeing is a person who would have not wanted to buy a television this Diwali. Will buy because he'll say, oh, I always wanted that 75-inch television. So he'll come and go. And whatever he was planning to buy, whether it's a refrigerator or a mobile, he'll buy. And secondly, when he comes in the store, and because he's going to go for EMI, so there are full chance that if he had come to buy a 55 inches, he'll upgrade to 65 or even 75. And likewise, it will go up. Plus, then possibly he may also look out for a headphone. Because today in television, the most important thing is at night when one is sleeping and one is watching, the problem is what to do with the sound.
But the question is, that's an interesting point that you raise, which is a lot of people are buying white goods with a credit card or with an EMI. So what is the mix right now for large ticket items like phones and like televisions, as you pointed out?
I think 70% of our sale comes from EMIs. Okay. Whether it's a credit card or a plain paper finance. And 70 to 75% is coming from EMI.
And this is across... I know this is for you, but would you say that this is the trend across the industry as well?
In fact, people don't want to pay down payment. People are only looking out for zero down payment, zero processing fee schemes.
Even in terms of, the overall discounting that's taking place, because we have a lot of online platforms giving big discount, festive season discounts. Can you give us a sense in terms of the average percentage of discounts that we're seeing on these electronic items?
See, basically, anywhere between say 5 to 15-20% is the norm which is happening. But more than direct discounting, it is the EMI schemes which are being more sweetened. As I said, zero down payment and a longer tenor. Now it's no longer restricted to 8-12. It's going to 18, even 24 months. And in the case of one brand, Sony, they give pay by screen size. So if you're buying a 55 inches, you have to pay 5,500 per month.
Okay.
So it goes up to that size. So accordingly, what is happening now? This is also another form of discount. Then there are exchange offers which comes in. So in mobile, you will always find whatever your value of the mobile is there, plus there's a bump up of 2,000, 3,000, 4,000. So all this forms a part of a discount. And this is what Diwali makes so big for our industry.
Okay, interesting. One more question that I had with you was with regards to where e-commerce and quick commerce trends are picking up, right? Because I recently a report came out which said that DMart Ready and Amazon now has the highest average discount, which is at 23%. So this might not impact the larger appliances, overall, but smaller appliances, for example, a mixer grinder might see some kind of impact there. Any trend that you're picking up?
See, frankly speaking, wherever there's a maximum discount, possibly they are not the best of the brands which the consumers would want. There will be selective brands where the maximum discounts are happening.
Correct.
So for those consumers who just want a temporary or they are looking for discounts, yes, that becomes a go-to. But otherwise, a consumer normally would want to buy, and as we are saying, premiumization is happening. So in premiumization, even the brand premiumization is happening. A consumer wants to go in for a better brand also.
Right.
Interesting. Okay. Now, in terms of the other ground report that we are bringing to you is with regards to a ground report that's coming in from Rishabh, who's spoken to somewhere in Karol Bagh with regards to where Bikaner Wala stands. Listen to what he has to say.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikaner Wala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. And it does say that Saste Hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikaner Wala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
तो एक बार हम स्टिकर प्राइस और बिल देख लेते हैं सर. तो जैसे आप बोल रहे हैं बिस्किट्स, नमकीन, केक्स वगैरह पे जी
ये लगे हैं. ये कुकीज़ है, इसके MRP है 144. जब हम कस्टमर को दे रहे हैं, ये बिल है इसका 144 का 128 का दे रहे हैं. 13% इसमें हमने लेस कर दिया है.
इससे आपको क्या लगता है कि और कस्टमर का जो डिमांड है वो बढ़ेगा?
बिल्कुल बढ़ेगा जी, नेचुरल बढ़ेगा. अगर कस्टमर का पैसा बच रहा है तो वो कहीं न कहीं खर्च करेंगे ही, खाने पीने में और में सब चीज़ों में करेंगे वो.
और आज तो पहला दिन है इस GST रेट कट का. यही चलता रहेगा आगे तक? आगे फेस्टिव सीजन भी आ रहा है.
बिल्कुल बिल्कुल आगे भी यही चलेगा. हमारी उम्मीद है कि ग्राहक आए और अपना पैसा बचाए और ज़्यादा से ज़्यादा मिठाइयाँ, नमकीन, बिस्किट्स और ये खरीदे, ताकि अपने बच्चों के लिए भी दिवाली पे और पे नवरात्रों में ये सारी चीज़ें घर में ले जाएं.
Right, there you have it. All sorts of GST rate cut benefits being passed on to the end consumers. You have savory items that are getting cheaper, about 7 to 8% at least. Shops starting today, starting September 22nd, have started passing on these benefits to the customers, and they have done so in hopes of higher footfall and better traction ahead of the coming festive as well as wedding season.
All right. Well, thanks so much, Rishabh, for getting us that update. It's certainly given us some food for thought. And the other thing that, of course, we've got is our list of things to maybe look at buying. Of course, that depends on what your EMIs this month are. Mahima, I'll ask you that after the show is done. Nilesh, thank you so much for joining us today. And of course, Mr. Sandeep Kumar, thanks so much for joining us as well. And viewers, do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert in
The GST Bachat Utsav begins. Sectors including auto, FMCG and banks stand to benefit from the new GST rates that kick in from today.
विश्वास होगा कि कर सरकार की इनकम बढ़ाने के लिए नहीं है, देश को चलाने के लिए है।
Home Minister Amit Shah, in an exclusive conversation with NDTV, hails the new GST structure and framework as a trust-based tax system and says it will boost production and consumption in India.
If we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019.
Consumer Affairs Secretary Nidhi Khare warns that not passing on lower GST will be an unfair practice and class action will be planned against those that don't comply. The market ends lower after US President Donald Trump announces a hike in the H-1B visa fee. The Nifty manages to close above the 25,000 mark while the Sensex fell by more than 400 points. Most sectors finished in the red with Nifty IT emerging as the top loser. Commerce Minister Piyush Goyal and External Affairs Minister S. Jaishankar will hold bilateral talks with US Secretary of State Marco Rubio to push for the first tranche of a bilateral trade agreement ahead of the October-November deadline. The Supreme Court describes the preliminary report on the Air India crash, which blamed the pilots as unfortunate, and issues notices seeking responses from the Centre, the DGCA, and the Aircraft Accident Investigation Bureau. Good evening, you're watching Profit 360 on NDTV Profit. I'm Sanjana. Let's take you through the latest in international, national as well as market news. The revised GST tax structure took effect today as the festive season begins. This is the biggest tax reform since the GST was first launched in 2017. The government has slashed the old 4-slab system into just two main rates, 5 and 18%. Daily essentials like milk, paneer, medicines and many food items now attract little to no tax, which means lower bills for households. Vehicles, electronics and appliances will also become cheaper, offering relief to buyers and a festive boost to demand. For businesses, fewer slabs means simpler compliance, smoother billing and lower costs in production and logistics. Manufacturers, retailers and the hospitality sector are expected to gain as reduced taxes encourage more spending. And on to an NDTV exclusive. Home Minister Amit Shah has called GST 2.0 Prime Minister Modi's greatest reform. While speaking to NDTV Network's Editor-in-Chief Rahul Kanwal, he said that the new structure and framework is a trust-based tax system, and added that lower rates on essentials bring relief to the poor, farmers, MSMEs, women and the youth. Let's listen in.
नवरात्र का पहला दिन है, यही वो दिन है जब से जीएसटी टैक्स कट्स जो आपने किए हैं वो इम्प्लीमेंट हो रहे हैं। आपको लग रहा है कि इससे भारत की अर्थव्यवस्था में उछाल आएगा, एक कंजम्पशन स्प्री आएगा जिससे जीडीपी ग्रोथ रेट थोड़ी बढ़ेगी?
देखिए, सबसे पहले मैं जीएसटी के लिए कुछ बात करना चाहता हूँ। जीएसटी बना तब से कुछ नेता इसको डिस्क्रेडिट करने में लगे, बदनाम करने में लगे, गब्बर सिंह टैक्स फला ढिका बोलते रहे। फिर देखा कि ये सफल हो रहा है तो ये तो कहा हमारा विचार था, प्रणब मुखर्जी ने विचार किया था, चिदम्बरम ने भी हमारा विचार आपने चुरा लिया, जबकि वो 10 साल ही रहे थे। मोदी जी ने चौथे साल में डाल दिया था, वो इम्प्लीमेंट नहीं कर पाए थे, मोदी जी ने कर दिया था। मगर उस वक्त क्यों इम्प्लीमेंट नहीं हुआ, राज्यों ने क्यों विरोध किया था? क्योंकि स्वाभाविक रूप से 16 प्रकार के बिक्री कर को इकट्ठा कर कर एक सेल्स टैक्स बनाते हैं, अब जीएसटी बनाते हैं, एक बिक्री कर बनाते हैं, जिसमें 16 टैक्स मर्ज हो जाएंगे। ऑक्ट्रोय भी हो जाएगी, एक्साइज भी हो जाएगी, सेल्स टैक्स भी हो जाएगा, सेंट्रल सेल्स टैक्स भी हो जाएगा, मनोरंजन कर भी, 16 प्रकार के टैक्स मर्ज कर दिए। तो राज्यों की इनकम पर असर पड़ने वाला था। जब कांग्रेस से विचार लेकर आई तब राज्यों ने कहा था कि भाई हमारे रिसीट पर जो असर पड़ेगा, विपरीत असर पड़ेगा शुरुआती सालों में, इसका भुगतान केंद्र ने करना चाहिए। इन्होंने कहा कर देंगे, तो राज्यों ने कहा इसकी संवैधानिक गारंटी दीजिए, तो गारंटी नहीं दी। अब कोई संवैधानिक गारंटी नहीं देगा तो कौन भरोसा करेगा? मोदी जी ने भी आकर फिर से चर्चाएं शुरू की। अरुण जी उस वक्त वित्त मंत्री थे, सभी राज्यों के वित्त मंत्रियों की वही समस्या फिर से आई। फिर जब इस सोच में आया, उस वक्त में पार्टी का अध्यक्ष था, तब मोदी जी ने कहा कि भाई हम ही कहते थे संवैधानिक गारंटी देना चाहिए, तो हम कैसे पीछे मुड़ सकते हो? तो इस वक्त वित्त मंत्रालय, ब्यूरोक्रेसी, वित्त मंत्री सभी का बहुत बड़ा जिम्मेदारी आता है कि 5 साल तक आप, लंबे समय तक आप एक 14% इंक्रीज का गारंटी लोगे और इसका भुगतान करोगे। फिर भी उसको मान गए और हमने इस नवंबर महीने तक इसको पूरा भी किया।
And on to another exclusive. Consumer Affairs Secretary Nidhi Khare told NDTV Profit. But before that, remember to catch the full conversation with the Home Minister at 8 o'clock this evening. And on to another exclusive. Consumer Affairs Secretary Nidhi Khare told NDTV Profit that failure to pass on GST benefits to consumers will be treated as an unfair practice. She added that class action will be taken against violators. Let's listen in.
If for some reason, if we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019. And the Central Consumer Protection Authority can take class action also if we find that a particular, say, company is actually making, these things too much, then we will also go for the class action. Otherwise, it will be escalated to the convergence partners, which we have about 1100 and odd. And it would be expected that companies immediately redress any such wrongdoing if they witness through their retailers. So this is uniform for everybody, including the e-commerce entities, and e-commerce entities also know this fully well. For them it is in fact very, very easy because they do not have to go for the restrict-ring. They can digitally announce and show what is the new MRP. So it should not take them very long, and I'm sure they would be adhering to the instructions of the government on this.
And now let's go across to our reporters on the ground to see how the new GST benefits are likely to impact consumers. First up, I'm going to take you to Rishabh Bhatnagar, who filed this report from Bikanerwala in New Delhi's Karol Bagh, where shopkeepers share their take on the changes. Let's take a look.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikanerwala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. and it does say that saste hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikanerwala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
That was in fact Bikanerwala. Let's move on to what's happening in the auto sector, which is seeing a boost thanks to the new GST reforms. My colleague Danish Anand was at a car showroom in New Delhi to gauge the mood on the ground. Let's take a look at this report.
Like PM Modi mentioned on Sunday, the GST Bachat Utsav has begun, and right now I'm present at Bagga Link Hyundai here in the national capital. First of all, I'd like to show you that how this dealership is ready to welcome all the prospective car buyers, and as soon as you step inside this dealership, there will be a feeling of festivities all around. And you can see today is the first day of the Navratra. The Mata's statue has been positioned here. Besides this, you can see all the walls and the roof of this dealership is completely decked up in festivities. But if you were waiting to buy a car from a very long time, then this is the best opportunity for you to buy a car, as Hyundai has announced massive discounts on its entire portfolio of cars, and this discount is in the range from 70,000 to almost 2 lakh rupees. But to talk more about it, that how the dealerships are preparing for the sudden surge, we have been joined by Mr. Zubair Khan, who's the senior sales manager at this dealership. So many thanks for speaking to NDTV Profit.
Yeah.
First of all, please tell us that how are you preparing to deliver so many cars to the buyers?
First of all, happy Navratras to all viewers, and a special thank you for Mr. Narendra Modi ji, who has been taken the step to reduce GST. That will definitely help to increase our business. You know, people are waiting since last almost say around 21 days in Shraddh period also, so waiting for this auspicious day. So it will definitely increase our business, and you see the decoration and everything is being done, and people are coming here for taking delivery. We have updated the booking status since last morning. Customers are coming here to waiting on this auspicious day. People are taking delivery. So everything is being done, and you see the whole showroom is full of the customers.
So how many cars are you expected to deliver today?
Today we are expecting around 15 to 20 deliveries. All it's been lined up, and just we will free the customer in next 15 minutes.
We'll also try speaking to a few customers, but before that, I would like to tell you that there is a good over and above discount that the company is offering. It is not just a GST cut that Hyundai is passing on to its customers, but the company has gone above and beyond that GST rate cut, and they're also giving a season discount.
Right, thanks so much for that, Danish. And now these reduced GST rates are set to ease medical bills too, with the government completely exempting 36 life-saving drugs from GST. My colleague Tanushka Dutta sent us this ground report recording responses of many senior citizens and pharmacists alike. Let's take a look.
Your medical bill is set to become cheaper at this point, which comes as a huge relief with the new GST reforms. These GST reforms, also termed as next generation GST by the Prime Minister, is a great saving opportunity and boon rather that has been given as a festival gift to the citizens of this country. We do understand that medicines earlier used to be in the tax slab of 12% and 18%, but now it has been slashed down to 5%. There are also 36 life-saving drugs which have been completely exempted from any sort of taxes.
I feel the medicines that we need at this age, around when we're senior citizens, we need a lot of medicines, and these are quite expensive at the moment, but we can now happily say we are buying it in a much, from today onwards, we are buying it in much cheaper slab.
It's a very welcome step. We were hoping
in last years also that GST should reduce on the life-saving drugs also and general medicines. This is a basic necessity for a living life. So therefore, we welcome this statement of reducing on GST on the medical medicines.
Now, of course, this is all going to benefit us all because we buy in bulk actually. There is a list of 36 essential drugs and GST is reduced on them. So it is going to really benefit all of us.
मैम दरअसल क्या है कि जो हमारा पुराना जीएसटी था 12% उसको अब हमने रिड्यूस करके 5% कर दिया और अब हमारे जितने भी बिल्स हैं उन सब पर चेंज होकर एमआरपी जो है वो चेंज होकर जा रही है तो उसके बाद जो हम उसको चेंज करके ही कस्टमर को दे रहे हैं.
So of course, you know, overall the healthcare sector is set to look forward to complete relief in terms of customers as well with this GST reform.
Thanks so much for that, Tanushka. Meanwhile, let's take a look at how the markets fared today. We saw benchmark indices closing on a weak note today with the Nifty settling around 25,200. The Sensex declined by 466 points, to close at 82,160 level. The Nifty IT was the biggest loser, pressured by the hike in the H-1B visa fees announced over the weekend by President Donald Trump. Now, most other sectors also finished in the red, but to give us more details, my colleague Puneet now joining us with a detailed market roundup of the day.
Well, it was a day that started under pressure and that was largely led by global factors. We did see some key indexes like the Nifty IT getting impacted, but all of these factors contributed to pressure on the Nifty 50 today. And while we have closed just a tad above 25,200, that was a short-term relief to say the least. We saw over 125-point reduction on the Nifty 50 today. The IT sector was dominating the news flow after President Trump hiked the H-1B visa fee from roughly about $1,000 to over $100,000, and with IT being one of the major employers in USA of H-1B visa applicants, we did see some pressure there as well. While brokerages did come out with mixed views, with certain brokerages affirming that we could see a margin impact, there were some that also saw that the reduction of H-1B visa applicants since 2016 by IT companies like TCS and Infosys does give them some pivot. That'll be something to watch out for in the near term. Amongst others, we did see that the top Nifty losers because of that were largely Tech Mahindra and TCS, but we also saw some positive gains as well on stocks like Adani Enterprises as well as something like an Eternal that did give some positive fillip to the Nifty 50 today. When you look at the mid-cap and the small-cap index, both ended in the red, and that was largely led by individual stocks that were impacted. For the mid-cap 150, we saw the drag was led by Mphasis and Coforge for similar reasons that we mentioned for the Nifty 50, while for the small cap, K Fintech as well as Zentar were the biggest losers during the trading day. When you look at some key sectoral indices, and there's no surprise, the Nifty IT was the top sectoral loser today, and amongst others, we also saw some positive fillip on the other side, led by the Nifty Energy, which was led by Adani Power as well as Adani Green. Adani Power did have the stock split impact as well, but apart from that as well, it was up 20% in trade today. When you look at some other key sectoral losers, Nifty IT had LTIMindtree, Mphasis as well, which got impacted because of the H-1B visa hike. While we also saw the Nifty Metal gain for the third straight in a row, the Nifty Media snapped a two-day gaining streak. Overall, when you see the setup tomorrow, it'll be important if we can maintain that 25,200 level. So we might want some positive fillip into tomorrow's session, but largely a day dominated by global news flow. And tomorrow as well, 25,200 as well as 25,100 will be the key levels to watch out for.
Thanks, Puneet, for that. Meanwhile, brokerages have given mixed reactions to the H-1B visa fee hike announced by President Donald Trump on Saturday. As part of his latest crackdown on immigration, the US president signed a proclamation imposing a $100,000 fee, that's over 88 lakh rupees, on new H-1B visa applicants. Puneet is back with us to share the varied perspectives that we saw from brokerages on how this move could impact the market and Indian IT companies. Puneet, over to you.
they're not seeing a very meaningful impact because from 2016 onwards, a lot of IT companies began to reduce their exposure to H1B. Now, that was largely led by onshoring as well as hiring local talent in US, as well as increasing the exposure of offsite with GCCs as one of the key growth areas as well. So largely when you see Investec as a brokerage firm, they mentioned that they don't see any meaningful impact. But a couple of key points that they made, they have mentioned they're expecting a potentially higher US wage inflation going forward. They're also seeing that operating models for all these IT companies will start to see changes and undergo meaningful changes going forward. And they're expecting that a higher local hiring for someone like the IT companies like TCS amongst others and higher on-site wage inflation will likely impact margins, at least in the near term. That's what the key aspect that Investec is making. Someone like a Citi as well, largely, we have spoken to the analyst on our channel multiple times, Mr. Surendra, and he seems to be highlighting that there are pressures for the IT space as a whole. They're seeing multiple potential impacts because of this. They've highlighted that the cost of doing business is largely expected to go up, but this will be passed to clients probably with a lag, and hence you could see some impact on profits because of that. Higher nearshoring as well as offshoring, which essentially means that you will hire in India and they'll be working for those clients in the US as well as GCCs, is a very likely outcome that seems to be a common theory amongst others. And the margins will of course get impacted because of that as well. The last key point that they're making is, the competitiveness in the global context doesn't change, and that seems to be another key point that, we are one of the lowest cost IT services companies essentially. So that will be a key that will be a strength that will continue to maintain as well. Finally, in terms of brokerages, I want to highlight Jefferies as well, because they've highlighted that 7 to 12% of the business will be renegotiated in the next 3 to 5 years, and they've highlighted that a change in operating model is likely for the Indian IT companies, and that seems to be a gist of a clutch of brokerages making some key points. So while near-term impact is limited, once the clarity emerges, operating models of all these IT companies will start to see a change, and that will be the other one to watch out for how this happens going forward as well.
Right, Puneet, thanks so much for that. And to understand the exact impact of new H1B visa fees and whether this move is a setback for Indian IT or an opportunity to reinvent itself, don't miss the big question this evening, airing live at 6 p.m. with my colleague Vikram Moza. The show will explore if the American dream is becoming unattainable for Indian tech professionals amid these new visa fee hikes. Don't forget to catch that. And moving on, Adani Group Chairman Gautam Adani reacted to SEBI's report clearing the group of all allegations in the Hindenburg case. He said that a 2-year-long cloud has finally been lifted. The chairman expressed deep gratitude to his supporters, calling the outcome a testament to their unwavering faith. Let's listen in.
Today, a cloud that had hung over us for more than 2 years has been lifted. SEBI comprehensive investigations has concluded by rejecting all allegations contained in the Hindenburg report from January 2023. It was your unwavering faith, your strength, and your belief in the company that sustained us throughout this period. This outcome belongs not only to the Adani Group, but also individually to each of you who stood by us, and for that support, I am deeply thankful.
And India is set to intensify its trade negotiations with the United States as Commerce and Industry Minister Piyush Goyal led a delegation to Washington today. The delegation aims to advance ongoing talks and work towards the early conclusion of a mutually beneficial trade agreement. My colleague Rishabh joining us now with more details on this extremely significant development.
Absolutely, a crucial set of negotiations is starting today in Washington, led by, of course, India's Commerce Minister Piyush Goyal. Apart from that, you will be joined by India's Chief Negotiator Rajesh Agarwal. Both of them will be leading a delegation for trade talks with the US. Now, this comes right after you had the likes of Assistant US Trade Representative Brendan Lynch visit India last week. He was in town for about a day-long talks that he had with the Indian side. This came after a certain thaw came in the relations between India and the US. There was some sort of barriers that had come up, some sort of issues that had propped up. But with the top leadership, with President Trump and Prime Minister Modi also reconciling, that has gone away and trade talks are back on the fast track.
Trade talks back on the fast track. That's what we're hearing from my colleague Rishabh. And that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of
Hello and welcome to NDTV Profit. You're watching Know Your Company, that is KYC. Let's understand what's on the list today. A JK Tyre. Why a JK Tyre? But before we get to that, I'm Hiral Datia and with me is Puneet Jewellery. An interesting conversation, Puneet. This is going to be because very critical to understand what's happening with the tyre space. A beneficiary in terms of the GST reductions as well. And the kind of demand surge that people are anticipating. But first up, let's quickly take the quick questions as to what we will talk to the management about as well. The significance when it comes to the Chennai plant, specifically with regards to global exports, because this is one of the most crucial plants that they have. This is where they have incrementally been adding capacity as well, and the exposure it has to global markets. On number two, the key aspects in terms of international market growth and the aspirations that the company is sitting on. And very lastly, the acquisitions that the company is looking to make in the global markets.
Well, the other couple of key aspects on the conversation was on radialization. Now, that's essentially a key process where a lot of passenger car tires have already moved to this one. It's a process where the global markets are already radialized enough in the industry, and JK seems to be the pioneer in this because they were the first one to introduce radial tires back in 1999 and have been steadily increasing that. For trucks and buses, they're already at 66. And finally, in terms of the growth of the premium tires, and this one is key because that is going to be a big margin booster going forward as well. So these are the key 5 things that you need to watch out from the conversation with the management today.
Absolutely. But now let's tell the viewers what JK Tyre is all about. Part of the JK organization, the company was founded in 1951. It actually co-produced the first radial tire in 1977, and it's present in nearly 105 countries over almost 230 distributors. In fact, if you talk about the global distributors as well and the network that they have, it's a strong network of almost nearly 6,000 dealers that we're talking about, and 650 plus dedicated brand shops. In fact, overall, if you talk about the 11 globally benchmarked sustainable manufacturing facility is what the company has. In fact, it has 9 in India, 2 in Mexico, and they collectively produce nearly 35 million tires annually.
Well, the other one is about the plants, right? Because we specifically mentioned that 9 of them are in India. They are spread across the globe. We visited the Chennai plant and we're going to get you some perspective from the shop floor. But apart from that as well, Uttarakhand as well as Karnataka are 2 key main geographies for the company. They have 3 plants each in these geographies. So they are expanding across north as well as the southern markets through these plants. The other one's Rajasthan, there where they have another plant. Madhya Pradesh is largely for the passenger car radial space, while Mexico, they had 3 plants earlier. They've closed down 1 just about 18 months ago, but still holding on to 2 plants. And this was another key plant because this is a key one to export to geographies like the US, and which is key for the tire maker. Similar strategy that what the other tire makers have also employed at this particular point of time.
Right. Now taking this into consideration, let's quickly understand the revenue mix of the company as well. 2 segments that we're talking about, replacement as well as OEM and exports. Now, clearly, if you talk about replacements, it has come down slightly, but has remained above that 60% mark. We're somewhere, it's gone up, I would say, from 61% to 64%. In terms of OEMs, that has remained stable. And your exports have seen a marginal downtick from 16% to 14%. But in terms of the replacement market, that becomes the key, and that is why you're talking about the revenue mix and the benefits of GST that could be coming in, especially when the replacement market picks up.
And they are a beneficiary directly for the GST rate cut, but also indirectly because through automobiles as well, which has seen a GST rate cut as well. So that's definitely one. The other aspect is on consolidated financial, and here you'll see that between FY24 and 25, the company did see a dip in its margins from roughly about 14% all the way down to 11.3%. And that's largely because of higher commodity costs. So natural rubber prices went through the roof in FY25, and they were a key impact because of that. Apart from that as well, you saw that across the industry where the growth was largely absent because of such high costs. So the companies had to absorb that particular point of time, and India is a natural rubber scarcity market. Roughly 40 to 45% of natural rubber is imported in the country, and hence we are a direct impact essentially of the commodity higher cost. So you said you did see that impact. Profits were also impacted because of that, but largely in terms of revenue from FY23, it was a strong jump going into FY24, and hopefully the company is hoping essentially that FY26 will be a similar growth trajectory.
Interesting numbers here, but let's quickly look at the rating parameters from here on. What are we going to talk about? First up, what we analyze is the income statement, balance sheet, cash flow and return ratios. These are the top 4 parameters that we will be considering. And post that, the shareholding, street credentials, valuation and the street coverage. All of this absolutely important 8 parameters that we're looking at. But Puneet, why don't you start with the income statement?
Well, largely, I did mention that, the natural rubber price impact was seen in FY25, and you did see the margins correct because of that. But, in terms of the 3-year CAGR performance, especially on the profits, we saw FY25 largely being a drag on the overall 3-year CAGR, but it still maintained a good 36% CAGR on profits, and hence we've given this a neutral rating largely because of that aspect. Since the pandemic, the company has invested heavily in machines, they've invested in cost optimization, and therefore you're seeing almost the EBITDA CAGR being double of their revenue growth in this particular point of time. But a lot more work needs to be done, and since because of that aspect as well as the recovery, while in Q1 we did see some key aspects of that, it is still something to watch out for. So hence we've given this a neutral because of that aspect. Quarter on quarter as well, you did see on a YY basis margins getting impacted, but a still better performance compared to what analysts had estimated. But we'll need some more evidence essentially of growth coming back in this year, and hence we've given this a neutral for now.
Okay. Let's look at the balance sheet. We have given the balance sheet a thumbs up. If you talk about the equity, that's remained pretty much stable. In fact, their debt to equity ratio has somewhere improved marginally, so that is a positive. Their cash and bank from almost a 266 odd crores that actually nearly reached a 770, and that's where it's remained stable in that 770 kind of range in the last 2 years, which is again a strong one. Borrowings also somewhere that FY23 number has remained stable at FY25. And in terms of your other equity, that has seen a sharp improvement. So it's categorically telling you that the financials are improving when you're seeing that EBITDA base, which is improving. And secondly, when your cash and bank is remaining steady and improving. And third, your debt to equity, that has somewhere improved as well. So that again is another positive that we are tracking over here. And hence a thumbs up that comes in on the balance sheet front as well, Puneet.
Well, similar to the income statement, we have seen the cash flow also impacted in FY25. So when you look at the cash flow from operations to profit ratio, that fell to 45%. It was roughly around 94 in FY23, went to 77, and largely was expected to stabilize at that level. So we've given this a neutral as well, largely to see if that evidence does pan out of maintaining over a 70% cash flow to operations to profit ratio, and hence a neutral for now. The net cash flow did come back into the positive trajectory, but marginally of 15 crores, but still some evidence needed for the company. But definitely on the trajectory, it is expected, and the commentary by the management is positive to improve the cash flow from operations as well going into this year. Okay, so that's a neutral rating coming in for cash flows. Let's look at the return ratios as well. Again, a neutral one coming in there because clearly FY24, they've seen a number as high as 19%. Currently in FY25, they're at around 13%. How soon will they be able to get to that 19% mark is the key question over here, and hence a pretty neutral rating is what we've given on the return on capital employed. In terms of shareholding as well, Hiral, we have seen that the management has been able to maintain largely over a 50% share, while we would as investors like a lot more over 70%, but the company has mentioned that 51 seems to be what they are holding on to right now. Because of the reduction that we saw essentially in FY23 going into FY24, we did see the foreign investors largely enter the stock and have maintained that 16% share, while the public has continued and retail investors essentially have continued to show promise in the stock as well. So we've given this a thumbs up. Largely seems to be that both the domestic investors as well as foreign investors waiting for a turnaround in the stock, as well as in terms of financials this year.
And if you talk about street credentials and up, because taking the retail investors into consideration, it has given good returns to them as well. In the last 1 month, 16% is the kind of up move that you've seen on a JK Tyre. Last 5 years, 6.6 times is the downtake that you've seen as well. But at least from a 1 month perspective, a good up move. 6 months as well. So the trajectory over the last 6 months has started pretty positively.
Yes, definitely. And in terms of when you look at the valuations as well for JK Tyre and effectively in this particular point of time, and just a slight correction that it's actually been up 5.6 times over the last 5 years. So stock has and largely it got impacted because of the pandemic, but there is one in terms of the valuations priced attractively, to say the least, because we have seen largely an absence of growth in FY25. Currently the PE is roughly between 12.6 to 13 times price to earnings for 1 year forward in terms of valuations, and this is largely in line with what's happened in the 5-year term as well historically. So the street seems to be just waiting on the sidelines to see that the company's large measures that they've done actually result and come into the financials as well. So we've given this a thumbs up compared to peers which trade roughly between 18 to 22 times price to earnings. This does give the comfort of the absence of growth, and once growth comes back, you should start seeing that valuation perk up as well.
Valuation should perk up, but if you have to talk about the street credentials in terms of the coverage, 4 buy calls, 1 hold, an average upside of around 9%. So not major brokerages that are covering the counter right now, and hence a neutral rating.
And that largely seems to be the key aspect, right? Because we have seen foreign investors holding it, but absence of brokerage in this particular time or point of time as well.
So whether you have further coverage that comes in initiations is what we need to see. But very quickly, in terms of your first 4 parameters, your income statement, cash flow, return ratios are a neutral. It's your balance sheet only, which is a thumbs up, which is a very good strength. Your shareholding, street credentials, valuation, again, a thumbs up. Your coverage is slightly neutral over here. So an overall 6 on 8, which is also a very good rating that we've given JK Tyre, Puneet.
And we are very stringent with the rating, so definitely a key one aspect as well. But we did have a chance to speak to Mr. Anshuman Singhania. He's the managing director of JK Tyres, and we did visit the company at the shop floor in Chennai, a key factory which is almost 40% of his exports. Listen in to what he had to say. My first question largely about this facility, because it's almost 20% of the company's revenue, but very importantly, as you also mentioned to us, that it's almost 30 to 40% of exports that go from this one facility itself. Talk to us about the importance of the facility as well as the kind of technology investments that you've done over the last decade or so in this, which will lead to your international operations as well from the exports from this facility.
Sure. We have invested almost around 2,600 crores in this facility, and we are here making truck radial tires and passenger radial tires, which we are catering to the domestic and exporting as well. So here we are making a lot of premium range tires in the truck space and even in the passenger space, which we are serving in the domestic market. And here our premiumization has been one of the key drivers to enable us in terms of putting capacities. We are also having almost around 1,400 crores investments which are currently going on in our 2 locations, which will start ramping up from Q3 onwards. In terms of our markets in export, we are exporting to about 100 countries. We are exporting to UAE, we are exporting to Brazil, Latin America, Mexico, and also new markets in EU and UK. And we would be one of the largest exporter for truck radial tires from India in the EU and UK as we speak.
In terms of international operations, and we are actually seeing one of the major processes about this one as well in terms of truck radial tires. International operations has been one of the most focal points for all tire makers. Roughly for you, 16% comes from the export market. How do you see the medium-term trajectory of this? Because we are seeing one of the key on-sites of Europe demand coming back as well. Do you feel that going forward specifically, you will be one of the big beneficiaries of this, and with this new plant, a lot of that will be serviced with?
Yeah, with our capacities coming in stream, not only for the domestic market we'll be able to cater, but we'll be able to export as well. And as I said that our EU and UK are new markets, we are making a lot of development sizes for those markets. And there we are a very, very negligible player. So we will have a lot of headroom to, as we go forward, to play in those markets.
Specifically, one of the key aspects, in the early 2000s was acquisitions by the tire makers in international markets, both to gain technology as well as to gain capacity in those markets. You also done that with Tornel in Mexico, and you have 2 facilities there operating as well. Talk to us a little bit about, your perspective of acquisitions, if any, in the future, because we seem to be that Indian tire makers seem to have grown leaps and bounds with technology so much, including yourself, that you all don't need to actually do another technologically enabled acquisition. How do you see that tire industry has evolved, and if you can talk to us about JK Tires as well with that aspect, and what do you feel in the near future? Will it be brownfield capacity expansion similar to yours?
So look, in terms of our capacity increase, here we are equipped for a brownfield in all our locations for the time being, and international acquisitions are very tempting. We are always on a horizon to look at international acquisitions. As you said, that Tornel has been a very successful acquisition where we have turned around the whole company, Tornel Mexico. Here we are always looking out in the horizon for newer opportunities which come by.
But largely, would you say that you all don't actually need to do any acquisitions, which would be very, at least in the current market scenario, for absorption of technology? And India has, with yourself as well, in the tire space, done a lot of innovation enough now, so that, and we could drive that in the future?
You see, it's just not about the technology acquisition. It is also serving the market faster. We have been very successful in turning around acquired companies. We've acquired 3 companies, and we have turned it around in no time. So technology, yes, plays a very important role, but serving the market in terms of a ready facility with an upgradation also plays a very important role.
You were the first, pioneers essentially into radial tire space, launched back in 1999 for you all. And since then, now I think 2/3 of the market has become radial in terms of the trucks and buses. Do you expect that share will continue to grow substantially? And how does that, augur well in terms of the new investments that will be going in those for the international market as well? Do you think that for the international space, it will largely be the radial tires that will be getting absorbed as we see in the market?
Largely, well, I'll break this up into 2. One is the commercial, which is the truck tires, and the other one is the passenger car tires. In the passenger car tire, right now in the international market, it is almost become 98 to 99% radialized, and so is India. And but coming to the truck radial tires, right now we see that 56% is in India radialized, and rest is bias, non-radial. We have a feel that the bias is going to remain at a long run also, long-term bias is going to remain because India still is a very price-sensitive market, and the applications in which the bias goes, namely mining application, even the construction application, their bias is still going to be staying. Well, in the international market, radialization in the truck space has happened more in America, more towards Europe. There are some pockets where truck bias tires are still at a play, where we are also participating.
You did mention about realization in America as well as in Europe, and I just want to pinpoint Europe for a bit because it's a huge market for the tire industries. What is your current share, if any? You can give us some perspective on Europe specifically. How much is your revenue in terms of percentage that comes from there? And do you expect that we'll start seeing a revival, because that market has been depressed for almost the last 3 to 4 years? Do you expect that will be the next growth engine coming back for the tire industry, and what would that be for you?
Yeah, so as I said, that Europe is a new market for us. We will be certainly developing a lot of new sizes for the European market. And there, I would say that we are a very, very small player in terms of the market share. And we would be definitely developing that. But from India to EU and from India to UK, we are one of the largest exporters in terms of truck radial tires.
So you should be seeing a big benefit because of the FTAs also, right, which has now been coming in for
Yeah, sure. The FTAs are also giving the Indian producers a good advantage over rest of the other countries here, and we will surely be taking advantage of that.
You mentioned about truck and bus radial because that's almost bread and butter, 50-55% of your revenue. But the passenger car space has also been very, very prominent for you. Over 30% of your revenue comes from there. We've seen, GST rate cut that will benefit all automobiles. Do you expect that could grow faster? Because we are starting to see a lot of offshoots for the commercial vehicle space as well. So how do you see those in the current demand conditions for India specifically?
Sure. I think GST has been a very welcoming move from the government. And GST brings in a lot of cash in hand for the consumer. And the consumer-facing goods like passenger car tires, the 2-3-wheeler tires, and even the farm tires will definitely see a good positive flip as we go along. And even in the commercial vehicle, there will be a lot of movement. And we measure it by BTKM, which is billion ton per kilometer. And there we have seen there is a sharp increase in terms of percentage, which is an indicator of freight movement. And with this GST, I think there will be a lot of movement amongst our major highways with our large and small and medium transporters. So there is a lot of positive growth coming in from there.
So that's the management, in conversation with Puneet as well. But clearly, Puneet, the company has indicated they're very small in the European market, and that's what they want to develop, a big beneficiary of trucks and bus exports from Europe, to exports to Europe from India. So that's the business that investors should be looking at as well. But completely out of time. But that's it. It's a wrap on this edition of Know Your Company. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. I'll start on a bit of a philosophical note. When two elephants fight, it is the grass beneath them that suffers. But when it rains, it's the grass that soaks in the moisture first. And here, I'm talking about things in the context of the reform agenda that the government has had. First, in the form of the income tax cuts that were announced and the introduction of the new tax regime. And now, today, with the rollout of GST 2.0, where a host of items are getting cheaper and have gotten cheaper. The point is that a lot of people at the bottom of the pyramid and those that are earning less money than a lot of other people that have been at it for a while will get those benefits first. It's a little hard to tabulate and estimate how much each person will benefit because it depends on their spending habits, spending patterns. But then you can expect that each one of them will benefit in some form or the other. They might just discover that they have more money at the end of the month. So on this program, what we're going to try and do is we're going to talk about people who are just in their first few years of work, how they can utilize this extra amount of money that they might save to save for the future. And we'll also talk about how you can help your house help and people that work for you to save for their future and possibly for their children as well. Joining me in the first conversation today is Prableen Bajpai, the founder of FinFix Research. Prableen, thanks so much for taking the time and happy festive season to you. Let me start by asking you about what you think will occur. Do you agree with my thesis that people at the bottom of the pyramid will benefit first from this GST 2.0 rollout?
Hi, Alex, and happy festivities, happy Navratras to all your viewers and you. Absolutely. I think, Alex, like you said, it's a two-layered strategy that the government has brought in. The number one is the 12 lakh limit on the taxation. And I think a lot of youngsters, especially because our focus today is on the youngsters, fall in that bracket. So in terms of tax saving, a lot of them will benefit. And then, of course, now coming to the GST rate cuts, definitely, I think a lot of our lifestyle spending, things which are used on a daily basis, on a weekly, or things which are, which are on the list, which is a recurrent purchase, I think they get impacted and there is going to be a positive impact. I'll give you an example here, Alex. For example, very basic things like a gym membership. So for a lot of youth out there, who are into fitness, and today's generation is very fitness conscious, an annual membership, for example, of a gym is, let's say, 50,000 rupees. So the earlier GST was 18% now, which comes down to 5%. So from that 9,000 on 50,000, it is a straight saving of 6,500 rupees because with 5,000, the GST only is 2,500. So on an annual basis, it's a simple example, but your 6,500 gets saved on a simple gym membership if it's costing you 50,000. Likewise, Alex, you and me, we both wear spectacles. A lot of kids today, the Gen Z we are talking about, I think it's not a luxury item. It is a necessity. And spectacles, all of these things have attracted a higher rate of GST. These are things which are used, which are, you want to change them, let's say after 6 months, 1 year. Such commodities also get impacted with the lower GST coming down to 5%. So I think there is going to be a positive impact. And let's say there's going to be a saving for everyone on a monthly budget. There will be few things which on an annual basis you save, but it still gets added eventually to your average monthly saving. And Alex, if let's say you're not even utilizing that to invest, but if you're utilizing it to consume more, then it still impacts and it's a multiplier impact on the economy. So overall, I think it's a plus, and definitely one of the, articles I was reading, in fact, the government website, it read lighter on the pocket and brighter for the future. So I think that surely is the case.
What a beautiful way to put it. I think we can, these are essentially lists, right, of things that you think that people should be doing probably. So let's run through them. A few things that people can think of doing in order of priority if they're just starting out, if they've not done anything so far. And this is something perfectly normal for somebody who's 25, 26. But what should they do now?
Number one is always a buffer fund, Alex, because if you don't have that little kitty of yours for a rainy day, you will disrupt your process of long-term compounding long-term wealth creation. So having a little buffer for yourself is very essential. So when you start earning, set aside some money. Let it be 50,000, 1 lakh, but have some money aside, which is not through your credit card. So, you should not be swiping your credit card for a rainy day. So you have some savings and then you start investing. Compounding is really, really, it's a magical mechanism, Alex. And I think if these kids can utilize it, it can be really so good for them. Increasingly, we are seeing that, more and more people want to retire early. So I think if these kids are even starting at 25 and they want to work till 50, so 25 years of compounding, if they're getting, I think a small SIP of 10,000 can give them 1.7 crores today. And if they're doing a step up, even with a 10% step up, it can create 3 to 4 CR for them. The idea is to get into that habit, and eventually as their salaries increase, they increase their investments. And of course, parallelly keep doing your EPF or PPF, whatever you are. I think health plans, that's so good that, now GST will not be there. So it'll be easier for them to get a health cover. There will be some saving there. I think these are the basic essentials. But I think one thing they should be avoiding here is, the comfort with debt has risen over the years. And it's very important that you have your buffer and then you start investing, and invest as small as maybe just 1,000 rupees a month, but you must start investing for the long term.
Yeah, I mean, I was discussing this today as well when I went to an electronics store to talk about GST. Somebody asked me, I was thinking maybe I should buy something. And I said, maybe I'll use my UPI application. And he said, you don't want to use your credit card and buy it on EMI? The thinking is different, right? So the age difference between the two of us was about 7-8 years, but the thinking is different. So, but having said that, if people are thinking of starting an investment, often in the mutual fund space, probably the difficulty is a problem of plenty and you get paralyzed by that choice that you have. So would you suggest keeping it simple at the start is the best way to go?
Yep, absolutely. Keep it simple as possible. For the long-term portfolio, Alex, what I would suggest is pick 4 passives and pick 1 active. So you take a large cap index, an equal weight index, pick a mid cap index. Right in the beginning, you may not choose a small cap index, but let's say if you are okay with it and investing for the long term, like really like 10, 12, 15 years, then you can go in for a small cap index as well. 1 gold passive, and then just complement it with a multi-cap fund. So, passives along with 1 active fund. And I think for kids, because for them, it will be a 15, 20-year portfolio, I think this can really give them the right start, and it can create the wealth that they want for the future. And for the near term, if their goals are like, let's say 3 to 5 years, then maybe just a multi-asset fund or a flexi cap fund. And that will be really good. I mean, nothing else required. So no chasing with passives, there will be no chasing. But I will also add one thing, when they start investing, please plant a tree, maybe a mahogany tree, and expect the same kind of growth. So if you can't expect the tree to grow overnight, please don't expect your money also to grow overnight. So you'll require that 20 years for the tree and same for your wealth.
So I'm glad that you said tree and not money plant, because you can see a money plant grow pretty quickly. But having said that, I noticed that you've talked about a Nifty 50 equal weight index, which is an interesting thing, right? Because, and just so that everybody understands what we're talking about, a normal Nifty 50 index fund would invest in the 50 constituents of the Nifty 50 in the proportion of the market capitalization. And what is market capitalization? It's simply the number of shares number of open shares of a particular company multiplied by the share price. So Reliance Industries would go into the lakh crore. And so therefore it has a 9% of weightage on the Nifty 50. An HDFC Bank would have a higher than 10% weightage on the Nifty 50. So therefore every 100 rupees that you put in gets 9 rupees goes towards Reliance Industries, 10 plus goes to HDFC Bank, and so on and so forth. What Prableen is talking about is an equal weight. So there is basically a 2% weightage for everything. And that is advantageous. But I also see that you've put a mid-cap index and a 250 small-cap index. Why not go for a 500 and have the entire basket?
Alex, so equal weight, because number one, that, on a rolling return basis, if you see, equal weight has outperformed Nifty 50 by 3 to 4%. So I feel it's a very simple strategy to get the top 50 companies in the country and yet have a premium to the base index, which is Nifty 50. Now, why not 500 because it's a market cap based index. So eventually, the percentage of how big the company size is, like you said, the market cap, that plays a role. So I feel if you're dividing, number one, for the investor, it's easy to understand. In his mind, he knows that, okay, this is small cap, and that is why it's, going through more volatile times. This is mid cap. The growth path will be different, Alex. So I think, and then, you can even have these different schemes for different goals. So large cap can still be used for something which is 5 to 7 years away. But for example, your mid cap and small cap, want to keep it for 10 years plus. So, and that is why not a Nifty 500, to give them, more choice and also understand how the performance is and also reduce the prominence of the larger names ultimately in the portfolio, because any other actively managed scheme will always have, large caps. Any other small cap will also have large caps to manage liquidity. And so, overall, the overlaps can also be reduced like this.
So the propensity, Prableen, of the, I don't mean this in any bad fashion, but the fact is that FOMO exists. And if you see your neighbor, if you see your friend making an investment in the next multi-bagger stock or a mutual fund scheme that is done incredibly well, the tendency is that you will want to do that. But you're suggesting don't get into that race, don't get into that trap, and keep it simple. At some point in the future, they can do that. But how do you avoid that FOMO?
It's hard for this generation, Alex, honestly speaking, practically, because, they are the generation who are born around with internet all around. They're used to seeing influencers. They are used to seeing Insta videos. And there's so much information which is not correct. And you tend to believe that. And honestly, all that advice is much more exciting than probably the conversation that you and me are having. So there is, of course, that tendency to follow these things, and also the tendency, because there is so much that you want to show to the world through social media, that you want to make quick money. So, telling them that it's a slow, boring process, it doesn't really go with the mindset that they have. But the reality is that you still have to, if you are looking to build serious wealth for yourself, then these have to be avoided. That, you're looking at your neighbor or your friend and he's telling you that, I made 30%, 50% in the last 6 months. Maybe he got lucky, not necessarily that you're going to be lucky. And is that wealth sustainable? Maybe one time it works, maybe twice. Is it a sustainable process? If it was, maybe everybody was doing it. So I think there has to be, you have to be very level-headed. You have to understand that fine, maybe 10% of overall what you're investing, you can keep that money to try out, to experiment, because that's not a bad thing, Alex. Sometimes you learn it the hard way, but then you can only do it with that little proportion. Don't try and, sort of gamble with the overall portfolio of yours. And it's important to, of course, tell yourself that it is a slow process and you have to invest according to goals and you have to give it time. So if the mahogany can grow, then probably their money can. If that can't, then this will also not happen.
That's a good analogy. And incidentally, over the weekend, Prableen, I met somebody who has compared Kabir's verses to finance and financial literacy. And I can't, of course, quote Kabir. I'm not skilled enough and I don't have the language. But effectively what he was saying is, good advice is not something that people often gravitate towards. And that is the reason why the person who is selling milk has to go down the streets and keep calling to people saying, please buy milk. Whereas the person who is buying alcohol can sit and sell it wherever they are. But having said that, Prableen, thanks so much for joining me today. Absolute pleasure as always.
Likewise. Thank you, Alex.
All right. Well, that was how you should think about starting investing. But there's also a good thought that you might have if you want to do some good this festive season, and that is to set your house help, the people that are helping you at home, maybe somebody who's driving your car, assisting you in other ways, get them started on the road to financial freedom and get them started on the road to creating long-term wealth. Joining me on this conversation is Sharad Tandon, the founder at Invest at Ease. Thanks so much, Sharad, for taking the time, and season's greetings to you and your family and your team. Let me start by this, because a lot of people do this already. They devote a certain portion of the salary that they pay out to their employees, and I'm calling them employees because ultimately that's what they are, for long-term investing. Do you think that this is a good idea?
Alex, thanks for your wishes, and I heartily reciprocate to you, your team, and especially the viewers who listen to us every now and then. And luckily, I know the person you are referring to. I think you met Vinayak Sapre, where we were trying to quote Kabir. So Vinayak is one person I recruited in the industry long time back.
Very
So
good.
I know him
Good
since
to hear.
30 years. But as Vinayak probably in his conversation and Pravleen was pointing to look at is create more wealth. Lot of us in our own rights are doing that in a unorganized bits and bits pieces. We might not always be doing it very regularly, but my suggestion to everyone in my society, in my circle is very simple. You realize the value of the person or a househelp only when that person or she is not there. For some reason she has taken off, you will suddenly realize the value. And why these house helps in our, say, ancestral places were continuing for generations together? Because our family was taking care of them. Those were different times. The times have changed. Now, how do we go about doing it in a very organized way? My suggestion is Navratri probably is the right time to start that, learning from all the goddesses, blessings and things around, festivities being around. And on top of it, the GST cut which has happened, which is going to be implemented from today onwards, probably in a sense will enable all of us to handhold the households as the GST portion of their consumable, whatever they have, milk, rice, pulses, whatever they use, reduce their budget constraint to some extent. And can we sort of handhold them to migrate them from that saving, which is going to incidentally happen over a period of time, and start sort of providing them knowledge where and how to save. So that's a good way to start our own sort of charitable journey, if I may put that word, but for our own goods.
Okay, so let's get into the nitty-gritties of it. How would you suggest making a start? And ultimately, it's hard to explain to people who've not experienced the financial markets before why in a certain month their investments and whatever they've done can drop as much as 10-15%.
So how to do is a tough thing, and how to sort of coax them to get into it. And first thing first, we need to start enabling them by opening a bank account, which in a sense, this present regime has done it by opening Jan Dhan accounts. We need to sort of help them get a PAN card and Aadhaar if they don't have already. If they have, it's good. That's the first step. Now, second step is what I have done in my household is start providing my house helps, my drivers, my support structure, pay their salaries in the bank accounts directly. So what it does is it gives you a chunkier money at a go. Second, it reduces their risk of keeping the cash, which is very critical in these households. So understand the risk they are typically carrying. One is they are sort of vulnerable part of the society because there is a health and a social risk which comes to it. Their jobs are not as stable as a lot of other jobs. And in a sense, as you rightly pointed out, they are not that much literate in terms of financial knowledge, know-how. Now, we need to park into these step-by-step risks, reduce them, and then handhold gradually. And what this step will read is, once they have a chunkier money from, say, 10 households where they work in their accounts, they will know how much money they earn and how much they want to spend. Is the second logical step on it.
If we're talking about savings, what instruments are appropriate? Because they're familiar with things like fixed deposits at the very least, right? Or recurring deposits. Mutual funds might be something that they've never considered. So would you say that a micro SIP, for example, which a lot of mutual funds have started offering, is something that they should do as well?
So first step first, Alex. So one of the drawbacks of their own surrounding is they don't have enough of health coverage. Fortunately, Ayushman covers to an extent. Can we migrate them to something which are government-backed institutions, schemes like, say, pension plans? You can do that. Can we ask them to take additional health cover? So the things you were saying, can I invest or should I invest on their behalf? Probably these are things where you can fund them additionally. If they have a savings account, all these things will fall in place. Because for them, that 2 lakh cover, 50,000 additional accidental benefit makes a lot of difference. And that's what is a step one. Second, as you rightly pointed out, they probably are affair with the FDs, or at least the worst case situation, the piggy bank, गुल्लक है घर में, कभी बचपन में किया था. Can we migrate them to a post office deposit first? They need some liquidity. Now, MF SIPs, even if we want to migrate to the Chotu SIP or Choti SIP, which we want to call 250 rupees a month, is easily doable in now if you have KYC documents. KYC again will form into PAN and Aadhaar, and then it goes on. And what sort of structures or schemes to look in those Choti SIP is predominantly help them create one corpus of around say 6 months, 7 months of their expenses into a liquid fund, which is slightly better than the bank accounts they'll keep. Then help them migrate into balance advantage fund. And that corpus should be at least 2 to 3 years of their expenses, because the stability in the job is not there. It can be for multiple reasons. Sudden expenses, some owner of the house moving out, someone new coming, you don't get a job, whatever it is, whatnot. So those are two buckets you fill, then you migrate to something else. While this might appear as a lower sort of generating returns, but it's still better than not making any returns. The other step which we probably all of us can do easily is, if there is a person in their society, their family kid, can we handhold them for a proper educations? If they are already going to schools, can we handhold them to get them into providing them for books, their proper place to sit and study, teach them, handhold them. Also, parallelly, most of these house helps are not from the local geography. Can we enable them to learn an alternate language so their life becomes slightly easier in the landscape they are moving around?
Upskilling is what you're suggesting.
Yeah.
But speaking about investments, and you've mentioned quite a few good options, but one thing that a lot of people have done for generations, for years now, is to give gold, right? I know my mom-in-law did the same thing a while back. She's bought gold and she's given it to a house help who incidentally has been with her for 2 decades. And you spoke about that as well. Why should you not do that?
Okay, so problem in doing that, once in a while you'll do that, they will hold on to it. But if you make a regular habit, more often than not, if you look at their economic situation, they will go and pawn it. Once they pawn it, the problem is they will get into an interest rate fiasco, because that local money lender will charge them heavy interest. And then it's a vicious cycle, all of us know. So typically avoid that. Occasions like kids' marriage, some anniversary in your house, some good wishes, something event happening, please be generous, give it to them. But don't make it a regular habit to give them a gold as a sort of in lieu of, I say, gifts or salaries, because more often than not, because of their condition, they'll tend to go and pawn it to the money lender.
Yeah. Sharad, you know, I've had this same conversation on this show before, and I'm hoping that people are aware of the rates of interest that are charged by these money lenders, by loan sharks that are, by the way, operating off the books and completely illegal. Are you familiar with the rates? Because I am. And do you want to suggest what people can do before maybe even facilitating some of these investments? If you find that your house help is mired in debt, in your opinion, should you help them extricate themselves?
So I'll give you an example, and this is not like I'm trying to create here. The society we stay, there are a lot of security guards who come from, say, northern belt of India. And most of them often have this situation. So what we have done in our society itself is up to 6 months of their salary, we give them as an advance, and we recover around 50% of salary every month till the time loan is repaid. So that's one way to do it. Probably we can replicate the model in your own house helps. We have, all of us in some form and size would have been doing that. But you rightly pointed out, for them to get out of that vicious cycle, we will have to pull them out of the debt trap one. It's individuals' choice how much and how far you want to pull them out, because that will depend on individual house help, how much he or she is in debt at that point of time.
Got it. Okay. And I think we've covered quite a bit of ground. Sharad, thanks so much for joining me today, and pleasure having you.
My pleasure, Alex, as always.
All right, that brings us to the end of this edition of Your Money Matters. Let us know what you think, and as always, your comments are welcome. Do stay tuned. This is NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
देश के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है। हम वो सामान खरीदें जो मेड इन इंडिया। हर दुकान को स्वदेशी से सजाना है। जब ये होगा तो भारत तेजी से विकसित होगा।
Hi, thanks so much for joining in. You're watching NDTV Profit. At the onset, let me wish all of you a very happy festive season, a happy Navratra to everybody tuning in. And as you can see behind me, I am at an electronics store. Today is D-Day. It is the day that GST 2.0 rolls out. And I've been thinking for a while, I need a new phone, I need a couple of new gadgets. And I usually am the tech guy. I go and spend on tech that I don't really need. But incidentally, my co-anchor Mahima has been browsing a couple of sections here because I think she wants to figure out what to buy. I've never seen her so excited about tech before, and the reason is that it's all gotten cheaper. Quite a few of these things have gotten cheaper. Let me go across to her and find out what she's looking at. Mahima, what have you been looking at?
Right, so a couple of things, Alex, that I'm looking at right now. Of course, the first three things where we've seen GST cuts coming in from that 28% mark to 12% mark. The first one being TV, more than the 32-inch. Something like this, yes. And then you have your ACs and dishwashers. So people who are worried about washing dishes at home and who have no maids will be happy with the GST cut that we've seen. So these three things, of course. And of course, we've not seen any GST cut on phones. But yes, I think iPhone 17 is something that people are looking at right now for sure.
So that's one. So on the one hand, you have the GST cuts. On the other hand, you have festive offers that kick in.
Exactly.
So it's a great time to be going out and figuring out what you want, get your lists in order. But it's not just consumer electronics. And we'll be speaking with the director of Vijay Sales very shortly. Mr. Nilesh Gupta is going to be joining us. But we've also got conversations lined up for you to talk about the automotive space and also the snack space, because all of that is getting cheaper. Let's run through the list very quickly. What gets cheaper today?
So a lot of things, like from a toothbrush in your bathroom to a butter in your fridge, everything gets cheaper because that includes a lot of milk, dairy items. That includes your paneer, chocolates, ice creams, butter, cheese, etc. So that's from the staple pack. You're also seeing snacks getting cheaper in terms of where they were at 12% earlier will now be charged at 5% mark. Apart from that, you have your clothing, apparel below that 2,500 mark will go down in terms of where GST rate stands to that 5% mark again. In terms of where your hotel industry stands in terms of the consumption space, well, where your ticket size is below that 7,500 mark, that gets cheaper too. So a lot of items for sure, Alex, getting cheaper from today, and this marks the onset of festive season as well. Navratri kicking in, making things cheaper. And that will, in general, boost demand. Yeah. That's what we've been hearing from analysts and management as well.
And also people on the ground. We've got from the automotive space, Mr. Sandeep Kumar Bafna, who's the Chairman and Managing Director of Fort Point Automotive Cars. Sir, thanks so much for taking the time. Mr. Bafna, can you give me a sense of the offers that are currently underway? And of course, today is the day when all of those prices tick down. What is the kind of initial response that you are seeing? Do you see feet on the ground? And what is your anticipation for sales this festive season?
So let me start with two-wheelers. We are dealers for Hero. Suddenly, there has been a spike in inquiries. And in fact, today we are expecting a lot of payments to pour in for the Hero bikes. In fact, we've launched also 2-3 new products. And which were in waiting for such a long time, and that now would change the whole concept of things which are going to happen. On the car front, we are dealers for Maruti. In Maruti Suzuki, as you are aware, that there is a reduction in GST, plus the company has also reduced prices, which came to us as a big surprise. We thought that just the GST benefit would go to the customer, but the company has also reduced their prices on the product. Along with that, even though it is up to December only, but I feel that along with that, they will give a lot of other discounts and benefits which are also coming in. Financing is becoming cheap today. Mahindra Finance has announced that there won't be any processing charges from today onwards up till the end of the season. So I feel that this whole thing is
a combination of the prices going down on account of GST, as well as the discounts that are kicking in from the festive side, a lowering of the processing fees. All of that is exciting, to say the very least. I'll come back to you in just a bit. We're joined in store right now by Mr. Nilesh Gupta, as I've pointed out. Nilesh, thanks so much for taking the time. It's an exciting time because I think normally on a Monday at 12 o'clock, it's not as busy as it is today. It's deserted, and today is a different story. Can you take us through where you think the biggest excitement is going to be after the GST cuts and coupled with the festive fervor that you would expect?
So I think this time is going to be a double whammy. One is the GST cut and second the festival also. Plus, last 15 days have been very poor because people who are waiting for today onwards to buy. So I think the basic action is going to be in large screen televisions, because there, in rupee term, is the nice.
What is it like?
In large screen televisions, it is nearly 50 to 18,000 rupee, which has come down 65, 75 inches and above. In rupee term, it's really very. Air conditioners, it could be there, but air conditioners, we'll have to wait for the weather to be on the favorable side. Be on the favorable side. Yes. But even dishwasher, that's a category which we saw in the rise after COVID. I think that's something which will become a staple food, like how everybody has washing machine in the house, a dishwasher will also come in.
Those are where your flat screen TVs are, the big ones, right? So let's walk across to that segment as well while we're talking about it. And Mr. Gupta, really the question that I have is that alongside all of this, there is a call by the Prime Minister to make local and to buy Indian. Yes. There are more technological products, more consumer electronics that are being made in India, but there are still a lot of manufacturers that make outside and sell here. So in the catalog that you have, do you have more products than you had 2 years back that are made in India?
So now if you see in the last 3-4 years, the government ensured that all these products, 90% of them are made in India. Okay. Because they made it impossible to import because the duties were high. So everybody has set up the pack. You see in our industry, a lot of factories have been set up. So all the televisions which you see here, except for the last screens, pretty very last screens, 100 inches and above, which has minuscule say. It's all make in India. And even the 100 inches in few factories a few brands are assembling here. So everybody is having make in India. Even if you see Apple phones, yeah, most of the phones are now make in India. In fact, we are exporting it also. So accordingly, I think everything what you see here is, if not 90%, at least 75-80% is make it.
Absolutely. We'll come back to you, Mr. Gupta. We're also joined by Rishabh Jain, who's the CFO of Bikaji Foods, joining us now. Mr. Jain, hi. Good afternoon to you, and thank you so much for joining. Just want to understand the demand that we're seeing in the snacking space. We talked about how auto space is picking up, how consumer durable space is picking up, but snacking is one industry that, when I was speaking to one of the FMCG analysts, he said that snacking is going to be that one industry that's going to see a lot of demand boost because of GST 2.0. Your view with regards to the demand that's coming in already?
So we are also expecting the same. So it's a peak Diwali season, and we see a lot of gifting and all during this season. And there is good cut from 12 and 18% to 5%. It's more of simplification and ease of doing business. So we see that it will be good Diwali this year for all the snacks players.
Let me ask you this though, when you're talking about the price points where there is going to be an impact for GST in the snacking space, the expectation is that these are all small ticket items. So as manufacturers, would you say that it's easier to control it with the grammage, and on the packet you're not likely to see too big of a change, and so therefore the question is, how does that bolster demand?
So basically we have two type of overall packs. So family pack and impulse pack. So family pack is all about 20 rupees, which is 200 grams, 400 grams, which are MRP driven brand. So we have reduced MRP from today, and for impulse pack we increase grammage. That's what we're doing, and we are committed to pass on completely to the consumers. That's what we are targeting.
Okay, Mr. Gupta, coming back to you, last time when we spoke, we were talking about how, you are confident that this time you'll do a 20% growth apart from what you did last year. Considering now that, pre-bookings would have probably come in, do you think that 20% can be higher?
No. 20% will not see. 20% was also a very large goal.
Yes.
So I think even if you achieve that, it's a great thing. But now the expectation is we will be able to do it 20% because what has happened is last 15 days has been very dull. So there's a backlog over there. So that will also come in. So in this period, I'm sure this time 15 to 20% seems plausible.
And what, according to you, will drive that mix? Do you see it changing because, as you pointed out, these televisions get cheaper? Will that
Lastly, television will drive. Mobiles will drive, laptops will drive, and appliances traditionally is a Diwali product. So all refrigerators, washing machines is also going to drive. And if weather supports, normally in this part of the country, west part, November is a mini summer. Second summer. So if that happens, then with a 10% reduction in the GST, I think AC will also kick off.
Do you think the premiumization part will also pick up from here on because now we are seeing, some products getting cheaper? Do you think a consumer would want to move towards a more premium TV or, a better energy efficient AC?
So that was always happening in the last post-COVID, but now it's going to take more further ahead. For the simple reason is a person who was planning to buy 55 now will think of buying a 65, and a 65 guy would move up to 75.
Exactly.
Okay, I do want to ask about that same question to Mr. Bafna because Mr. Bafna, you were pointing out that there are more inquiries, but in the two segments that you mentioned, in the two-wheeler space and in the four-wheeler space, Maruti Suzuki, they are anticipating that the small cars will really see a bump in demand. I'm just wondering what you're seeing on the ground.
So actually what has happened is we've seen in the last couple of days a lot of two-wheeler customers walking into our showroom, and after the price reduction announcement 3 days ago by Maruti Suzuki, the product like Espresso being below 3 lakh rupees, customers are moving from two-wheelers to four-wheelers. I mean, they're at least inquiring, and at least 10% to 15% conversions should take place. So I feel that a lot of upward movement and upward movement in the four-wheeler industry and from the two-wheeler to four-wheeler would also happen. Along with that, you see that the 100cc motorcycles, now people are moving to 125cc with this price reduction. So we find that the inquiries in the 125cc also has increased. With Hero coming out with the new Glamour, customers are instead of going for the Splendor 110, they're moving for the 125cc. So you see that whole upward movement has started, and I feel that this would really break a lot of barriers, which earlier customers were not thinking of buying a four-wheeler are now moving towards that. And in the rural segment also, we are seeing a lot of inquiry growth.
Excellent. And it's great to hear that from a dealership that is representing both the largest car maker as well as the largest two-wheeler manufacturer, among the largest two-wheeler manufacturers. But speaking about auto and speaking about premiumization, we've got a ground report for you from Tamil Nadu, the implications of GST 2.0 rolling out. Sam Daniels has this report. Check it out.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down and it has put the cars in an accessible range for the first-time buyers.
You think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous 2 terms. Right. So I think all these moves are more people-centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here.
Yes.
How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind?
Margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST, plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now. And for electric vehicles?
Exactly, sir. But electric, they maintaining the same for 5%. So there is no ups and downs. But electric is a future.
Thank you very much for your time. And dealers expect a bumper booking this festive season, and customers can't really wait to avail this GST tax cut, which have just made cars affordable.
Okay, so that's the ground report coming in straight from Tamil Nadu, and dealers are expecting a bumper booking season is what the word is coming
Bachat
in.
Bonanza.
Bachat Bonanza, exactly. And speaking of Bachat Bonanza, Mr. Gupta, we were talking about how people will be able to save on large TVs. But considering that this savings will happen, I believe what Alex was indicating was that small items will also pick up sales, because the moment they save in some item, they would want to spend that in some other item. What is your expectation? What are the other items that you're seeing demand spur up in?
So this time what we are seeing is a person who would have not wanted to buy a television this Diwali. Will buy because he'll say, oh, I always wanted that 75-inch television. So he'll come and go. And whatever he was planning to buy, whether it's a refrigerator or a mobile, he'll buy. And secondly, when he comes in the store, and because he's going to go for EMI, so there are full chance that if he had come to buy a 55 inches, he'll upgrade to 65 or even 75. And likewise, it will go up. Plus, then possibly he may also look out for a headphone. Because today in television, the most important thing is at night when one is sleeping and one is watching, the problem is what to do with the sound.
Like you're speaking from experience, sir. But the question is, that's an interesting point that you raise, which is a lot of people are buying white goods with a credit card or with an EMI. So what is the mix right now for large ticket items like phones and like televisions, as you pointed out?
I think 70% of our sale comes from EMIs. Okay. Whether it's a credit card or a plain paper finance. And 70 to 75% is coming from EMI.
And this is across... I know this is for you, but would you say that this is the trend across the industry as well?
In fact, people don't want to pay down payment. People are only looking out for zero down payment, zero processing fees schemes.
Even in terms of, the overall discounting that's taking place, a lot of online platforms giving big discount, festive season discounts. Can you give us a sense in terms of the average percentage of discounts that we're seeing on these electronic items?
See, basically, anywhere between say 5 to 15-20% is the norm which is happening. But more than direct discounting, it is the EMI schemes which are being more sweetened. As I said, zero down payment and a longer tenor. Now it's no longer restricted to 8-12. It's going to 18, even 24 months. And in the case of one brand, Sony, they give pay by screen size. So if you're buying a 55 inches, you have to pay 5,500 per month. Okay. So it goes up to that size. So accordingly, what is happening now? This is also another form of discount. Then there are exchange offers which comes up. So in mobile, you will always find whatever your value of the mobile is there, plus there's a bump up of 2,000, 3,000, 4,000. So all this forms a part of a discount. And this is what Diwali makes so big for our industry.
Okay, interesting. One more question that I had with you was with regards to where e-commerce and quick commerce trends are picking up, right? Because recently a report came out which said that DMart Ready and Amazon now has the highest average discount, which is at 23%. So this might not impact the larger appliances, overall, but smaller appliances, for example, a mixer grinder, might see some kind of impact there. Any trend that you're picking up?
See, frankly speaking, wherever there's a maximum discount,
possibly they are not the best of the brands which the consumers would want. There will be selective brands where the maximum discounts are happening.
Correct.
So for those consumers who just want a temporary or they are looking for discounts, yes, that becomes a go-to. But otherwise, a consumer normally would want to buy, and as we are saying, premiumization is happening. So in premiumization, even the brand premiumization is happening. A consumer wants to go in for a better brand also.
Right.
Interesting. Okay. Now, in terms of the other ground report that we are bringing to you is with regards to a ground report that's coming in from Rishabh, who's spoken to somewhere in Karol Bagh with regards to where Bikaner Wala stands. Listen to what he has to say.
Right, bright and early here at Karol Bagh. We are at the prominent corner location of Bikaner Wala in Karol Bagh on the morning of September 22nd, which is when the new GST rates kick in. And as you can see behind me, you have the poster put up by the restaurant that says GST Uphar, which translates to a GST gift. And it does say that Saste Hue cakes, pastries or namkeens, which translates to cheaper cakes, pastries as well as savory items. Let's head inside and figure out what sort of benefits will be passed on to the consumers with this. Right, I'm joined by the management of Bikaner Wala here in Karol Bagh. Sir, आज से सितंबर 22 हो गई है, नए GST रेट्स आ रहे हैं. आप किन किन प्रोडक्ट्स पे कम हो रहा है रेट और आपकी क्या उम्मीदें हैं?
हमारी नमकीन जो 12% थी वो अब 5% पे हो गई, तो 7% हम लेस कर दिए उस पर. और कुकीज़ वगैरह जो 18% में आते थे वो भी 5% हो गए, तो 13% उसको भी हमने कम कर दिया है. MRP अभी फ़िलहाल वही लगी हुई है, लेकिन हम कस्टमर को जो बिलिंग कर रहे हैं वो लेस करके ही कर रहे हैं.
तो एक बार हम स्टिकर प्राइस और बिल देख लेते हैं सर. तो जैसे आप बोल रहे हैं बिस्किट्स, नमकीन, केक्स वगैरह पे जी
ये लगे हैं. ये कुकीज़ है, इसके MRP है 144. जब हम कस्टमर को दे रहे हैं, ये बिल है इसका 144 का 128 का दे रहे हैं. 13% इसमें हमने लेस कर दिया है.
इससे आपको क्या लगता है कि और कस्टमर का जो डिमांड है वो बढ़ेगा?
बिल्कुल बढ़ेगा जी, नेचुरल बढ़ेगा. अगर कस्टमर का पैसा बच रहा है तो वो कहीं न कहीं खर्च करेंगे ही, खाने पीने में और में सब चीज़ों में करेंगे वो.
और आज तो पहला दिन है इस GST रेट कट का. यही चलता रहेगा आगे तक? आगे फेस्टिव सीजन भी आ रहा है.
बिल्कुल बिल्कुल आगे भी यही चलेगा. हमारी उम्मीद है कि ग्राहक आए और अपना पैसा बचाए और ज़्यादा से ज़्यादा मिठाइयाँ, नमकीन, बिस्किट्स और ये खरीदे, ताकि अपने बच्चों के लिए भी दिवाली पे और पे नवरात्रों में ये सारी चीज़ें घर में ले जाएं.
Right, there you have it. All sorts of GST rate cut benefits being passed on to the end consumers. You have savory items that are getting cheaper, about 7 to 8% at least. Shops starting today, starting September 22nd, have started passing on these benefits to the customers, and they have done so in hopes of higher footfall and better traction ahead of the coming festive as well as wedding season.
All right. Well, thanks so much, Rishabh, for getting us that update. It's certainly given us some food for thought. And the other thing that, of course, we've got is our list of things to maybe look at buying. Of course, that depends on what your EMIs this month are. Mahima, I'll ask you that after the show is done. Nilesh, thank you so much for joining us today. And of course, Mr. Sandeep Kumar, thanks so much for joining us as well. And viewers, do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है.
मैं आपका बात से सहमत हूं. उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Good evening and welcome to The Big Question. I'm Vikram Oza here on NDTV Profit. We're asking the big question tonight. It's about the pronouncements coming through from the US. President Donald Trump has slapped this $100,000 one-time fee on new H-1B visas. Now, one side believes that this is a move that could hit Indian IT giants like TCS and Infosys and Wipro and Tech Mahindra, and it could hit where it hurts. We've seen the impact play out on the stocks in trade today, but others are dismissing it as a knee-jerk reaction. So that other side believes that the hit will not be material in nature. For the American side, this move is aimed at protecting American jobs and to raise their wages. Companies over there are being accused of layoffs while hiring thousands on H-1B visas. So, on the whole, it begs the question for thousands of Indian professionals, is this the real end of the American dream? For the Indian tech industry, is it a body blow? Or is it a chance to reinvent and finally keep the best talent at home? And that's what we're asking. Is Trump shutting the door, or is he throwing the door open for India to rise stronger? We're tackling that on The Big Question tonight. And of course, to debate this, we have an excellent panel. Former High Commissioner, Ambassador Veena Sikri is joining us for the diplomatic and geopolitical perspective. From the industry side, we have Abhik Datta, the CEO of Tech Plus Talent. He's got this insider's view on how Indian IT is going to adapt. Kathleen Deroser is with us, a migration expert. She's going to explain what the policy means for professionals. Sandeep Agarwal also with us, fund manager and co-founder at Sovelo Investment Management. He's going to explain the impact on the Indian IT sector and what this means for the industry at large. And also to round out this panel is Aditya Mishra, Managing Director of CL HR Services. He tracks talent flows and, of course, the job market. He tracks very closely. So we have a perfect mix of voices to tackle the big question tonight. And good evening to all of you. Abhik, to you first. What do you see this as? Is it a hit to our IT sector, or you see it as an opportunity?
I think in a short term, it is a little bit of a blow, right? You have people who are aspiring to go to US, the on-site dream of a typical Indian IT engineer. So in the short term, it could be seen as a little bit of a hit, but in the mid to long term, this could be an opportunity. You could have brilliant minds staying at home. What we call as the reverse brain drain could happen, provided they get the kind of, the ecosystem they get in the US. So I would say a knee-jerk reaction as of now for the short term, but mid to long term, this could be an opportunity.
Kathleen, you tell me, from your vantage point as a migration expert, what does this mean for the thousands of Indian aspirants who are dreaming of a life in the United States? Is that American dream slipping away for them, or you think it's a temporary blip?
I wouldn't say that it's just shut or the American dream is no longer, visible. But yes, I would like to give you an information here that, H-1B is not only the route. There are alternatives such as L1, which is intra-company transfer, O1 visa for people, those who have extraordinary skill sets, F1 for STEM OPT, leading towards work authorization. So many US companies, those who are already exploring remote hiring models. So for international professionals, it is not necessarily to be on the US soil in order to work for the US clients. Right? So working, of course, it is still going to be there. You can still work with your US clients. But when it comes to American dream, I wouldn't say it's a no-no, but it's a churning of the skill sets. One, you have to upgrade your skills. The other, you have to upgrade your certificates. And of course, if you are, that much skilled enough, of course, welcome in America. And America do require immigrants because they do not have enough, whether it's IT, whether it's healthcare, or resources, whether where the research is a lot of stuff. So they do require people. It's not the end of the American dream.
So Kathleen, you're saying it's not the end of the American dream. You think the companies are going to pay that much more for the highly skilled workers that would be still sought after from India?
Absolutely.
Okay.
Absolutely.
Aditya, you tell me, you work closely with Indian IT professionals, you work with IT firms. How does this hit the ground reality right now? Companies like TCS, Infosys, Wipro, are they going to rethink their American hiring model?
No, I think it's definitely in the short term going to be a challenge for all of them because they need to take this to their clients and talk to them. If they are willing to bear the cost of additional H-1Bs, which is not going to be that easy because the amount is so steep. So the future that I see is of these IT giants reconfiguring their work and moving a significantly larger portion of the work to offshore. Think of a situation during the COVID times where all the people were working offshore, the onshore component was negligible. So probably that's going to happen little more than what it is happening now. Secondly, our Indian IT industry over the last decade has been able to perfect that model of combining offshore as well as the local hiring nearshore models. So that's going to continue for all these companies. And thirdly, I see that many of these large organizations are going to accelerate the process of setting up GCCs in India. And the small companies are going to probably work with a lot more shared GCC models. Maybe some new business model is going to evolve where companies like this, TCS, Accenture, Wipro, and all of these are going to really come up with some innovative model with which they're going to work. Just one more point I want to add here is that I see this as a long term is going to hurt US economy in a significant way. So I think this is going to change sooner than later.
So you think the ground reality is going to kind of get shaken up in the short term. But then perhaps the need is so acute as far as the US is concerned, something that Kathleen is also highlighting. We might see a return as well to how things were, but we'll have to wait it out because things can rapidly change under the Trump administration. Sandeep, how do you see this fee? How is it playing out in stock valuations now of the IT giants, TCS, Infosys, Wipro? We've seen a knee-jerk overreaction. That kind of risk is something that the markets are still kind of digesting. Do you see a medium-term structural headwind playing out over here, or do you think it could last longer?
So, hi, good evening, and thanks for having me on the show. So I agree with all the previous speakers and mostly with what Aditya has said. So my view is this, that, Trump has done probably a calculation that, 100,000 divided by 6 is around $16,000, $17,000. So he believes that that is the amount which Indian companies save. So he has done basic maths and he has arrived at a conclusion that whatever is the margin, that is the additional cost. If I put, then, they will hire from US. But the problem is, where is their talent available in the US, and are they willing to work at the same amount of time and give same amount of time which Indian people who go from here, and you keep changing their bases every 7 days, 15 days, and they are very, very flexible to do that. Whether it will be possible, because I come from a background of running a tech company myself in 2008 to 10, and I have seen all this. It is very difficult to find people locally and to, even make them fungible to move from one location to other and all those things. So I think this is a mathematical call which has been taken rather than a practical call. In my view, yes, short term, as Aditya mentioned, there will be knee-jerk reaction, there will be a lot of execution challenge, but I honestly believe that it gives a very good edge to the Indian large companies the way, COVID gave. So if you see 2 times, 3 times, this is the 3rd time they are getting great chance to improve things. So before 2014, most of these companies were at 30-35% local resource, which after Trump came, he started pushing for more local. So all of these companies have largely reduced the use of H1Bs in last 7, 8, 10 years. Then after COVID, they went to the client and said that, see, we can do everything via online. Why you need people here? And I think now this is the 3rd opportunity where they can say that we have always executed well, so why you need resources here? So by the way, if you see the maths, we make more money when we execute from India in terms of profit. Billing rates are definitely much higher. In on-site, it is 3x, but still we make more money here. So they will be happy to do. So in short term, this growth for the large companies, which is already, 4-5%, that can look maybe 0 to 2% because of delays in decision making and lower billing rate. But I don't see challenge on the profitability side. And I think, it is very good. More GCC will open, more jobs will be created here. So in long run and medium term, it will be more profitable and better. in short term, it will look like a dent on revenue growth.
So what you're saying, Sandeep, is that local sourcing actually works out better for these IT companies, and perhaps that's the way of the future. It would work out, though, as far as the Americans are concerned, why they are bringing in this kind of fee right now. They're saying that people like the Indians are taking away their jobs. So that part is not going to get addressed, Sandeep. And if not, then are they going to come in with something bigger than just a $100,000 fee like the kind that they're talking about now?
I think, they are trying to solve which doesn't exist. So where is joblessness? I mean, you see, to find even 100 people, it is a task. You have to hire so many consultants. It is a big challenge. Means I know this. You can find this data from annual reports of the companies also. It is almost impossible to get people. So there is no unemployment in tech after Lehman crisis. So what problem you are trying to solve? There is no problem which you are trying to solve. So I don't know what will be the impact. So in my view, it will be in long run US. Means I think that US companies will be biggest loser in this, and I think that's the reason Section C has been introduced very smartly. They will probably give exemption to all big tech in recruiting from in H1B visa exemption, which they have already created a space for that. So I agree with what Aditya said clearly. Either it will be a loss for US companies in long run, or they will use that Section C to get exemption.
Let me see what the diplomatic vision for this is. Ambassador Sikri is with us as well. Ambassador, the H1B visa, it's actually been a bridge between India and the US. For decades it has been. Now, do you see this steep fee of $100,000? Is it becoming just another trade barrier, or is it part of a larger message actually from Washington? Because that's what we're trying to decode, that America does not want foreign workers, not Indians, who account for the more than 70% of the H1B visas that go out from the US.
Well, I think we've seen definitely with President Trump that his unpredictability is his very predictability. And he has been trying to play to his MAGA constituency to show to them that he's bringing more and more American jobs. And I think the main factor of putting in this huge figure of $100,000 as compared to $2,000 to $5,000 earlier is to show that he's creating more jobs. But I feel that this is going to boomerang. This is going to be a self-goal for the US, because it's going to lead to, first of all, more and more global data centers coming up in India, and the offshoring is going to only increase, and it's not going to create the kind of jobs in America that they're looking for. Because if you look at the facts and figures, then many of the people who had gone on H1B visas, they stay on to open their own startups in other companies, and they are employing huge numbers of American citizens in their companies. And I think that has also been shown by many that the kind of jobs that the H-1B visa holders are going for in the big tech companies are not those jobs that can be filled by any American citizen.
Right.
And that is why the numbers of H-1B visas have been going down. Yes, because American companies are trying more and more to fulfill the president's desire to have local citizens. But to some extent, the local citizens are not available. And people, in fact, are talking about the state of American education, which makes it a situation where local citizens who have gone through that system are not available for those kind of entry-level and other jobs that the H-1B visa people are fulfilling. So I do not think that it is going to be, kind of a situation that's going to help American employment. But certainly, I think one problem we have to look at from the diplomatic point of view, that much of this is being used by the MAGA lobby to create a lot of anti-Indianism, and Indians are now being blamed or criticized, and this is what we have to work for. All of us have to work together to make sure that this image of India doesn't get hurt at all, because Indian citizens, when they go abroad, are known to be the best for assimilation with the local population, very quiet, very hardworking, not involved in crime in any way. So this is the image that we have to build upon and to preserve. And I think that this use of the 100,000, we already see that within 24 and 48 hours, the government of USA has pushed back. And they're showing now that this is not going to be implemented for at least 1 year, because the current round for this year has already been awarded, and it's only the next lottery cycle, which will take place sometime next year, which is going to be at least 10 to 12 months.
These are political exigencies, according to you, Ambassador, because this is happening at a time even when India and the US are trying to go ahead with a trade deal. So is that possible now that we are likely to see India push back diplomatically on this, or you don't see the need for India to do this? The US will do it all on its own. Because as far as domestic policy is concerned, and we're talking about the exigencies of a MAGA, that part of the political debate in the US, that has to be satiated, and this perhaps is part of that. But in terms of implementation, perhaps it's not, they are going to hold back, like you're saying.
They are going to hold back on implementation, and I certainly think that they will do close consultations with the big companies of America, Amazon, Microsoft, and others who are utilizing these H-1B visas, and they will come up. I don't see it's going to be that kind of a major problem that is being projected now. For example, let's take even on the trade, when we've made it very clear that on the trade and tariffs, we're not going to, harm the interests of the Indian farmer or the dairy producer or the fisherman and so on. But even so, we see that, there's so much pressure to buy corn from America. And the reason being that China has stopped buying the corn. China is using their leverage with the large amounts of corn that they purchase from America. They've stopped it and they've started buying it from Brazil and other countries.
Correct.
So the American MAGA constituents who are in the rural areas are hugely upset and are in a very, very difficult position.
Correct.
So America is trying to turn the pressure on India and it's putting all kinds of pressure on India. But our Commerce Minister is right now on his way there and there are going to be talks. And I'm sure he'll be able to explain India's situation on this matter.
Right.
So these are aspects we have to understand and appreciate. We do value the American relationship a lot. It is the most important relationship for us. But we do value our own internal concerns as well, whether it is the interest of the H-1B visa holders, whether it's the interest of the farmers or the fishermen or the dairy producers. So these kind of things in the relationship do go on a lot. President Trump
but do they work in tandem, Ambassador? Because we're talking about a whole bunch of different issues, especially when you're talking about this trade deal. So when you talk about an H-1B visa issue as well, do you think it's going to be tackled at the level of this trade deal as well? And how important is it going to be to kind of take that on?
It is going, all these things are tackled together. It's not that they're tackled at the same forum because there might be different interlocutors on the American and Indian side for each of the issues. But in the end, it all comes to what President Trump is thinking. And we do know that he has, telephoned our Prime Minister on his birthday. They've had a good exchange of views. Our Prime Minister has responded very warmly. Now, Commerce Minister is on its way. Let's see how the trade negotiations go. If the trade negotiations go well and there's a trade deal, maybe the 25% tariff on purchasing Russian oil will go.
Yes.
These are something that are going to be tackled simultaneously. It's not going to be one after the other.
So one wonders where this stands in the kind of hierarchy of issues to get sorted out now that you have an H-1B visa fee, which is as high as $100,000. How it kind of forms in the pecking order when you talk about this trade deal now, it's going to be an important piece to track. But as far as professionals are concerned today, Aditya, and do weigh in on this, because you track the hiring and staffing trends very closely, tell us what it means for the aspirations. Thousands of young Indian engineers who are looking at a life perhaps in the US. Do you see these professionals now looking at going to the US differently? The kind of roles, because we talked about offshore and onshore. Now, how are they going to be looking at the possibility of having a life over there, working in some of these firms that they used to?
No, I think there is slowly a shift taking place in their beliefs, in the paradigms. So they're looking at alternatives. Those who are looking to pursue careers abroad, and some of the best of countries, there are probably some equal opportunities which are available internationally. So people are thinking of different alternatives at this point in time. If some of these recent trends are any indicator, the interest or the perception around that American dream as the exclusive way to sort of prosperity and fame and reputation and all of that is slowly, I think, getting replaced by something else. And this is a great opportunity for our own country as well to improve the perception of our education system, of our employment system, the way we deal with entrepreneurs, for example, the way we make finances available for young people, the ecosystem for young and bright talent to prosper here
But
I think it's a great opportunity for our country.
But Aditya, surely we didn't need to wait for something like this to happen because the talent pool has always been there. We have been talking about a demographic dividend at one level, but also our talent and services part of the entire ecosystem has been a driver of our current account deficit as well. How do you see that getting affected? Because now looking at this kind of move, one wonders why we were waiting this long to be able to harness the talent that we produce.
No, I think our country and economy has got many complex issues to deal with.
Which won't go away, right? Which suddenly won't go away. But now the need is acute.
But this is probably every crisis has the potential of becoming an opportunity. So we could do something.
Avik, do you see it like that? Because now if firms cannot send people abroad as easily, now one wonders, will Indian IT and startups, will they start offering more lucrative opportunities at home? How do you see that compensation and demand shifting locally now in India?
For Avik comes in just a small point. The number of unicorns which are there in all over the world, India contributes such a significant part of it.
It does.
So why can't we do many more? Why can't we do a lot more research, development and all of that? The academic ecosystem has to undergo a lot of transformation. So that's the opportunity right now.
It has to go through a transformation, but the need is now. So that's why I'm asking, at this point in time, if firms cannot send people abroad like they used to, as easily as they used to, or not be as expensive as it used to be, then will our ecosystem create more lucrative opportunities here, where compensation and demand are going to shift in a significant way? Abhik, what do you say?
Yeah, I think I would say that, on an immediate basis, if you see the US companies, right, let's say there are 10 jobs in total where H-1B visa people were working, eventually 8 of them are going to be outsourced to India, right? They may hire one person locally, one person in the near shore who could fly down during a weekend and go back to their own countries. But eventually, I see that there will be more offshoring happening as a result of this. And we should all be, looking at this as a blessing in disguise. We should be prepared for creating more startups here at home and, looking at other geographies. Just don't be reliant on US, although the customers in the US are
so then where
exceptionally.
Else? Where else?
I would say, probably look at UK, Europe, Middle East. We are already working, although we are small, but we are already working in all these geographies and probably go big at them. We cannot just be, when I was in TCS like 15, 20 years back, the goal was to not be over dependent on US. That hasn't happened in the last 2 decades. We're still overly dependent on the US, especially the Indian IT industry. I think it is time that we change
Which is
that.
why the big question and the need to change that is now becoming more and more acute. Kathleen, you agree? Do you believe that these skilled professionals are going to pivot? Are they going to go to a Canada or an Australia or a Europe where the economy is not the strongest? But if the US door is closing, will they go to these countries? Or do you think they are going to find more opportunities in India?
So this means the competition is really tougher. So professionals need to polish their skills and certificates. That's one. And one has to be flexible in career location. Where it shouldn't be just the US. We'll be leveraging Canada, Europe, Australia, Middle East again as a strong alternatives. And for aspirants, it is a wake-up call to not put all the eggs in one basket. And a smart aspirant today is going to look at multiple global opportunities. They're not going to stick to only America now.
No, but yes, go on.
Yeah, it's not the end of the American dream.
You were saying
I would say, yeah, I wouldn't say so. I would say it is an evolution. The professionals, those who are future ready, they are globally mobile and skilled. They will find a place in the US or
there's going to be a
elsewhere.
demand for them, you're saying. But does it change the equation for India? From being a talent supplier to the world, can we become a talent destination now? That is the real opportunity that we are talking about with all the startups, all the entrepreneurship that could grow over here. That is the real question, Aditya. Do you think we can do that? And can it happen in a short enough time, not just as a knee-jerk reaction, but yes, using this as a stimulus?
Yeah, I don't think it's going to happen in the short term. It's going to take some time because transformation will have its own time period. But we have to start at some point in time. If we really need to be a developed nation, fully developed in all senses in a holistic manner, then we have to be a talent destination ourselves. Just look at the number of people of Indian origin who are in the R&D organizations in the US. It has been so over a period of multiple decades of certain kind of policy that US has had, and that's how that American dream as a concept has really evolved in the campuses and the families and practically in lives of people. So all of this, maybe there is a time when an Indian dream is going to happen. Yeah, probably it is a few decades away, but
still a few decades away. Yes. Meantime, what do the markets do, Sandeep? Very quickly, if you can sum that up for us, because is it a bigger risk, this Trump's H-1B fee shock, or do you think it's about India's ability to retain and redeploy our top talent, our top tech talent, to redeploy them at home, to retain them here? Is that a bigger risk that the markets see?
No, so, I will quickly summarize. So, number one, on the revenue front, as I said, in large cap, you will see some more lower growth. So, the sector may go out of flavor from the large cap perspective. They will become more of dividend stories for 1 to 2 years. Mid caps also, they are little expensive. So, you will not see much interest because of uncertainty. In a small cap, because the sizes of deals are falling and AI and all very small size deals are coming, so they could be big beneficiary and they can do well. So that is one part. Second, I believe, the platforms which are evolving, you just see the data, Vikram. Microsoft listed in 1986 at $750 million when US was $5 trillion.
Right.
And in our country, Zomato and other platforms are listing 15-20 times of that size with similar size of economy.
Right.
So I'm very confident that some of these talents will, do great here, and it is a great opportunity. I believe we will have a wonderful time. We will not regret this problem. After 6 to 12 months, we will see a lot of new innovations, new platforms coming in.
Ambassador Sikri, a very quick take from you. You think India can use this moment to build its own Silicon Valleys?
Absolutely. That should be our target.
Right.
And that, I think, is happening. These big guys in America, they too will realize that they need our H-1B people, the individual talent.
Sure.
And so they will come to India and set up their bigger centers here.
Right.
And we already know that we are in global competition because the Chinese have already announced a K visa. They want to attract talent to themselves. But in this game, India is far ahead because our people have established themselves in India and abroad as being, quite unique and successful in this way. So we have to leverage that into allowing our Silicon Valleys to grow, whether it is Bengaluru or Hyderabad and Pune and others, and not let this 100,000 be a challenge, but make it into an opportunity.
So this $100,000 H-1B fee, it's turning out to be more than just a number. It's actually a signal for Indian IT. It may, of course, sting in the short term, but it could also force a rethink on where the future lies, in chasing visas abroad or building opportunities at home. But one thing is quite clear, that the American dream is not dead, like Kathleen is also pointing out, but it's definitely becoming more expensive. Whether it's a roadblock, it's a reset, we're going to be watching that space. But my thanks to Ambassador Veena Sikri, Abhik Datta, Kathleen Deroser, Sandeep Agarwal, Aditya Mishra. Thank you for joining us with your insights tonight, and thank you for joining us on The Big Question. I'm Vikram Oza. This has been The Big Question this evening. Thanks for joining us.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahuguna. Now let's get straight into the show. So viewers, benchmark indices closed on a weak note with Nifty settling around 25,200 levels. The Sensex also declined by 466 points to close at 82,160 levels. The Nifty IT sector was the biggest loser, pressured by the hike in the H-1B visa fees announced by President Trump. So most other sectors also finished in the red. The revised GST tax structure took effect as the festive season begins. Now, this is the biggest tax reform since the GST was first launched in 2017. The government has slashed the old 4-slab system into just two main rates, that is 5 and 18%. So daily essentials like milk, paneer, medicines and many food items now attract little to no tax, which means lower bills for households. Vehicles, electronics and appliances will also become cheaper, offering relief to buyers and also a festive boost to the demand. So for businesses, fewer slabs mean simpler compliance, smoother billing and also lower cost in the production and logistics. So manufacturers, retailers and the hospitality sector are expected to gain as reduced taxes encourage more spending. Indian IT companies, especially the mid-caps like Coforge, Persistent, Mphasis, have reassured investors that there will be no material impact of Donald Trump's recently announced $100,000 fee for H-1B visa applications. Now, several IT companies highlighted reduced reliance on the visa program and also increased the local hiring. Now, rating agency Moody's believes that TCS and Infosys, which are India's top leading IT companies, are better equipped to absorb the costs due to the rise in the H-1B visa application fees. Now, what are the reasons? So, there is higher profitability, strong balance sheets, and also increased focus on the local hiring over the last few years. Also, Assistant Vice President at Moody's, Shweta Patodia, said that steep rise in H-1B visa fees will raise operating costs for Indian IT services companies that have the US as their largest and most important market. Next up, we have TVS Holdings. So they have allotted cumulative non-convertible redeemable preference shares via bonus worth 986.5 crore rupees. Now, this bonus issue aims to reward the company's shareholders and also enhance their value. Now, the move is expected to boost investor confidence and also strengthen the company's shareholder base. Now, the bonus shares are non-cumulative, non-convertible and redeemable, providing shareholders with a fixed return on their investment. Now, TVS Holdings' decision to issue bonus shares demonstrates its commitment to sharing its profit with shareholders and also promoting long-term growth. Next stock in focus we have is Shree Refrigerations, and they have received a significant order worth 19 crore rupees from Mascon Dock Shipbuilders. Now, the order is for the supply of turnkey HVAC solutions on board 14 fast petrol vessels. Now, this order is part of their ongoing project to build 14 fast petrol vessels for the Indian Coast Guard. Now, the project is valued at 1,070 crore rupees and Mascot Dock has already begun construction on the vessels. Now, Shree Refrigerations will design, supply and also install the HVAC systems for the vessels, ensuring a comfortable and also safe environment for the crew. Now, this order win is expected to boost Shree Refrigerations' order book and also reinforce its position as a leading provider of HVAC solutions in India. Next shares we'll talk about is of Eternal, and it hit a record high today, extending a strong run that has seen the stock soar 70% from its 52-week low and also surge 325% over its issue price. Now, amid the bullish performance of the stock, several brokerages remain optimistic about the further gains as well. As per Bloomberg, out of 33 analysts tracking the company, 29 have maintained a buy rating and 4 suggest a sell. So the stock's valuation, however, has raised the eyebrows. Eternal trades at a hefty trailing 12-month price to earnings multiple of 993 times. Now, Eternal's quick commerce business, led by Blinkit, has been the star performer and also a major growth driver for the brand. However, despite the growth in business and the stock market, the company's food delivery segment is showing signs of fatigue. Going ahead, losses at Blinkit are expected to decline with visibility on expanding the dark store network to 3,000. Next up, we have Swiggy. So the food delivery market in India is heating up, with Swiggy and Zomato battling for supremacy. Now, amid GST cuts and also the quick commerce boom, investors are wondering which company to bet on. So according to Bank of America, Zomato's quick commerce arm Blinkit is expected to drive the growth and also help the company outpace its peers. Next up, we have Share India Securities, and they have approved an additional investment of 28 crore rupees in its subsidiary, Share India Capital Services. So this investment is expected to boost the growth plans of Share India Capital Services, which provides various financial services including broking, lending and also investment advisory. Now, Share India Securities is a financial services company offering a range of services including equity broking, commodities trading and also mutual fund distribution. The next trade that was buzzing in trade today is Zaggle Prepaid Ocean Services. Also, they have entered into a strategic partnership with the AU Small Finance Bank to launch a co-branded retail credit card and also commercial cards. Now, this partnership aims to provide customized credit card solutions to customers, enhancing their shopping experience and also providing rewards and benefits. So the co-branded credit cards will offer a range of benefits including rewards, cashback and also discounts catering to the diverse needs of the retail and commercial customers. Now, this partnership is expected to strengthen Zaggle's presence in the payments industry and also expand AU Small Finance Bank's customer base. Next stock in focus is Coromandel International Limited. So the board of directors have approved the establishment of a technical monoammonium phosphate plant in Visakhapatnam. Now, this strategic move is expected to enhance the company's production capabilities in the fertilizer segment. Now, the TMAP plant will cater to the growing demand for fertilizers in the agricultural sector. Coromandel International is also a leading player in the Indian fertilizer industry, and this new project underscores its commitment to expanding its operations and also improving its product offerings. So, in addition to the TMAP plant, Coromandel International has also appointed Anirban Debrai as General Counsel and senior management personnel. So Ray brings over 24 years of experience in the company secretarial and legal fields. Now let's shift our focus to Solar World Energy Solutions. They are all set to launch its IPO on September 23 to raise approximately 500 crore rupees from the primary market. Now the company specializes in providing services for installing solar systems, catering to a diverse range of clients, including public sector undertakings, commercial and also industrial organizations. So the IPO price band is fixed between 333 to 351 rupee per share with a market lot of 42 shares. So the issue comprises a fresh issue of 1.25 crore shares worth 440 crore rupees and also an offer for sale of 14 lakh shares amounting to 50 crore rupees. Now, ahead of its launch, the grey market premium for the issue has gained in the last few days, indicating a listing price of 419 rupee apiece at a premium of 19.37% on the upper limit of the price band. Next up, we have Jio Payments Bank. So the subsidiary of Jio Financial, which is a subsidiary of Jio Financial Services, so they have launched a new savings account called Savings Pro. Now this account comes with a higher minimum threshold of 5,000 rupees, catering to customers who want to invest larger amounts. Now the Savings Pro account allows customers to invest up to 1.5 lakh rupee per day, providing a convenient and also a secure way to manage high-value transactions. Now, this move is expected to attract high net worth individuals with businesses looking for a reliable and also an efficient banking solution. Now, Adani Group's impressive stock rally continues, with shares surging up to 10% after the SEBI gave the conglomerate a clean sheet. So SEBI's final report found no evidence of allegations made by the Hindenburg Research and also imposed no penalty on Adani Ports and Special Economic Zone, Adani Power and Adani Enterprises. Now this decision has boosted investor confidence, with Adani Total Gas leading the surge with a 13.27% jump, which is followed by Adani Power with an 8.89% increase. So Adani Enterprises, Adani Green Energy and Adani Ports have also seen significant gains. The Adani Group has announced plans for $60 billion in investments by FY32, focusing on scaling the renewable and transmission infrastructure. Now this move is expected to actually improve a long-term investor confidence and also drive higher multiples across its portfolio. Now let's shift focus to Larsen & Toubro's renewable energy vertical. So they've signed a memorandum of understanding with the Aqua Power to collaborate on the renewables and grid scope of the Yanbu Green Hydrogen Hub in Saudi Arabia. Now this project is a significant step towards promoting renewable energy and also reducing carbon footprint. The Yanbu Green Hydrogen Hub will be a fully integrated facility which is powered entirely by solar and wind energy. The project includes solar PV, wind and battery energy storage plants along with associated substations and also transmission lines. Now L&T's partnership with Aqua Power aims to establish a collaborative framework to design and also achieve optimal configuration for the project. SEPC has secured a significant order worth 443 crore rupees for an irrigation project in Delhi, Bihar. Now, the project titled Jamania to Kakret Gangajal Lift Irrigation Scheme. This aims to enhance the agricultural water availability in the region. Now, the project involves the execution of a water supply scheme under the Zemanian Pump Canal Division, Mohania in Kaimur district. Now, SEPC has a 24-month timeline to complete the project, which is expected to support farmers and also boost agricultural productivity in the region. SEPC's whole-time director, Venkat Ramani Jai Ganesh, expressed his delight in securing this prestigious project, stating that it strengthens the company's position in the water infrastructure sector and also contributes significantly to its order book. Now let's shift focus to the GST 2.0 reform. So they have slashed taxes on two-wheelers, making your next ride more wallet-friendly. Now, effective this Navratri season, which begins today, GST on scooters and motorcycles up to 350cc have dropped from 28% to 18%. Now, that's a game changer for 98% of India's market. From commuters to first-time buyers, Honda's Activa 110 now is cheaper by 7,874 rupees, Dio 125 by 8,042 rupees, and Shine 125 by 7,443 rupees. TVS Jupiter 125 sheds 6,333 for 70,667 ex-showroom price, while Raider 125 and Entoq follow the suit. So Bajaj Platina 110 is down 5,551 rupees to 66,007 rupees. Royal Enfield's Hunter 350 saves up to 15,000 rupees. Classic 350, down 16,500 rupees, and Meteor is down 19,000 rupees. Even Suzuki's Bergman Street 125 has dipped 6,444 rupees to 75,556. So premium rides over 350cc jumped to 40% of the GST, targeting the luxury segments. Now, this simplification has boosted the festive sales, eases the EV transitions, and also fuels the auto sector growth amid rising demand. Economists also predict a sales spike, which is a perfect timing for Diwali deals. Ola Electric is also ramping up operations ahead of the festive season, aiming to reduce the vehicle delivery times from 12 to 14 days to ensure quicker handovers. Now, the company is focusing on faster deliveries while maintaining sustainable growth and also profitability. Unlike some competitors offering deep festive discounts, Ola Electric is emphasizing EBITDA margin optimization and also sustainable growth, positioning itself as a profitable and also a customer-focused player in the electric mobility segment. Now, state-run oil exploration companies, that is the ONGC and Oil India Limited, they are set to begin a 3,200 crore rupees of stratigraphic drilling campaign in early 2026. Now, this campaign will focus on untapped offshore areas in an effort to identify the new hydrocarbon. Now, the first phase of drilling will target wells located in the deep sea regions of the Andaman and Bengal sedimentary basins. Although there is no immediate plan to produce oil or gas from these wells, the government will compensate ONGC and also Oil India for the full cost of this campaign. The government retains the ownership of the drilling sites and also will decide on how any potential discoveries will be monetized. Sharda's Cropkins chief is confident that the company will exceed 18% EBITDA margins in FY26. We'll break down the factors contributing to this strong outlook, including robust Q1 growth, stable pricing, and also a favorable euro-dollar rate. We'll also discuss the firm's financial health, which includes significant cash reserves and a recent doubling of dividends. India's industrial heartbeat is pushing stronger. The 8 core industries clocked a robust 6.3% year-on-year growth in August, which is up sharply from July's modest 2%. Now, this key index, covering 40% of the nation's factory output, signals a rebound amid global headwinds. Powering the surge, electricity generation rose 3.1%, which is fueled by summer demand and also grid upgrades. Now, coal production mined 11.4% more, thanks to the ramped up mining and export boosts. So steel output forged ahead 14.2%. This is driven by infrastructure projects and also the auto sector revival. So fertilizers have grown 4.6% on steady farm needs. Petroleum refineries ticked up 3%, and cement has hardened 6.1% with construction boom. The recent US hike of the H-1B visa fee to $100,000 is causing significant concerns for the Indian IT companies. Now, former Zensar CEO weighed in, saying that this move could actually squeeze the profit margins. So he also said that large firms have been proactively reducing their dependence on these visas by increasing local hirings in the US. Now, they're also looking at strategies like accelerating the offshoring and also renegotiating client contracts to offset the higher cost. Ganesh Natarajan said the move has created uncertainty. IndusInd Bank has appointed a new Chief Financial Officer, Viral Damania. Now, he's a veteran with 27 years of experience from giants like Bank of America and Citibank. Now, this change comes as Santosh Kumar, who has been serving as a special officer overseeing finance and accounts, is stepping down from that role and also returning to his position as Deputy CFO. Now, these leadership shifts are part of a broader response to the accounting problems discovered in the bank's derivatives and microfinance businesses, which have led to a series of high-level resignations and also a regulatory scrutiny. Market regulator SEBI has dismissed allegations of fund routing and also stock manipulation made by Hindenburg Research, stating that it found no evidence of wrongdoing. Reacting to the decision, Gautam Adani said that a cloud that had hung over us for more than 2 years has been lifted. Now, he credited his employees for their resilience and also called the crisis a trial by fire. Adani also urged the group to now focus on innovation, transparency and long-term growth. The SEBI orders come after months of scrutiny and also will likely ease the regulatory overhang on the conglomerate. Prime Minister Narendra Modi is on a 2-day visit to Arunachal Pradesh and Tripura. Now, in Arunachal Pradesh, he inaugurated infrastructure projects worth over 5,000 crore rupees, including hydropower initiatives and also a convention center in Tawang. Addressing a rally in Itanagar, he highlighted the government's effort to reduce taxes and also praised the recent GST reforms. Later in Tripura, Prime Minister Modi inaugurated redeveloped Tripura Sundari Temple in Gomti district, which is a significant Shakti Peeth under the Prasad scheme. Now, he also launched the development of the Mata Tripura Sundari Temple complex at Matabari. Shardiya Navratri has begun and devotees have flocked to the Mata Vaishno Devi temple in Katra, Jammu and Kashmir to offer prayers. So the temple, which draws huge crowds every year, is beautifully decorated for the festival dedicated to Goddess Durga's 9 forms. Devotees across India, including Mumbai and Lucknow, have expressed joy at being able to visit the yatra was postponed earlier. Navratri celebrations will continue until October 1. Rajya Sabha MP and Infosys co-founder Sudha Murthy fell victim to an attempted cyber scam on September 5, 2025. A caller pretending to be from the Union Ministry of Telecommunications claimed her mobile number was misused and also threatened disconnection unless personal details were shared. So the call appeared under the name Truecaller Telecom Department. Police have registered an FIR and also have begun investigations into the matter. A cargo ship carrying approximately 1,000 tons of rice and 78 tons of sugar caught fire while anchored at Portbandar's Subhash Nagar jetty in Gujarat. The vessel Hari Darshan, owned by Jamnagar-based HRM and Sons, was bound for Somalia. Now, to prevent the potential explosions, the crew was instructed to move the ship about 1 kilometer into the sea. Fortunately, all crew members were safely evacuated and also no casualties have been reported. Maharashtra Chief Minister Devendra Fadnavis on Monday announced a new initiative to introduce spot taxi services in Mumbai aimed at enhancing last-mile connectivity and also easing the traffic congestion. Now, the innovative automated driverless spot taxis will primarily serve the busy business district corridor between Kurla and Bandra railway stations. Now, this corridor is expected to witness high commuter traffic with the upcoming bullet train station and also the new Mumbai High Court building. Now, this project is expected to significantly reduce the pressure on the existing public transport systems and also improve the daily commute experience for lakhs of Mumbai residents and workers. In a significant move to empower women, the government has approved the release of 25 lakh additional LPG connections under the Pradhan Mantri Ujjwala Yojana during the financial year 2025-26. Now, this decision aims to provide clean cooking fuel to more women, promoting their health and also well-being. Prime Minister Narendra Modi extended his greetings to women beneficiaries on this occasion, stating that the step strengthens the government's resolve towards women empowerment. The PMUY scheme has already benefited millions of women across the country, and this additional allocation will further expand its reach. As chaos unfolds in the US over President Donald Trump's new $100,000 H-1B visa fee, China is opening its doors wider to the global talent with a new visa category called the K visa. Effective October 1, Beijing's K visa targets young science and technology professionals, offering more convenience than existing visa types, including multiple entries, longer validity, and also extended stay permissions. Now, the visa allows holders to engage in education, cultural exchange, and also research, entrepreneurship, and business activities without the need for a domestic employer invitation. Now, this bold move by China aims to attract top STEM talent worldwide, capitalizing on mounting difficulties faced by professionals seeking to work in the US. Russian President Vladimir Putin has announced that Russia will voluntarily adhere to the nuclear arms limits of the New START treaty for one more year after its expiration in February. Now, this move, which Putin says is aimed at fostering non-proliferation and also maintaining strategic balance, is a direct appeal to the United States to also respect the treaty's limits. Now, the New START is the last remaining major nuclear arms agreement between the two global powers, and its potential dissolution has been a source of growing international concerns. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere and stay tuned to NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
GST budget utsav begins. Sectors including auto, FMCG and banks stand to benefit from the new GST rates that kick in from today.
जनता में विश्वास होगा कि कर सरकार की इनकम बढ़ाने के लिए नहीं है, देश को चलाने के लिए है.
Home Minister Amit Shah, in an exclusive conversation with NDTV, hails the new GST structure and framework as a trust-based tax system, says it will boost production and consumption in the country.
If we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019.
Consumer Affairs Secretary Nidhi Khare warns that not passing on lower GST will be an unfair practice and class action will be planned against those that do not comply. Adani Group Chairman Gautam Adani says the group will now shift towards accelerating innovation. The company is at 1.8 lakh crore in market cap over the last 2 sessions after SEBI's clean chit in the Hindenburg case, taking the group's combined market cap to 15 lakh crore rupees. The market ends lower after US President Donald Trump announced a hike in H-1B visa fees. The Nifty managed to close above the 25,000 mark while the Sensex fell by more than 400 points. Most sectors finished in the red, with Nifty IT emerging as a top loser. Commerce Minister Piyush Goyal and External Affairs Minister S. Jaishankar will hold bilateral talks with US Secretary of State Marco Rubio to push for the first tranche of a bilateral trade agreement ahead of the October-November deadline. Hello and welcome. A very good evening, viewers. This is Profit 360 on NDTV Profit, and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. The biggest story that we're tracking today is the revised GST tax structure that takes effect as the festive season begins. Now, this is the biggest tax reform since GST was first launched in 2017. The government has slashed the old 4-slab system into just 2 main rates, 5 and 18%. Daily essentials like milk, paneer, medicines and many food items now attract little to no tax, which means lower bills for households. Vehicles, electronics and appliances will also become cheaper, offering relief to buyers and a festive boost to demand. For businesses, fewer slabs means simpler compliance, smoother billing and lower costs in production and logistics. Manufacturers, retailers and the hospitality sector are expected to gain as reduced taxes encourage more spending. And now to an NDTV Profit exclusive, viewers. Home Minister Amit Shah has called GST 2.2 Prime Minister Modi's greatest reform. While speaking to NDTV Network's editor-in-chief Rahul Kanwal, he said that the new GST structure and framework is a trust-based tax system. He added that lower rates on essentials bring relief to the poor, farmers, MSMEs, women and the youth. Listen in.
नवरात्र का पहला दिन है, यही वो दिन है जब से जीएसटी टैक्स कट्स जो आपने किए हैं वो इम्प्लीमेंट हो रहे हैं. आपको लग रहा है कि इससे भारत की अर्थव्यवस्था में उछाल आएगा, एक कंजम्पशन स्प्री आएगा जिससे जीडीपी ग्रोथ रेट थोड़ी बढ़ेगी?
देखिए, सबसे पहले मैं जीएसटी के लिए कुछ बात करना चाहता हूँ. जीएसटी बना तब से कुछ नेता इसको डिस्क्रेडिट करने में लगे, बदनाम करने में लगे, गब्बर सिंह टैक्स फला ढिका बोलते रहे. फिर देखा कि ये सफल हो रहा है तो ये तो कहा हमारा विचार था. प्रणब मुखर्जी ने विचार किया था, चिदम्बरम ने भी हमारा विचार आपने चुरा लिया, जबकि वो 10 साल ही रहे थे. मोदी जी ने 4थे साल में डाल दिया था. वो इम्प्लीमेंट नहीं कर पाए थे, मोदी जी ने कर दिया था. मगर उस वक्त क्यों इम्प्लीमेंट नहीं हुआ? राज्यों ने क्यों विरोध किया था? क्योंकि स्वाभाविक रूप से 16 प्रकार के बिक्री कर को इकट्ठा कर कर एक सेल्स टैक्स बनाते हैं, अब जीएसटी बनाते हैं, एक बिक्री कर बनाते हैं जिसमें 16 टैक्स मर्ज हो जाएंगे. ऑक्ट्रोय भी हो जाएगी, एक्साइज भी हो जाएगी, सेल्स टैक्स भी हो जाएगा, सेंट्रल सेल्स टैक्स भी हो जाएगा, मनोरंजन कर भी, 16 प्रकार के टैक्स मर्ज कर दिए. तो राज्यों की इनकम पर असर पड़ने वाला था. जब कांग्रेस से विचार लेकर आई तब राज्यों ने कहा था कि भाई हमारे रिसीट पर जो असर पड़ेगा, विपरीत असर पड़ेगा शुरुआती सालों में, इसका भुगतान केंद्र ने करना चाहिए। इन्होंने कहा कर देंगे, तो राज्यों ने कहा इसकी संवैधानिक गारंटी दीजिए, तो गारंटी नहीं दी। अब कोई संवैधानिक गारंटी नहीं देगा तो कौन भरोसा करेगा। मोदी जी ने भी आकर फिर से चर्चाएं शुरू की। अरुण जी उस वक्त वित्त मंत्री थे, सभी राज्यों के वित्त मंत्रियों की वही समस्या फिर से आई। फिर जब इस सोच में आया, उस वक्त में पार्टी का अध्यक्ष था, तब मोदी जी ने कहा कि भाई हम ही कहते थे संवैधानिक गारंटी देना चाहिए, तो हम कैसे पीछे मुड़ सकते हो। तो इस वक्त वित्त मंत्रालय, ब्यूरोक्रेसी, वित्त मंत्री सभी का बहुत बड़ा जिम्मेदारी आता है कि 5 साल तक आप, लंबे समय तक आप एक 14% इंक्रीज का गारंटी लोगे और इसका भुगतान करोगे। फिर भी उसको मान गए और हमने इस नवंबर महीने तक इसको पूरा भी किया।
And catch the full conversation with Home Minister Amit Shah only on NDTV Profit at 8 p.m. sharp. And the feedback for today's rollout has been brilliant. At least that's the word coming in from Pankaj Chaudhary, the Minister of State for Finance. Listen into what he's been hearing about the new reforms and what the next step for Atmanirbhar Bharat is.
सुबह से जो पूरे देश से हम लोग के पास खबर आ रही है कि आम जनता काफ़ी इससे प्रसन्न है, खुश है। चाहे वो किसी भी क्षेत्र का हो, चाहे वो रोज़मर्रा के सामान खरीदने वाला हो, चाहे किसानों का भी फीडबैक आया है, विद्यार्थियों का भी फीडबैक आया है। कहना तो सभी लोग इस रिफॉर्म से बहुत प्रसन्न हैं।
सर, प्रधानमंत्री ने कल कहा कि स्वदेशी अपनाएं, इसको लेकर अब आगे चलकर क्या स्टेप्स अपनाएंगे और आपका क्या संदेश रहेगा कंज्यूमर्स को लेकर?
देखिए, स्वदेशी का अपनाने का बात प्रधानमंत्री जी ने कल ही नहीं किया, इससे पहले भी वो कहते रहे, मेक इन इंडिया की बात वो करते रहे हैं। और उन्होंने अपील किया है कि हमारे देश की आम जनता देश की तरक्की के लिए, देश की अर्थव्यवस्था के लिए स्वदेशी पे ज़्यादा फोकस करें, विदेशी चीज़ों से बचें।
And bringing your attention to another exclusive chat, Consumer Affairs Secretary Nidhi Khare told NDTV Profit that failure to pass on GST benefits to consumers will be treated as an unfair practice, viewers. She added that class action will be taken against violators. Let's listen in to her entire commentary.
If for some reason, if we feel that the reduced GST has not been passed over to the consumer, it will be treated as unfair trade practice under the Consumer Protection Act 2019. And the Central Consumer Protection Authority can take class action also if we find that a particular, say, company is actually making, these things too much, then we will also go for the class action. Otherwise, it will be escalated to the convergence partners, which we have about 1,100 and odd. And it would be expected that companies immediately redress any such wrongdoing if they witness through their retailers. So this is uniform for everybody, including the e-commerce entities, and e-commerce entities also know this fully well. For them it is in fact very, very easy because they do not have to go for the restricting. They can digitally announce and show what is the new MRP. So it should not take them very long, and I'm sure they would be adhering to the instructions of the government on this.
And the GST reforms promises to be beneficial for consumers, especially with the festive season upon us. In Kolkata, with Durga Puja festivities kicking off this weekend, confectionaries are expecting high footfall. Sweet shops like Balram Malik and Radha Raman Malik are now selling their products with a revised price tag. My colleague Ritik spoke to the owner about how the GST cut will be cost-effective for buyers during Durga Puja. Let's listen into that chat.
We are currently at a very famous sweet and confectionery shops of Kolkata that is known as Balaram Mullik, and they put a lot of efforts last night to reduce the prices of the products. As we know, currently Durga Puja and Navratri are on here in Kolkata, and which is the biggest festival in Bengal. We can see that the total entire shops has been decked up with sweets like Mishti Doi or Shandesh, but this time we do see people's beneficiary rates for namkeens. After this, GST 2.0, this reform has brought a lot of change to these prices. We have the owner of this confectionery, Shudip Mullik. We do understand that this busy hours of Durga Puja or Navratri, it was a tough task for you to come up with new price tags.
It is difficult to implement this at this point of juncture, and the whole night our whole team was working on it to make new stickering and to change the software so that the new prices shows. But after all, it is benefit. We are transferring the benefit to the customer. Customer is getting benefited. GST was always going to the government. The government has reduced the GST, so we should not profit by through it. Otherwise, the GST amount would have stayed with us, but we have reduced the price instantly. When the shop was opened, it was opened with a new GST price slabs, and now you can see that how we have done the stickering, and the reduced MRP has been written over here, and it has the previous GST and the previous MRP written, and also the reduced price written.
Looking to buy your next SUV? Well, it might just be a lot cheaper. The festive season means increased buying, and the GST reforms promise to benefit consumers beyond consumables too. The auto industry has seen significant cuts, with cars getting significantly cheaper. Has seen huge benefits for consumers with cars getting cheaper, as I said, and my colleague Sam Daniel now joins us with ground report on how the auto industry is viewing government's GST 2.0 move.
The price of cars have become cheaper with cut in GST from the earlier 28% to 18%. The industry is optimistic that this could encourage first-time car buyers to go for it this festive season. The GST on electric vehicles too has been brought down to 5%, triggering excitement that this could actually spur purchase of EV cars. With me, Niranjan, a health and fitness coach. Thank you very much for your time. What would this mean for first-time car buyers?
So this is definitely a very encouraging move for the first-time car buyers. I think car rates have come down, and it has put the cars in an accessible range for the first-time buyers.
You think this should have been done long time ago? The opposition says the Indian consumers have paid 50,000 crore as GST so far.
I mean, you would always be happy if the cars were cheaper even 5 years down the line, or 5 years earlier. But better late than never. I would say this is a welcoming move. If it had been done earlier, yes, well and good, but still better late than never.
Is this eyeing elections?
Oh, I would say elections are still quite a time away, but looking at the roadmap, yes, I think elections are 4 years down the line, and especially with the BJP not getting a very strong mandate this time. Yes, they are at power in the center, but it was not a very strong mandate compared to the previous 2 terms. Right. So I think all these moves are more people-centric.
Right. Thank you very much. And car dealers say ever since the GST reforms were announced, they've been experiencing a slump in bookings, and now they hope there could be a revival of demand for cars. Thank you very much, Mr. Sankara Pandian, the team manager here. Yes. How are the bookings now, and how was it over the last 2 weeks?
Sir, customers are eagerly waited because of the GST. Now, yesterday night they confirmed everything. So, from today onwards, the booking expected as more than the actual. We expected the best result from every dealerships.
What kind of price cut for your models, be it Sonnet, be it for Seltos?
Sir, in a category wise, government has decided 2 categories of GST. It is 18% and 40% for cars especially. But 18%, it is a highest margin to every end user or the customers. For example, if it is in a 10 lakh worth of car, they can save up to 1.3 lakh rupees straight away from GST. Plus added benefits available for festival seasons. So customers are really happy with that. We expected more number of booking coming days.
So it's going to be bumper festive season for you now, and for electric vehicles?
Exactly, sir. But electric, they maintaining the same for 5%. So there is no ups and down. But electric is a future.
Thank you very much for your time. And dealers expect a bumper booking this festive season, and customers can't really wait to avail this GST tax cut, which have just made cars affordable.
And shifting focus to how the markets fared today, benchmark indices closed on a weak note, marking the second consecutive day of loss, with the Nifty settling around 25,200, while the Sensex declined by 466 points to close at 82,160 odd levels. The Nifty IT sector was the biggest loser in trade, pressured by the hike in H-1B visa fees announced by President Trump, and therefore most constituents in that basket ended lower as well. Most other sectors also finished in the red, as you can see on your screen. But staying with the market, Adani Group companies have added 1.8 lakh crore in market cap after SEBI gave the conglomerate a clean chit in the Hindenburg saga. Now, this addition took place in the last two sessions. The rally was led by Adani Power, Adani Total Gas, Adani Green Energy and Adani Energy Solutions. Chairman Gautam Adani spoke for the first time after SEBI cleared the company of all the charges. He said that a 2-year-long cloud has finally been lifted. The chairman expressed deep gratitude to his supporters, calling the outcome a testament to their unwavering faith. Let's listen into his comment.
Today, a cloud that had hung over us for more than 2 years has been lifted. SEBI comprehensive investigations has concluded by rejecting all allegations contained in the Hindenburg report from January 2023. It was your unwavering faith, your strength, and your belief in the company that sustained us throughout this period. This outcome belongs not only to the Adani Group, but also individually to each of you who stood by us, and for that support, I am deeply thankful.
And now we have a trading update. The National Stock Exchange will hold a special 1-hour Muhurat trading session for Diwali on October 21st from 1:45 p.m. to 2:45 p.m. Now, this annual tradition marks the start of the new Samvat year, and both seasoned and first-time investors look forward to it as an auspicious time to make new investments. Muhurat trading not only celebrates prosperity and tradition, but also brings a moment of optimism to the Lal Street, even in volatile market conditions. And viewers, Angel One made its debut in the life insurance space through a joint venture with Singapore-based Livewell Holding Company. The JV is worth 400 crore rupees, with Angel One investing 104 crore rupees for 26% stake, while Livewell will put about 296 crore rupees into this arrangement. Joining us now is Amit Majumdar, Group Chief Strategy Officer at Angel One. Amit, thank you for being with us. To begin with, could you share how many of your customers currently hold life insurance policies?
So we are, this is a greenfield project. We are yet to go live with our product on the platform as a manufacturer. We of course are already a distributor on the life insurance, but more as an open architecture. And we are doing not so much, but a reasonable number in terms of customer penetration and premium sold. But we are not a manufacturer yet. We are just a distributor.
Okay, and therefore, does this give you an opportunity to enter manufacturing?
Yes, so actually, this is what we are referring to is an investment into a greenfield project where we are a 26% shareholder in a joint venture, where 74% is being held by a Singapore-based life insurance company called LiveWell. And this joint venture then will enable us to co-create production products for the digitally enabled consumer on our platform.
Very well then. What's the plan for using the proceeds of 400 crore rupees? How are you planning to utilize this capital?
So it's not 400 crore. We are investing 100 crore, which is 26% of the overall investment, which is largely 396 crore, so roughly 400 crore. We are investing only 26% of that as a joint venture domestic partner. And the primary investment will go into setting up the insurance joint venture. Also for its initial capital requirements, there are solvency requirements for setting up this venture. We believe that this capital of the overall 400 crores, of which we are 26% stakeholder, will be adequate for the growth trajectory that we have earmarked for this particular business. So this capital is meant to set up this business from scratch.
Right. So on that note, while you've already mentioned the stake, is there any other investment expected in the JV in the near term from your end?
Depending upon how the business pans out, we are starting off with a 26% stake ourselves. The foreign joint venture partner is happy to put more money if the business scales up. This being a digitally enabled product, end-to-end, being laid out on a platform like ours, which is again pure digital, will depend upon how this product pans out. But our strong belief is that this is a space that needs significant disruption. We have already been disrupting our credit and wealth journeys on our platform. So we believe if this disruption takes through, then there could be a good case for further growth, which will mean additional capital going forward.
So the point of significant disruption easily takes me to the next question. What will you do differently and why did you choose LiveWell?
So as you know, insurance as a sector has been highly underpenetrative and in terms of coverage has been very, very low. And this has largely been a result of largely offline journeys, poor claim settlement experiences, completely offline underwriting process, very complex, expensive products which a retail customer is unable to understand. And as you know that today, a large part of the insurance distribution happens through physical network, and therefore it is very cost prohibitive, which essentially means that the product is not relevant for the customer. So the way that product is manufactured or structured, it is not necessarily customers' interest held at first. And that being the reason, we felt that time has come now with a significant amount of tailwind now taking shape, with a large part of the digital Indian consumer now beginning to understand protection as a very important product, unlike in the past when they used to take that also as an investment product. So now this customer segment of 25 to 35, which we actually service on our platform, have begun to understand the difference of protection, that being a significant tailwind. Regulatory enablement is taking shape. As you know, IRDA's regulatory bill is in the parliament waiting for approval. And there are some very significant recommendations in that bill, some being, of course, a comprehensive license, but more importantly, an openness to try out new and innovative products. And also within the bill, there is a provision to bundle this with investment products. We believe that with us already disrupting credit and wealth on our platform, time has now come for also to carry out disruption on the protection side of the business. And with this, it will complete the three pillars that we have always been wanting to have on our platform, that completes the entire life cycle of investments on Angel platform. So we're already great at wealth, we are doing wonderfully at credit, and now protection. This completes the ecosystem.
Okay. All right, Mr. Majumdar, for some future perspective, how large do you see this business to be in the next 3 years? What's the scale like?
So this is a long gestation business, as you all know. Insurance has always been very long. However, what we have been seeing is that whenever there has been a disruption digitally, businesses have scaled much faster. There is a challenge with how legacy businesses will be able to scale because they find it difficult to get to a digital way to grow businesses. We are already a digital company, and therefore for us, scaling is not a challenge. And whenever we have tried solving the access need and the affordability of a product, transparency, and when we have brought trust at scale, we have seen businesses scale up substantially. So it'll all depend upon how this scales up. In the first 3 years, we have a very modest expectation because it'll take about that much time for it to set up, for us to co-create products, understand the challenges of at the end customer level, and how we are able to make it efficient in terms of integrating it or rather embedding it with our current wealth and credit journeys. So first 3 years will be too early a time for us to make an assessment, but our sense is that over the next 5 to 7 years, this will become a substantial business for us.
Well, on that note, thank you so much for speaking to us, Mr. Majumdar, and giving us insights into this JV. All the best for this partnership. And viewers, that's a wrap on this edition of Profit 360. But do stay tuned to the channel as we have a lot more lined up for you right on this other side of a very short break.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
के लोगों को 2.5 लाख करोड़ रुपए से ज्यादा की बचत होगी। और तभी तो मैं कह रहा हूं ये बचत उत्सव है। हम वो सामान खरीदें जो मेड इन इंडिया। हर दुकान को स्वदेशी से सजाना है। जब ये होगा तो भारत तेजी से विकसित होगा।
Hi, thanks so much for joining in. You're watching NDTV Profit. At the onset, let me wish all of you a very happy festive season, a happy Navratra to everybody tuning in. And as you can see behind me, I'm at an electronics store. Today is D-Day. It is the day that GST 2.0 rolls out. And I've been thinking for a while, I need a new phone, I need a couple of new gadgets. And I usually am the tech guy. I go and spend on tech that I don't really need. But incidentally, my co-anchor Mahima has been browsing a couple of sections here because I think she wants to figure out what to buy. I've never seen her so excited about tech before, and the reason is that it's all gotten cheaper. Quite a few of these things have gotten cheaper. Let me go across to her and find out what she's looking at. Mahima, what have you been looking at?
Right, so a couple of things, Alex, that I'm looking at right now. Of course, the first three things where we've seen GST cuts coming in from that 28% mark to 12% mark. The first one being TV, more than that 32-inch. Something like this, yes. And then you have your ACs and dishwashers. So people who are worried about washing dishes at home and who have no maids will be happy with the GST cut that we've seen. So these three things, of course. And of course, we've not seen any GST cut on phones. But yes, I think iPhone 17 is something that people are looking at right now for sure.
So that's one. So on the one hand, you have the GST cuts. On the other hand, you have festive offers that kick in.
Exactly.
So it's a great time to be going out and figuring out what you want, get your lists in order. But it's not just consumer electronics. And we'll be speaking with the director of Vijay Sales very shortly. Mr. Nilesh Gupta is going to be joining us. But we've also got conversations lined up for you to talk about the automotive space and also the snack space, because all of that is getting cheaper. Let's run through the list very quickly. What gets cheaper today?
So a lot of things, like from a toothbrush in your bathroom to a butter in your fridge, everything gets cheaper because that includes a lot of milk, dairy items. That includes your paneer, chocolates, ice creams, butter, cheese, etc. So that's from the staple pack. You're also seeing snacks getting cheaper in terms of where they were at 12% earlier will now be charged at 5% mark. Apart from that, you have your clothing, apparel below that 2,500 mark will go down in terms of where GST rate stands to that 5% mark again. In terms of where your hotel industry stands in terms of the consumption space, well, where your ticket size is below that 7,500 mark, that gets cheaper too. So a lot of items for sure, Alex, getting cheaper from today, and this marks the onset of festive season as well. Navratri kicking in, making things cheaper. And that'll, in general, boost demand.
Yeah.
That's what we've been hearing from analysts and management as well.
And also people on the ground. We've got from the automotive space, Mr. Sandeep Kumar Bafna, who's the chairman and managing director of Fort Point Automotive Cars. Sir, thanks so much for taking the time. Mr. Bafna, can you give me a sense of the offers that are currently underway? And of course, today is the day when all of those prices tick down. What is the kind of initial response that you are seeing? Do you see feet on the ground? And what is your anticipation for sales this festive season?
So let me start with two-wheelers. We are dealers for Hero. Suddenly, there has been a spike in inquiries. And in fact, today we are expecting a lot of payments to pour in for the Hero bikes. In fact, we've launched also 2-3 new products. And which were in waiting for such a long time, and that now would change the whole concept of things which are going to happen. On the car front, we are dealers for Maruti. In Maruti Suzuki, as you are aware, that there is a reduction in GST, plus the company has also reduced prices, which came to us as a big surprise. We thought that just the GST benefit would go to the customer, but the company has also reduced their prices on the product. Along with that, even though it is up to December only, but I feel that along with that, they will give a lot of other discounts and benefits which are also coming in. Financing is becoming cheap today. Mahindra Finance has announced that there won't be any processing charges from today onwards up till the end of the season. So I feel that this whole thing is
a combination of the prices going down on account of GST, as well as the discounts that are kicking in from the festive side, a lowering of the processing fees. All of that is exciting, to say the very least. I'll come back to you in just a bit. We're joined in store right now by Mr. Nilesh Gupta, as I've pointed out. Nilesh, thanks so much for taking the time. It's an exciting time because I think normally on a Monday at 12 o'clock, it's not as busy as it is today. It's deserted, and today is a different story. Yes. Can you take us through where you think the biggest excitement is going to be after the GST cuts and coupled with the festive fervor that you would expect?
So I think this time is going to be a double whammy. One is the GST cut and second the festival also. Plus, last 15 days have been very poor because people who are waiting for today onwards to buy. So I think the basic action is going to be in large screen televisions because they, in rupee term, is the nice.
What is it like?
In large screen televisions, it is nearly 50 to 18,000 rupees, which has come down. 65, 75 inches and above. In rupee term, is really very. Air conditioners, it could be there, but air conditioners, we'll have to wait for the weather to be on the favorable side. Be on the favorable side. Yes. But even dishwasher, that's a category which we saw in the rise after COVID. I think that's something which will become a staple food, like how everybody has washing machine in the house, a dishwasher will also come in.
Those are where your flat screen TVs are, the big ones, right? So let's walk across to that segment as well while we're talking about it. And Mr. Gupta, really the question that I have is that alongside all of this, there is a call by the Prime Minister to make local and to buy Indian. Yes. There are more technological products, more consumer electronics that are being made in India, but there are still a lot of manufacturers that make outside and sell here. So in the catalog that you have, do you have more products than you had 2 years back that are made in India?
So now if you see in the last 3-4 years, the government ensured that all these products, 90% of them are made in India. Okay. Because they made it impossible to import because the duties were high. So everybody has set up the pack. You see in our industry, a lot of factories have been set up. So all the televisions which you see here, except for the last screens, pretty very last screens, 100 inches and above, which has minuscule say. It's all make in India. And even the 100 inches in few factories a few brands are assembling here. So everybody is having make in India. Even if you see Apple phones, most of the phones are now make in India. In fact, we are exporting it also. So accordingly, I think everything what you see here is, if not 90%, at least 75-80% is make it.
Absolutely. We'll come back to you, Mr. Gupta. We're also joined by Rishabh Jain, who's the CFO of Bikaji Foods, joining us now. Mr. Jain, hi. Good afternoon to you, and thank you so much for joining. Just want to understand the demand that we're seeing in the snacking space. We talked about how auto space is picking up, how consumer durable space is picking up, but snacking is one industry that, when I was speaking to one of the FMCG analysts, he said that snacking is going to be that one industry that's going to see a lot of demand boost because of GST 2.0. Your view with regards to the demand that's coming in already?
So we are also expecting the same. So it's a peak Diwali season, and we see a lot of gifting and all going this season. And there is good cut from 12 and 18% to 5%. It's more of simplification and ease of doing business. So we see that it will be good Diwali this year for all the snacks players.
Let me ask you this though, when you're talking about the price points where there is going to be an impact for GST in the snacking space, the expectation is that these are all small ticket items. So as manufacturers, would you say that it's easier to control it with the grammage, and on the packet you're not likely to see too big of a change, and so therefore the question is, how does that bolster demand?
So basically we have two type of overall packs. So family pack and impulse pack. So family pack is all about 20 rupees, which is 200 grams, 400 grams, which are MRP driven brand. So we have reduced MRP from today, and for impulse pack we increase grammage. That's what we're doing, and we are committed to pass on completely to the consumers. That's what we are targeting.
Okay, Mr. Gupta, coming back to you, last time when we spoke, we were talking about how, you are confident that this time you'll do a 20% growth apart from what you did last year. Considering now that, pre-bookings would have probably come in, do you think that 20% can be higher?
No. 20% will not. See, 20% was also a very large goal.
Yes.
So I think even if you achieve that,